he's found that he's been getting stopped out a little bit more often than he would like. And he said he's learned from other traders this idea of using, different momentum type indicators to decide when the pullback is sort of ending. The idea is that you're going to miss out on a lot of entries because you're only going to take the best ones where the momentum is kind of dying in the pullback and then get into the trade. And he said this will, in theory, increase my win rate, and you're only taking high probability trades. What do you think about that? So that's his question. So I would say that, from my point of view, basically what he's doing is he's refining his beliefs, right? So he's come to the conclusion that it makes sense to trade the trend. If you're going to trade the trend, you might as well get in on a discount. And if you're going to trade the discounts, you might as well make sure that the discount is sort of turning into, it's kind of losing steam. And so I'm going to do that. And I say, yeah. But it sounds like in the back of his head, he's thinking, it looks like if I do this, I'm not going to have a lot of trades. Right. And so he wants the blessing, like, okay, my son, you can trade fewer trades. Right. I mean, it kind of sounds like that, And look, I don't want to tell anyone what to believe about the markets, but I could definitely understand why someone would want to trade this way. I like to trade this way as well. And I would say that, sure, go for it. Like, there's nothing really wrong with that idea. The idea that you're going to miss out on some trades, if win rate is really important to you and you find that being picky allows you to have a higher win rate, then my thing is, go for it. Why wouldn't you do that? Right. So that makes perfect sense to me. You probably in the end will end up trading several markets. So you'll probably want to make sure you back test all of those markets that you're going to trade. But other than that, it's perfectly viable. And there's a long list of very profitable traders who trade in essentially the same way as has been described here. So there's really nothing I would say that's wrong with that. It's just a little bit of doubt in this trader's mind, I guess. So what's your take on this, Hugh?
Yeah, no, totally. I think it's mostly about permission. And then, like you said, testing, just test all the things. And a third thing I would add is maybe perfection, going for a little bit too perfect of an entry or whatever. Yeah, just play around with different ideas and then see if they work out, in a way that is acceptable to you, either from the win rate or from a return standpoint. So, I think you had it spot on for sure.
Yeah, that's a good point about the perfection, because depending on how you trade, essentially going to come down to, there's one of two kind of camps that a lot of traders fall into. It's the camp of fear of pulling the trigger, which is kind of what this trader is in, right? Like, I want everything to be perfect sort of thing. Or there's the over trader, the trader who like revenge
super
trades.
Aggressive. Yeah.
And, has, So it's basically like the hyper aggressive scalper or person who just wants to take a bunch of trades and make sure that I'm up on the day sort of thing versus over trading. And versus this trader who kind of wants everything to be perfect, like you say. So, I mean, in a lot of cases, depending on your personality and the way that your system operates, you're going to end up with that issue. I mean, that's pretty common for most traders to either have a fear of taking a trade or taking way too many trades, like one or the other, right? Yeah. And the fear of taking a trade is usually when you really want the win rate to be higher. And that could just be that you're trading a low win rate strategy, like a 25% win rate strategy or something like that. It could be as simple as that, or it could just be that you're like you say, like a perfectionist. You just want to be right a lot. And the other one where you overtrade is just, it's almost like a gambling mentality, right? Where you just that's how martingale comes about, right? So martingale strategies come from that, from the sort of the over trading thing. Like, I don't want to ever end up a loser. I'll get all my money back on this next trade sort of thing, right? So it is interesting though that you can kind of, in a gross sense, you can kind of split the trading world into one of those two camps. Like, you can pretty much guarantee you're going to be dealing with one of those two issues, Yeah,
totally. And I think it comes down to also like more introverts and extroverts, maybe. Like, that's kind of where that lies. Maybe, people who are worried or afraid of making a mistake are going to undertrade, and the people who are really gung-ho and are all about getting things done are going to overtrade, right?
Yeah, so one way to characterize that would be like sensation seeking. So people who are sensation seeking, they're like scalpers. They take a lot of trades. They put on a lot of risk. They're like bam, bam, in and out of the market. Whereas people who are a little bit, like you say, maybe more introverted, or kind of like, one way to look at introverts is to say that they're overstimulated just in normal life. Whereas extroverts are understimulated in normal life and need and seek stimulation. So they do like, what is it called when they jump out of the, like off the cliff on the, is it called a squirrel suit? Yeah. Like, yeah, squirrel suits and base jumping.
Squirrel suits, yeah.
Like those, yeah. Those are like the sensation seeking sort of extrovert type people. And so, yeah, so it's interesting. I went to a wedding once where it was all of these like base jumpers and like crazy, like Hawaii big wave riders and stuff. Like it was wild, man. You know what I mean? Like weren't all, it's interesting. Not all of them were like super extrovert, but most of them were in kind of in that way, you know, like you could tell, like you could see why they were drawn to like base jumping and stuff. Yeah, it was really interesting. Like seeing that, like a bunch of those people in the same room. Yeah.
Yeah. It's funny. I talked to a guy who was a big wave surfer in Hawaii, and they called him the crazy Hungarian because never surfed before in his life. And he goes to the North Shore and he surfs like, 40-foot waves or whatever. And I was like, oh yeah, I'm thinking about buying a motorcycle. He was like, a motorcycle? That's so dangerous. Why would you ride a motorcycle? What? So there's a lot of nuance with that, I guess, right?
Yeah, it's so funny. Like, I was talking to one of my my son's friends, his friend's mother, and we're like, well, we're going down to the skate park, and she's like, and we go, does your son have a skateboard, and would he go down to the skate park or whatever with us one time? She's like, skateboard? I'll never let him have a skateboard. I'm much too sensitive for that, like sort of thing. Meanwhile, like, her son's like climbing up these big towers and jumping off into the water at low tide and stuff like that. Like, you know what I mean? Like doing all these crazy things where you're like, really? Okay. It's just like perception. Like, people say that riding a bike is dangerous, a bicycle, right? On the roads. And yet, you look at the stats for people in the cars on the roads, you got a pretty good chance that throughout your life, like you're going to get in a real nasty accident at least once, right? That's pretty much baked into the cake. Like that is going to happen because of just the odds. Whereas people are terrified to go out in the water because of sharks, and they're like, you probably be struck by lightning twice before you be bitten by a shark. So, it's just, it's crazy.
Yeah. Okay, cool. Thanks, Walter.
See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
And then they go, okay, open up the box and there's colored pencils in there. And they say, what's in there? Oh, it's a bunch of pencils. Well, what did you think was in the box before you opened it? Pencils. And so this is confirmation bias, right? Confirmation bias is a big deal in backtesting because you can go past a trade signal and then go back. Oh, I would have taken that, right? No, you can't take it. And then, but more importantly, the best thing you can do, like in your live trading, is to have a journal, and more data the better. So what you want to do, this is my solution for this, is you have a journal and you write down in the journal when you take the trade, what is the likelihood of this trade working out? Because you want to know, we want a snapshot of that time when you took the trade of what was the likelihood that, what did you think? Because later on, when the trade's over, you're not going to have, you no longer have that ability to be honest with yourself. It's gone, right? It only exists at the moment you take the trade. So you write down when you take the trade in the journal, I think this is a 5 out of 5, or I think this is a 2 out of 5, but it fits my rules, so I'm going to take it. So that's what you do. And then you can go back and you can see, are my 5 out of 5 trades, right, where I rate my entry 5 out of 5, are they, do they make the most money or not? Or what's the deal? How good am I at figuring this out? Because, after the exit's all done and dusted and the trade is out and you're flat, you can't really go back. There's no ability to see whether or not you thought the right thing. The only time that whether or not what you were thinking about the trade is in the beginning, and that's when you should capture it. So that's what I would say about confirmation bias, is that you can counteract that with a journal. I mean, you can also take videos of your trades where you talk about why you're taking the trade, what you think about on that. But I just think it's nice to have a number rating, even if it's a 1 to 10 scale or 1 to 5 scale, something like that, so that you can go back. And because the problem is when we first start trading, we think that we know what a perfect trade is, and we want to put more risk on those and all that. Well, do you really? That's the answer. That's an answerable question. Do you really know that, or is that just confirmation bias kicking in? Like all the systems that I tested before, or most of the systems I tested before I had Forex Tester, I had confirmation bias, because all I was doing is scrolling back on the charts going, oh, look, this works really well. Like, and I was just highlighting the perfect trades and skipping over the losers, right? It wasn't until you actually scroll back in the charts and one by one move the candles and start taking, I used to write them down in a notepad, like take the trades that way before I had Forex Tester, and I would go, why isn't this working? It was confirmation bias, basically. Yeah.
No, totally. I think if you zoom out a little bit from trading, I think it's a really important skill to be able to hold like conflicting ideas in your mind at the same time, right? And that really helps with confirmation bias and not thinking that you know it all. And maybe there may be a case where part of this idea is correct, but mostly, the other idea is mostly correct, but part of this other idea is correct, and you could benefit from that. So I think that's a really important thing to consider also, not to get too entrenched in a certain idea or dogma or ideology.
Yeah, you know what? You remind me of something. I just want to point this out to people. If you're listening to this, you're probably a podcast fanatic. And what you just said, they talked about in one of my podcasts I listened to. It's called Dark Horse Podcast. They have it on Odyssey, like the actual video and stuff, but you can find it on, wherever they have podcasts. It's called Dark Horse Podcast. What they talk about in there, so it's two evolutionary biologists, and they're married, right? And they talk about lots of things in life. But what they were talking about the other day was exactly what you said, Hugh. And I was just listening to it yesterday, so it reminded me of what you said. What he was saying was, Brett is his name, Brett Weinstein. He was saying that one thing that he likes to do is he likes to go, what would have to be true for my belief to be false? Right? So that's how he approaches things. It's kind of like an anti-evidence sort of thing. So like, let's say, for example, let's say that you're using volume for your trading, to make this more concrete, right? So let's say using volume as an indicator, right, in your trading system. And so you see there's heavy volume, right? And the market is printing a reversal, right? Like a kangaroo tail or some sort of reversal candle. So you go, okay, there's heavy volume and the market was unable to penetrate the support level or whatever. So I'm going to go long here. Well, what would have to be true for my belief to be wrong? Well, my belief was that heavy volume on a reversal candle equals, strong belief in that candle. Okay. Well, what if, for example, we were just moving into a period of heavy volume, and that like the heavy volume that we had on yesterday's kangaroo tail daily candle is now going to be exceeded by today's heavy volume, right? So that would be, you know what I mean? Like then it would send it even lower, for example, right? Yeah. So, that could be I could look at that and say, okay, what does the volume look like so far today? Does it look like we might eclipse yesterday's volume? If it's really heavy volume today, then maybe that's not going to work or whatever. The idea here is that you're searching for evidence that would discount your base belief. He explains it really well on the podcast, and we can put in the show notes the episode of it. I think it's episode 111. So if you like podcasts and you like biology or whatever, Dark Horse Podcast they're really interesting. And it was episode 111 where he talks about that kind of in the middle there. But I just thought it was a really good thing for us traders to remember because of confirmation bias, right? Because we're it's such a big deal in our world, is having the wrong ideas and just seeing everything that you just only seek out evidence that fits your ideas and your hypotheses, and then you're stuck. You never get out of that. And so thinking what would have to be true for my base hypothesis to be false is a good way to seek out counter evidence. And that's, when I take a trade, I always think, what is the other party? So what is the person that's doing the opposite? If I'm buying right here, the people who are selling, what are they thinking? Like, why would they sell here? And I'm trying to do that too. I think you should know that. I think every time you take a trade, you should say, well, the guys on the other side of this trade, what they're doing is this, and their thinking is this, right? And maybe they're looking at a higher time frame, for example, and you're looking at a lower time frame, or whatever, or they're the kind of trader that's looking at stochastics, and you think in instance, the stochastics wouldn't necessarily apply. It would be a case where stochastics would break down. For example, in a strong trending market, that's when stochastics break down, right? When the market's trending, you're going to see oversold, overbought all the way, but it's never really. But if it's going one direction, it don't matter, right?
Yeah,
it really don't matter what that stochastic says. Yeah, so
yeah, and I think in trading also, like I guess in a lot of education arenas, but like in trading especially, there's a strong like guru bias, right? Like follow the guru, and he's the one who knows everything, and there's not a whole lot of, sometimes there's not a lot of thinking for yourself and saying, oh yeah, I trusting yourself to know that I can figure this out, and maybe that guy could be wrong. So I think that's something to consider also.
Absolutely, you're right. And that's what people ask me. They say, have you ever heard of so-and-so? And usually my, some trading guy or whatever. And I'm like, no. And then they say, well, so-and-so says X. What do you think about that? And I'm like, it doesn't matter what I think. Like, honestly, it matters what you think. If you think that's a good idea, then you should test that idea. I'm not here to be the arbiter of truth. I'm not the whatever it's called, Saint Michael at the gates of heaven, allowing people in and out. I'm not doing that. Like, you know what I mean?
Yeah.
I am just here to tell you, you need to find out what you believe and then base everything on that. And so, like, it happens all the time. It happened last week. People will come up to me and say, hey, have you heard of this trader? He trades this way. And I'm like, no, never heard of him. And like, he trades this way. I go, okay, yeah, it makes sense. And they say, okay, well, should I do it? Well, I don't know. What do you think about it? It's all about you. People, like, you're right. And I think part of that, like, it's weird. Certain things, like certain industries are like that, where it's kind of like art, and they say, well, so-and-so is like he's a impressionist, or, like they kind of categorize you in that way. And I think some of it is because you don't really learn trade. Like, you can't go to university and learn trading, right?
Yeah.
You don't really, like, there's no real like trading degree or whatever. You have to kind of learn under someone or under the guidance of someone, or maybe you try on your own by reading books or whatever, or websites. It's interesting. I mean, a lot of things, I guess, are like that, and in Australia, if you're going to be a plumber, you pretty much have to work under a plumber. Like, you wouldn't just go out and get a plumbing certificate or whatever and then just start. Like, it's pretty much everyone kind of has to learn under someone, there's a lot of good things about that, I suppose. But yeah, I think you're right. I think there's a culture in trading of like, so-and-so is in the, the swing trader camp, or he's in the, the price action camp, or the, and they put these people in different areas of, based on, basically what other people say about them. It's weird. I agree.
Yeah. I think a lot of it's also baked into the cake, right? Like with the education system, it's always about the teacher knows best. So always follow the teacher. Don't think about anything else. And
yeah. I mean, like, we used to have, like, in the US, they used to teach economics and home economics. They don't do that anymore. You only get that if you go to college and you say, I want to be an economist, right? Like, and then they teach you some weird stuff that's not even, I would argue not even really applicable. So, like, it's weird. It's like, in a lot of ways, you'd almost be better off learning principles, like you say, like learning principles of how to determine how to make a decision, rather than learning the book knowledge that you come out with. Yeah, I mean, there's a lot to be said there, but yeah, I think you're right. I think you're absolutely on the right on like, if you get to the point as a trader where you start thinking, you know what, I don't know if I believe any of this. Like, if you get to that point, that's a pretty good spot to be, because what that means is you're going to tear it down and rebuild it based on what your driving principles are, what your core beliefs about the market. If you believe the only way to make money in the market is to follow the trend, then you're going to build something based on that. And that's good. That's good. That's a good thing that you do that, and that you follow that. So I'm all for it. Yeah.
I think that's one of the biggest benefits of trading, right? You get to know yourself, you get to trust yourself, and there's a way to keep score. So I think that's great.
That's exactly right. Yeah. Well said. Yeah.
Okay, cool. Thanks, Walter.
See ya.
Yeah. All information in this podcast is for educational and informational purposes only, and is not trading or investment advice. Each of us has a built-in personality.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk a little bit about something that I've been kind of researching for the past couple of years, basically trauma. My hypothesis or my research has shown that trauma is basically the cause of most things that we don't like, I guess. Basically diseases, addictions, bad behavior, so-called bad behavior. And somebody likened it to like having a ship with multiple anchors on it. And each of those anchors is like a trauma from wherever, your childhood, whatever it is. If you have all those traumas on your ship, then it's hard for you to move forward. So I was wondering what you thought about that, what your experience is, and how we could get rid of those things.
Yeah, so I think you're right. I would agree in a sense, but I think that there's another component. So like when you're thinking about trauma, so for example, in the child abuse literature, we know that there are some kids who are sexually abused who don't, like, things are pretty normal. In fact, in a lot of cases, like, they do really well in school and stuff, right? Mm-hmm. And then things like neglect, which doesn't really have, I guess, the same stigma that like sexual abuse has. I mean, they're both awful, right? Mm-hmm. In the case of neglect, that's usually one of the worst forms of abuse that a child can go through, right? Yeah. So, but here's the thing. Like soldiers, for example, when they go off to war and they come back, a lot of times, they go through PTSD. If they were in a really bad, in a combat situation, the things that they see, all of those things can really impact them when they come back and try to reintegrate into society. Mm-hmm. But here's the thing, they normally do reintegrate into society. It's usually just a process, right, that they go through. It may take a couple of months, 6 months, 2 months, 2 years. But at the end of that, they're actually pretty well functioning in society. So I think what it comes down to, and there's a lot of research on this because it's kind of like a trendy area of psychology at the moment, is resilience. Mm-hmm. And so some people have a very low resilience. Mm-hmm. So when they are presented with trauma or a challenge, they have a difficult time trying to see a way around it. And it becomes overwhelming. Other people, on the other hand, they're almost built for challenges and they're able to overcome them like very quickly. Mm-hmm. And it's fascinating as a parent. I have a kid of each. One of my kids is incredibly resilient, and the other one has a hard time and needs to learn the tools. Mm-hmm. And then, of course, there's a lot of people in the middle, right? So I would say that what you're saying is true, but it's probably mediated by the resilience skills of the individual. In other words, you would say that, yeah, traumas are a big deal. Traumas can impact you for life. But normally, for most people, as long as they have a certain level of resilience, that they'll be able to overcome it. And you can think back to like whenever you had a really bad breakup or something, you thought the world was ending, mm-hmm. My life is over. And, you think about when you were younger and stuff like that. But now, when things come up, if you're older, you probably have those tools you've accumulated over time to be able to withstand the challenges and the traumas that creep up. And they're always going to be bad, but there's a process, just like the grieving process with death, you go through a certain process. The same thing, I think, with these. But again, the key is how well are you equipped, with those resilience tools. That's what I would argue. That would be my argument. Yeah. Yeah, no,
I agree. I think, like you said, each of us is kind of has a built-in like personality when we get here, right? And each of your kids has a different one. And I think that from what I found, at least, the trauma can be something, like really small when you're a little kid and you might not even know it. And that can carry forward in some ways. And, it could come from other places, like you said, a breakup or whatever like that. But yeah, I think that is the bottom line, right? Like having the tools to be able to deal with it, either innately or externally, where you have some sort of process where you go through and get rid of those things. So I think that's an important thing to look at, especially if you're trying to change your behaviors from a conscious standpoint. And, if you can keep telling yourself a mantra or whatever, and your behavior changes, then it's probably more of a conscious level kind of thing, right? But if it's really deep in your subconscious, then you might want to think of other ways to kind of dig it out there and kind of examine what it is.
Yeah. And there's a Denise Denise Scholl book. We can put a link in the show notes that kind of talks about that for traders, right? About trying to uncover these patterns and things. It's a great book. So yeah, absolutely. I mean, trading is, in some ways, I view trading a test of your resilience because it's so difficult, and a lot of people, they give up along the way. We see that. Anything in life where there's a very few people that end up making it, in the end, like pro athletes or whatever, Olympic athletes, there's this sort of like this natural culling mechanism where people will fall off along the way. And I think that's, trading is very similar to that. It has a lot of those aspects. It's not to say that trading is difficult, because I don't like to say, well, complicated. It's not that trading is complicated. It's that we're built in a way that makes it a little bit more difficult than it should be, because it's so, you know what I mean? So then we tend to overcomplicate it because we think, I'm doing something wrong here, so I need to add this or incorporate this, or, it's almost like this idea. Computers have made it easy to do that now. It's almost like, the more things we have, the better off we are, sort of deal. But resilience is the key. So, I mean, if you're thinking about trading, resilience is the key. Resilience is the key for, developing the strategies that you're going to use and throwing away the ones that don't work for you. Resilience is the key when it comes to fine tuning your risk management so that you don't deal with the terrible drawdowns. Resilience is the key when it comes to the psychological pain that drawdowns and, questioning whether or not you're doing the right thing. Drawdowns can come in the way of a broker going bust too, right? It might not be any fault of yours, but it's like a extraneous event. So there's a lot of things that can come up for traders, and many of them, unforeseen. It's like the old quote, the old Donald Rumsfeld quote about there are known knowns, there are known unknowns, and then there are unknown unknowns, which is so true in trading. Like, there are those things that are going to come up that you have no idea about, right? And they're going to come up. There are also things they're going to come up that you know about, and then there are some things that you don't know about, but they're going to come up, right? It's all this. It's crazy when you think about it, but it's true, yeah. And so I really would implore anyone listening to this to figure out what are the tools that you have for resilience, because that's going to be the key when these challenges creep up, and they will creep up. So yeah.
Yeah, I was just having a conversation with somebody today, and they said it's a little bit ironic that trading is all about making money and all this material stuff, but ultimately it's looking within and figuring out what's inside of you, right? So I think that's something really important to remember.
Yeah, that's absolutely. Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
To me, that smells like, this is an education company wrapped up in in sheep's clothing. So I don't know. Yeah. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, what do you think about these programs, like Get Funded as a Trader, those type of programs, and how does that play on trader psychology?
Well, in a way, so there's two different types of them, broadly speaking. There's the ones where you trade and people can hook up your trades to their accounts. So you would get paid usually either a subscription fee or even maybe a percentage of the profits or something like that. And then there are those where you kind of are coming in at like a student, and then they want to qualify you. And once you get qualified, then you can make certain levels where they give you money to trade, sort of thing, right? Like a prop firm or whatever. Yeah. So I've probably mentioned in the past, I had a friend who did this, who set up this thing like this. They had the platform created in China, to qualify the traders, and they reversed all the trades. So all these traders were coming in thinking that they were going to trade the fund, and what the fund did, and they were trading demo, that they weren't trading a live account. They were in fact trading the fund from the beginning, but the platform was just flipping their trades. And I said to him, and it was making money hand over fist. And I said to him, I said, aren't you concerned that, you're going to get, some trader who's really good or whatever and wipe you out? And he said, no. He said, nah. I mean, they will come up, they will, but they always cut their winners short and they let their losers run. And so, and if you think about when you first started trading, you were like that. And he said the biggest challenge they had was trying to convince these traders to keep going because they didn't realize they were making money for the fund. And he was trying to convince them, he would like reset their account, so that the demo side of it that they saw was back to zero losses. And, he'd do all these things to try and keep these traders to keep going because they were very valuable to him. And now he would get traders that were good, that qualified, and that would, move on to a live account and stuff. But there were very few. And so that's because he was targeting beginning traders. He was looking for people like that. So I guess the reason why I mention this is because these prop firms, they know that most people aren't going to qualify. Right. So what they typically do is they will charge in some way. I don't care how they phrase it, they'll charge you money. And so really what they could be is, and I'm not saying that they are, but it's logical to suspect that what they could be is they're just an education company masquerading as a prop firm. And so they'll say certain things like, if you pay, $2,000, you can trade a small account. If you pay us $5,000 to go through the intermediate course, then you can trade, $50,000. And if you pay us $10,000, you can trade the expert. You go through the expert course, and if you qualify, you can trade $500,000. Things like that. So I would just be wary if I were a trader looking for these, because it sounds really good. But you need to ask yourself a couple of questions. How many other traders qualify? Are there any known traders that have qualified for this? What sort of payouts am I going to make if everything goes according to plan? And also, so when you're trading these things, like how soon are you going to get back your money? So if you've put up $10,000, how soon is it going to take for you to get that $10,000 back? And do you trade in a way that they want? Because sometimes they have rules like you can't hold trades over the weekend, which for me wouldn't work because I have, long-term trades on all the time. That wouldn't work for me. So it's almost like you have to make sure that there's a good marriage between their qualification rules. Obviously, they have stuff around drawdown and all that, but also the time frames that you trade and the methods that you trade. Because if you're trading a trend-following strategy on the 6-hour charts and they want you to close it at the end of the week and all that, that might be difficult. Now, you could close it out at the end of the week and re-engage at the beginning, but you'd have to look at what sort of drawdowns would they allow for and all that sort of stuff. So if I were looking for something like this, I would just be really careful that I'm not choosing one that doesn't match my, trading profile. So that sort of thing. Yeah.
I mean, for me, there's been a lot of opportunities to promote these things, right? But I've always steered away from them because it's like you said, it's always funneling the person into a certain style of trading. And I almost feel like they want you to day trade when you have to close out your trades at the end of the week. So I think that doesn't work for a lot of people. And there's like the drawdown, like the 10% drawdown for a lot of them that I've seen. And I think it would work if you have a strategy already and it fits the criteria. But I think the way those are marketed is that they want people who want to get funded into those things. And they're making money on the front end with the fee or whatever. And I think most people won't fit into that mold. So I think just be careful about that.
Absolutely. It almost seems like in some ways what they're trying to do is create, like they teach you how to trade, right? So presumably they're teaching some systems and then they have all these rules on it. So what they're doing is they're forcing the accounts to not be diversified, right? You think about it because they're, you know what I mean? They're forcing everyone to trade a certain way and get out of trades, in a certain time frame, that sort of thing. So it almost seems like if they were really honest about what they were doing, they would welcome many different approaches to trading because that's the best diversification. You don't get diversification when you trade the Swissy versus, the Aussie Kiwi. Like that doesn't work. The markets are way too correlated. So if I were them, what I would want, and I've talked to people about this, and I know people that have done this actually, is they have teams. Right. So they get teams of traders and the team trades in one way and they have a leader and they have someone they can ask questions to and they're all kind of learning the strategy. And they have another team and they're sort of competitive. So they're all trading the fund's money. But what's happening is they're completely diversified because they have all these different strategies and all these different team leaders that have different approaches. And so this is really cool because you do get that diversification effect. But if everyone's going through the same course and everyone has the same rules on how they, apply their trades, I don't see how you get any diversification there. And to me, that smells like, this is an education company wrapped up in sheep's clothing. So I don't know. Yeah.
That's interesting. I mean, ideally, even if they were going to do that, they would benefit from like having people trade demo to build up a trading track record, flip the trades, and then the ones that survive would get funded, right?
Yeah, exactly. Yeah.
Interesting stuff. Okay, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
That's the big pitfall, right? Making those opinions part of your personality and your identity. And then once that becomes part of your identity, then you're going to defend that to the death. And
hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have this question from a trader, and the question is, what should I pay attention to if I don't have a model of the world yet, and I want to incorporate some fundamentals into my trading? So do you have any thoughts about how you would go about creating a model of the world if you're using fundamentals?
I think you would start, or at least I would start with work it backwards, like who's successful trading fundamentals, right? And then what are they looking at? And then kind of learn from there and then go from that. I think that a lot of people will try to make a model of the world that they think is right, but it will be way off. It won't approach reality. Like one example I heard was this guy used to be a coffee bean trader. Like he actually physically bought and sold coffee beans. So he knows how to trade the coffee bean futures market because he's really good at that. He knows how the mechanics work on the back end. But if you're just sitting you're at home and you're just looking on Bloomberg or whatever and looking at news about coffee, then what you get from that news can be really skewed in terms of how the mechanics of that market actually works. So I think that would be my place to start if you're going to do fundamentals. Or if you know something, or if you know a lot about a market, let's say that you work in cybersecurity or something, then you might want to look at trades in that market, like stocks or whatever it is, and kind of take it from there. Otherwise, it's such a huge pie that you have to like try to whittle down to a small little trading strategy that I think it's almost impossible to start from the big and go to the small. What do you think?
Yeah, I agree. Yeah, so I was saying that I mentioned to this trader, I said, well, you kind of, like you said, kind of want to work backwards. So like, for example, some people, what they do is they'll actually plot out the non-farm payroll numbers or the CPI numbers, and they'll sort of superimpose that on the chart of like euro or whatever, the pound or what have you. So they can do that. So that's kind of a way of like turning the fundamental data, the CPI data, for example, into almost like an indicator. And so you can see if there's like, is there any correlation there, or you can run correlations on that. You can also pull the data off of economic calendars. So you go and get the economic calendar historically, pull that data off, and then you, like if you're going to use these data to dictate your positions, you would go back in Forex Tester, take your positions based on where the data drops on the calendar, right? So you're going through like the Excel spreadsheet and then taking these trades and seeing, if you can make it work. It's really hard though to say, I want to trade fundamentals, but I don't have a model of the world. You kind of need to have the model of the world first. Yeah. You might have some ideas, like some very simple ideas like CPI or interest rates or whatever that you think is a really important thing, consumer confidence, whatever you think is the big, obviously with currencies, it's interest rates are important, elections, jobs, inflation, all of those things are really important. Inflation, because it kind of relates to the interest rates. So all those things are super important. But I mean, the shortcut is what you said. Like, so you might just say, well, Warren Buffett is the guy that I want to follow or whatever. So you would just learn as much as you can, read all the Warren Buffett and Charlie Munger books you can, and then try and figure that out, or find someone else who you think is really good at fundamentals and sort of try and adopt their point of view as well. You could do that. Like I remember the first book I ever read about the markets really was the book by Peter Lynch. He was talking about he would just drive to the malls and see which stores had the most, or drive to stores and see which ones had the full parking lots. Oh, there's Bed Bath and Beyond has a bunch of cars there, so I'm going to buy shares in Bed Bath and Beyond. He did things. I don't think it was that simple, but he kind of broke it down that way. And so like that made a lot of sense to me. So if you can do things like that, if you can come up with ways to cut through what's important, if you listen to these interviews of these guys on and men and women on these channels where they talk about fundamentals, they're often it almost always boils down to like three things, like 1 to 3 things that they focus on. The Bitcoin, bull is going to go, well, it's the Fed's printing money and Bitcoin is scarce. There's only 21 million, so they'll say things like, you know what I mean? Like they usually come down to like 1 to 3 things that they're really focusing on. And so it doesn't have to be that complex if you're going to be a fundamental trader. You often see that these people who base all of their fund, all of their trading, all of their efforts on just a handful of ideas. Yeah, I would try and shoot for that. Wherever you get those ideas, wherever they come from, whether it's books or from your back testing, something like that, so that you get to the point where you go, okay, this is what I'm going to do. This is what I think. This is what I believe. And so this is my approach. Yeah.
Yeah, totally. And I think you have to look at the market too. Like you said, it's very simple. It's just basically supply and demand, right? So where can you get supply and demand information? I think it's a little harder in currencies. Stocks is a little bit easier, I think. And, just looking through that. And then going back to your point on the data, plotting the data out. I think last week I saw a indicator on TradingView, and they had the COT data, commitment of traders, and it doesn't quite work, but you can kind of look for that kind of stuff on the platforms and see if they have indicators already built in that could make your job a lot easier.
Yeah, definitely. Yeah. And the commitment of traders data, is that for the futures market in the pros? Is that from the CFTC? Yeah. Yeah, I know that's tough because it doesn't come out. Does it come out weekly or something?
So, yeah,
or is it? Yeah. I think it's weekly. Yeah. Yeah. So I don't think it's daily, but yeah. So yeah, that's the thing. You need to find your approach. This question from this trader, what should I pay attention to if I don't have a model of the world yet and I want to trade with fundamentals? It kind of suggests, reading between the lines, it's kind of saying that I need to have some overarching massive thesis about, you know what I mean? That's kind of, yeah. And I guess what we're saying is you don't necessarily need that, right? Like if you're going to be Peter Lynch or any talking head on Sky News or CNBC or Bloomberg or whatever, they've all kind of boiled it down. Like, and you can go on YouTube and find these people talking about, you can find plenty of them on there where they're talking about like the one I've been following lately, and we can link it up in the show notes, is Stansbury Research. Oh, yeah. So she does, Daniela Camboni. She does a really good job. Yeah, she brings in all these guys, all these people with totally different approaches. And it's amazing how different, like you can sit there in like in an hour or hour and a half or whatever, you can watch 3 completely different approaches. It's just like sitting down and watching the stock market channels, the business channels. It's the same thing, isn't it? Like, but she does a really good job of kind of like knowing where everyone's coming from and pulling out the important questions. But if you watch those, you'll just see the same thing. It's just they're focusing on 1 to 3 things, and that's really driving their decisions, and they're completely convinced of it. The good ones will actually they'll have alternative. They'll be like, well, I think this is what's happening, but if this happens, you know what I mean? You kind of have to be looking for evidence that doesn't support what you say and have more than one path. So, there's people who have confirmation bias who just focus in on their thing, and everything, all the evidence supports that. Mm-hmm. Then there's people who have false duality, and false duality is where they like, well, it's either this or this. But usually in life, it's not usually this or this. It's like this. There's a lot of options. So that's where you really want to be as a fundamental trader, I would say, is you want to be in that mindset where you have the path you're on, and you think this is where we're at, but you're looking, what would have to be true for me to be wrong? Mm-hmm. And you're looking for that, right? And it's not just 2 paths. It's not the false duality of this or this, but it's, okay, I think it's this path, and I'm going to look for things that could be true. And if they're true, then I'm wrong. And then I have to look at this path, and then I have to look at this path, and I have to, you just want to be more open to what could be happening, I guess, is, that openness open-mindedness is really important, I think, for people who are in this area, because they have to be able to switch quickly. Like when you're wrong, because a lot of these people, they don't use stop losses and stuff, right? They got major positions or position traders and stuff. And so they're like long haul traders holding on to these things. So you gotta at a certain point, you gotta go, okay, that's it. I'm done. Shifting, pulling my money out of Google now. I think Google has or whatever it is. So yeah, that's really important too, I think, is that flexibility.
Yeah, totally. And on Stansberry Research, I really found Rick Rule useful, if people want to check that out. Kiyosaki's always good, obviously. Who else? Gerald Caliante. He's always entertaining.
Oh yeah, he's funny. Yeah.
Yeah. And there's a couple guys in there I'm like, ooh, you're 80% wrong. I'm happy that she puts them on there because, they're 20% right also. So they might hit something. But any favorites of yours?
She calls them out too, like Max Kaiser. I saw that one the other day as well. I don't really have favorites. I guess what I like about those is they're relatively short. They're usually like under 30 minutes or under, right?
Yeah.
And also what I like about it is just getting exposed to the ideas, because I'm not really a fundamental trader per se, but I really like to see what other people are saying. And I can't deal with like the news channels, and I don't watch those. So like, YouTube is a good place to go. Like, and those in particular are really good because you get such a wide array of opinions, like people just like gold. People will say, energies or cryptos or whatever. Like there's always these different approaches and the reasons why. And some people will say they'll have the same trades on or the same positions that they're looking at for completely different reasons. So, that's what makes up the market, isn't it? It's great. Yeah. So I like to watch them because I want to challenge, because inevitably I have my own ideas, even though I try to trade technically, but it's good, I think, to be exposed to the other side of that. Mm-hmm. So yeah, for me, I like that. I really like the other side.
The big one for me is like the Bitcoin maximalists, like Max Kaiser and who's that other guy, Saylor, and those guys. Because I don't think Bitcoin is like all that, but these guys seem to think that. So I like to listen to those guys in particular. They really challenge my opinions on that.
Yeah, totally. And like, who was the guy that died in Spain? He was the McAfee, right? Was it John McAfee? Yeah, he was kind of like Kaiser, where he was like, Bitcoin's going to go to $1 million this year, And that was like 2 years ago or whatever. I think it's just really good to see why people say the things they do. Like, what are they thinking? Why are they thinking this? Why do I agree or not agree, disagree? I just think it's really good for us to be exposed to those ideas, because I just think once you get locked into something, it's really difficult to get out. So if you're in that flexible mindset where you're in a path, you believe that's the right path, but you're open and you say, what would have to happen for me to be wrong? What would have to happen? Like, what do I do? Right. And then which path do I go down if I get these data coming in that confirm that I'm incorrect?
That's the big pitfall, right? Making those opinions part of your personality and your identity. And then once that becomes part of your identity, then you're going to defend that to the death.
Yeah. So the people that are able to disengage ideas, theses from person, you got to have that. And that's a rare skill, actually. It's a rare skill. We know from research as well, in people being able to coordinate theory and evidence. They usually just, when they say, well, why do you believe this theory? You're supposed to say, support it with evidence, right? Like that's science. And then people will just restate the theory in another way. And so that means you're not, you know what I mean? You're just not, you're not at that point. And you'll see this with people when you discuss things, they'll make it personal, or they'll instead of attacking your thesis, they will go with, or a group's thesis, may not be you personally, but another group that you're talking about, they'll attack them, just ad hominem attacks, which aren't really, they don't have anything to do with the ideas. It's just that, oh, well, those people are stupid or those people are dumb. Then you're not really dealing with anyone who's thinking about the ideas. Now they're just devolved into name calling. So
yeah, they're great.
You can't really have a conversation with them. Yeah.
So, something to be aware of. All right, thanks, Walter.
Yeah, thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
If you want to be neutral, you need to get out of the trade. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this. Hey, Walter, let's talk a little bit about decision points in trading and where things could go wrong, like, entering a trade, exiting a trade, stuff like that. So what do you think are like the biggest decision points, and what kind of emotions can come up at those points?
Well, I can speak to my experience and what I've seen and what I've heard from the traders. And for me, the big ones are obviously at entry, at management of the trade. Usually it's around the point of, should I move to break even or should I pull the plug on the trade? So that's kind of like mid-trade management, and then there's the exit. And almost always we are influenced by our prior experiences. So, for example, if we've had 2 weeks of mostly losing trades, we're probably going to have a hard time in most cases as a discretionary trader following the strategy rules. And in a lot of cases, you'll lose your confidence. So you might not want to, you may decide not to take a trade, or you might change things up like, well, the last 3 trades I've had good profit, but then the market went against me and retraced so quickly, I ended up with very little profit using my trailing exit. So this time I'm just going to get out as soon as I get to X amount of dollars or X amount of points or pips or whatever. So usually it's along those lines. And the simplest way to look at it for me is that it's a cliche, but you just control what you can. Mm-hmm. And in trading, you can control your decision making, how well you follow the rules. Although that sounds very simplistic, but that's the reality. And so if you decide to change your exit rules because of what's happened recently, you're not following the strategy that got you to where you are. You're not following the strategy that you probably spent hundreds and thousands of trades on testing. So is it going to work? I don't know. My guess would be it wouldn't work as well as the one that you tested, but you never know. So you know what I mean? So that's the way I look at it. So we have those key critical junctures in the trade. And, I like to automate my exits so that I release the psychological capital there, and I don't have to spend so much psychological capital there. That also kind of frees up the ability for you to take the opposite direction. What I've noticed in myself and some other traders is that typically if you're let's say you're buying the euro against the US dollar and you've been buying it for a few weeks, then all of a sudden you get a sell signal. It's hard to kind of flip and just take that sell signal straight away, especially because you've been going, you've had this filter, you've been looking at it as an uptrend. However, if you automate your exits, then you're not really making the decision, right? Like the trailing exit you've automated, you flip the switch on, that's doing it. So in some ways, your job is done once you enter the trade, And so I find that a little bit easier to kind of allow myself to see the market in a neutral point of view. You're never going to be neutral when you're in a trade. It's really difficult to be neutral when you're in a trade. If you want to be neutral, you need to get out of the trade. That's the best way to analyze any chart, is to get out of the trade. But so that's how I see it. At entry, at mid-trade management, and then at exit, those are the key sort of decision points in trading, but all of those are impacted by your previous experiences.
Mm-hmm. Yeah, I totally agree. And I would also add before and after, right? So the decision to actually start trading, maybe you're not in the best emotional state right now. Maybe you got into a fight with somebody, maybe you're in traffic. So that's a key decision point to figure out, do I really want to trade right now, or should I just go relax for a little bit and then trade, or just not trade at all, right? And then after, when the trade is closed, another decision point is to journal the trade, right? Are you keeping up with the journal? Are you putting all the information necessary in there? And if not, then you should try and build that habit also.
And it's interesting, have you ever played air hockey?
Yeah.
Yeah, where you play, you have one paddle and you're trying to score on your opponent. It's interesting because in trading, if you think about it, in air hockey, I play defensive, right? So what I do, and it's the same thing in ice hockey actually too, and probably soccer, I don't know. I play in a way where my goal is to stop my opponent from scoring. So I'm basically playing goalie with my paddle, and I just wait for them to make a mistake, and then I will once in a while go on the offensive. And sometimes and oftentimes they'll score on themselves, right? When you know you got the puck whipping around and stuff, and they'll actually give me a point just by being really aggressive. So in trading, I kind of think of it the same way, where there are some traders who tend to be very defensive. So like if they get, like you were saying about journaling and stuff, if they get into a really bad space and their confidence is low, they might tend to shy away from trading, step aside, maybe be gun shy on the next signal. Whereas there are other traders who are more offensive, and what they will do is they will try and make it back. I want to get all that money back that I lost on the USD CAD, that sort of thing. I guess that's another thing to keep in mind, like thinking about what you were saying, like, do you want to trade, or like the mindset that you bring to the, to the computer screen when you're thinking about taking a trade. It's almost like what you're saying is kind of the preamble to that. Like, okay, should I trade today, or am I going to trade? And I guess I would just be aware as a trader, which camp do you normally end up in? Obviously, we can end up in both camps at times, depending on where we are in our lives. But there are those traders who are super aggressive and they tend toward over trading. And then there are other traders who tend to be gun shy and worried about the negatives, right? So they're the ones playing defense. And so just be aware of where you are there, and then you can kind of modify your environment so that, you don't, you know what I mean? You don't end up too far in one camp. And you don't want that. Like in other words, you don't want your one known weakness to be your downfall, right? That shouldn't be the thing that finishes you off as a trader. If you're going to the game and that this is my thing, don't let that thing beat you, right? Like set it up so that that's not going to be the thing that takes you down. If something else, like if your broker goes bust, or there's a financial meltdown and the fiat currencies don't work anymore, or whatever, like there's a tsunami and it takes out your house and your computer and your livelihood, okay, fine, that's like something else. But if it's you and it's the thing that you have, that's on you, right? That's your fault. So I would just be aware of that. As a trader, I would want to be aware of where I am, like on the continuum. Am I defensive? Am I offensive? Where am I there? Where do I tend to make my errors? Because you can certainly modify your trading life so that it's unlikely that one weakness is the one that is responsible for your downfall. So
sports are a really good analogy, actually, because when I used to play soccer, I was more of like, I prided myself in being a better passer instead of a scorer, right? So I was more playing on defense. I was more giving the ball away. And then one day I realized, hey, wait a minute, I could score too, right? So I consciously started trying to be aggressive and score. And in the little league I was playing in, I was probably like the top scorer last couple of seasons, right after I made that little switch. But in trading also, like I noticed that I was missing trades because I wasn't getting back in, because like you said, I was playing too defensive and I wasn't aggressive enough, or I didn't have the confidence, I guess. So that's my tendency for sure. So it's something that I try to be aware of and try to work on.
I mean, self-awareness, it comes down to that, doesn't it? Like in trading, that's one of the keys really to making progress, is just that self-awareness. And as you say, journaling can help. Understanding where your pitfalls are, where your weaknesses are. If you have those in mind, that can really help for sure.
Yeah. All right, cool. Yeah. Thanks, Walter.
Thanks.
See ya.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
Maybe this person is like over trading. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, we have a question from a trader, and this trader says, I really need to work on my patience, and I need more patience in analyzing my trade entries and my charts. So what should I do? What would you suggest?
That's a loaded question, huh? I think reading between the lines, at least to me, it seems like this person is losing trades and they're thinking, oh, I need to analyze them more so that I don't lose. I don't know what you would think about that, but that's kind of where I'm reading that. If that's the case, then they would have to just do more testing and more practice on that setup or whatever they're using to get more confidence in it, so they can just pull the trigger instead of being unconfident or, and trying to go back and forth on the analysis instead of just taking a trade and seeing how it works out. So that's what I would say. What do you think?
Yeah, I think it's interesting. You said reading between the lines. I mean, it's so funny. Like, you can read so much between the lines. You can say maybe this person is like over trading, right? Because like in a sense, I agree with you. Like it seems like they're suggesting if they had more data or more analysis, they would be more right.
Yeah,
That's kind of what it sounds like, the question. But it also could be, if knew how to analyze the charts correctly, I wouldn't be taking all these damn trades. You know what I mean?
Yeah.
Like all these crazy trades that aren't, you know what I mean? So I don't know what they're saying, but yeah, there's lots of reasons why you'd be impatient. It could be that you don't have a strategy that allows you to take trades that you believe in. It could be that you're like all over the shop. Like you see, oh, this guy's recommending that I buy the euro now, so I'm going to buy the euro. And then I have this system that I haven't tested and it's selling the Swissy, so I'm going to do that. Or, all this, like, it could be just information overload. It could be that as well. It's really hard to know. But I guess the key thing is here that in some way, this trader is saying that they're taking too many trades, or they're taking trades they shouldn't take at the very least, right?
Yeah.
There are trades taken and those trades should not be taken. So how do we fix that? I would say it comes down to assessing your performance. And so that's in your journal. You assess your entry performance, you assess your trade management performance, and your exit performance. And also you can assess your intuition performance. So you would have a score for intuition, as in, I have a 9 out of 10 confidence that this trade is going to end up being a winner. Okay. I've entered my trade at this price based on this strategy, these system rules, and I entered an 8 out of 10. And that was an 8 out of 10. It was a pretty good entry. It could have been a little bit better, but I did okay. Did pretty darn good. And then on my trade management, I moved to break even at the right time, so I get a 10 out of 10. I didn't do anything wrong there. And then on my exit, I got out at the right time according to my exit rules, so I got a 10 out of 10. That sort of thing. And then over time, you can see, where is my weakness, right? Am I taking trades that are, that don't fit, or that is it the trade was a good trade, but I managed it the wrong way? Or is it that the trade was a bad trade because I took it when I shouldn't have, right? Because those are two different questions that, either I'm taking something outside of my rules, or I'm taking a system or taking a trade that fits my system, but I'm not really following the rules. I'm not really entering, exiting, and trade managing as I should. So, and then the intuition thing is just a bonus, because we always fool ourselves into thinking that we're better at picking winners than we are. And so that way you can have some hardcore data on whether or not your higher rated trades that you take are more likely to be winners than your lower rated trades. So yeah. So it's tricky though. I mean, there's a lot to untangle there. That's the problem with these one sentence questions, right?
Yeah.
Is that you don't know exactly what's going on. It's better off to get like a paragraph to know exactly, or at least get a better idea of what's going on.
Yeah, you'd have to ask them some questions on what they're thinking and all that. But yeah, I guess to break down what you're saying, like, at least for me in the past, like I would see like a breakout and I'd be, ooh, breakout, right? And then I would trade it and I'm like, wait a minute, that wasn't in my system. So I think part of that has to do with a routine. When you sit down, like maybe you have a physical journal, you open it up and you write down something, or you do a little meditation before that to calm yourself down, or something like that, right? Some sort of pre-game routine that will slow you down and not allow you to jump into those trades when you see them. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
A good idea.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I have a question. I actually was talking about this with a trader years ago, but I was just thinking about it this week. And this trader's he's worked for hedge funds, creating strategies for them and stuff like that. And he, he's a really good programmer and a good thinker. And he was mentioning to me, he said, it's always so easy. It always comes down to it's easiest to build a trading strategy that is a trend following strategy. And I thought that was a fascinating comment, because in my mind, I had always thought that the easiest type of strategy to build would be a breakout strategy. I'm not a programmer by any means, but it got me thinking about how sort of as traders, our worldview or our view of the markets can color what we think is possible or easy or difficult or whatever, because I've always held and I've always thought that the simplest and easiest EA robot to create would be a simple breakout strategy. It just seems so obvious to me. And yet he was, he's got a lot more experience. He's built these things. He worked for, a market wizard guy for his hedge fund and all that. And so I thought, okay, well, I'm going to defer to you here. But that was a very interesting thing, because, I'd read stories or there's reports, you can go and find them in trading magazines and stuff, where they've looked at, for example, like the old turtle rules that are all known now, the old turtle rules from the 80s and 90s. They stopped working at a certain stage, I think in the mid 90s or early 90s, they stopped working. And then after about 10, 12 years, they started working again, and, somewhat difficult to create trend following strategy. Not total. I mean, I can see why he would say that. I can see where it would be totally difficult to create a trend following strategy, but I always just thought the low hanging fruit is that breakout strategy. So what are your thoughts on how, because in my mind, I'm linking these together, the worldview of the markets and the belief that a certain type of trading system or strategy or approach is the quote easiest one to automate. What are your thoughts on that? Because I think it's a fascinating look into the psychology of different traders. That's how I see it.
Yeah, and that's a great question. Well, it depends what you're doing, first of all, right? Like if you're in a fund and you have an automated system, then yeah, maybe trend following systems would be easier to program, or maybe that's just the way he looks at the market. I don't look at it necessarily from the type of strategy, but I look at it more from individual trader standpoint, like trading the daily chart, number one. That would be the easiest place to start, right? Because a lot of people have a day job. You don't want to spend too much time on the charts. So starting on the daily chart would be a good idea. And then from there, I'm not set on one or the other, trend or counter trend or breakout or whatever, but that would be for me the easiest place to start, and then look at what other traders are doing on that time frame and then kind of test that and then make it my own, right? But as far as trend or counter trend, I don't see one as being easier than the other one.
Yeah, I always, in my mind, I always had the counter trend as the hardest, because you'd be fighting, in some ways, you'd be fighting the urge to add some sort of martingale element to it. And some counter trend strategies or reversion to the mean strategies do have that. They'll have a system where they'll take a sell and they're going to assume that it's going to fall back to the sell, because they think it's going to fall back to the moving average or the middle of the Bollinger Band or whatever they use, the pivot point, whatever, and then if it goes against them, they take another sell, you know what I mean? Yeah. And I was always really uncomfortable with that, that idea of taking a trade, being wrong, and then taking another trade, you know what I mean? It always seemed too close to martingale. I mean, I know it's not officially definition martingale, but it had that smell to it, and so I always thought, ooh, these are tough. But I have heard people that do this, the reversion to the mean, but they tend to stick to certain markets, because they find that statistically there are certain markets that sort of kind of hover around price, whereas other ones are more likely to trend and stuff like that. So I found that interesting. I thought, okay, that makes sense to me that they would do that. Yeah, in my mind, I'd always thought that would be the most difficult one to do, because it seemed to me that inevitably you'd have an upside down reward to risk ratio. So you'd have to be really, really right to have an upside down reward to risk ratio, because I haven't been able to get any that I've tested, strategies like that, like reversion to the mean type strategies, where it works if you don't have a really wide stop, right? So to me, that means you got to take quick profits and you got to have, big losses. And so that means inevitably a high win rate. So I was always uneasy in that world. But I mean, I'm sure there are a lot of people that love that. In fact, I think in some ways, as a beginning trader, when I first started trading, I was of the reversion to the mean mindset. I remember thinking, you know, when we were trading the euro and it was at 70 or 87 cents or whatever, and then when it broke $1, I was like, no, it's never gonna get, you know, it's gonna go back under $1. They're not gonna, you know, and here we are 20 years later, you know, and the euro hasn't gone below $1. Like, it's just funny. It's funny to me that I was thinking that back then, you know, like, oh, it's gonna, you know, they'll send it back down. No way. Because when I first started trading, the euro was new and it was always under $1. It was actually in a permanent downtrend from the, if you go back and look at the old euro chart, it was actually, and they made a composite chart too that wasn't really it was what the euro would have been had the euro existed the year before. They also had that. But the point is, we were laughing as traders, like, the only thing you need to know about the euro is you need to sell it. You know, that's all we knew. Yeah. And then when it broke $1, it was kind of like it was like a mind bender for me. I'm like, oh, it'll go back down again. It'll go back down. And of course it still hasn't. So yeah, so it's your mind, it's your view of the markets that color what you think is easy, isn't it? I mean, it's just so interesting, I guess.
Yeah, my friend actually does pretty well with the counter trend thing. Like, that's his bread and butter trade, and that's what he learned at the hedge fund. Yeah, so what he does is he looks for like a major support level or whatever, and then he looks for overextended price, and then he has 4 levels above that, and then his stop loss, and then he sets the levels by using ATR. So then price will come up, and maybe he'll take 2 of his entries, and then he's looking for a big, you know, downside. So he's willing to hold it and have that big gain. So that works for him, but I don't think most people could do that.
Yeah. Does he take more trades if it goes against him? Yeah. Or does he just have this
He has up to 4 trades.
He has 4 trades. So it'll go up and he'll sell. It'll go higher. He'll sell again. Higher. He'll sell again. Higher. So up to 4. Yeah. That's, to me, those are the only ones I think that would work. You know what I mean? And that's, to me, that's so tricky. You know, it's funny. Like, I've done the opposite of that. You know, I've literally done the opposite of that, where I'll take a trade, and as it gets closer to my target, I'll add another one, and it gets closer, I'll add another one. You know, and I'm stacking them closer, it's really tight right before the target. You know, like huge positions that are risking everything that came before it. You know, it's the exact opposite of that. So it just shows you where my mindset is versus, you know, your friend. So I just find that it's so interesting.
Yeah, that's a natural tendency, right? Like, especially with hedgers, they tend to like pile it up, and then they're like, "Oh crap, I'm stuck," right?
Yeah, exactly. Yeah.
All right.
All right. Thanks, fascinating stuff.
Yeah.
Thanks.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Podcast where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh. Sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So, question. I was thinking about this the other day, and I don't know if you had much experience. I think you have actually a little bit along these lines of trading with other people. So my question is, when you're trading with other people, what are some of the things you have to think about in terms of, I mean, this is a psychology podcast, right? So there are some issues I think that will creep up that we may not necessarily anticipate. So for example, I'll give you some things that I've noticed. So for example, when you are trading with somebody else, there are a lot of ways to do it. It could be where everyone's sort of trading the same strategy, right? Which means or same strategies, several strategies. So what that means is, of course, does everyone agree that this is a good strategy to trade, right? So the match between trader, right? And then there also could be situations, I mean, there's lots of situations. So in that case, you might have a system where it's like one person lives in one time zone and they're trading it during a certain session, and then you trade it during another, or, you know, or whatever, or maybe you take certain markets and they trade other markets, you know, but you're basically doing the same thing. There could be a situation where one person's kind of like the money person and the other person's like the trader, right? But maybe the money person knows a little bit about trading, which is why they found you or they knew about you in the first place. So that, you know, there's the whole dynamics there about like a person who knows about trading, who's now giving you the green light to trade their money. What's the relationship there? Are they able to tell you, hey, why aren't you trading the euro right now? It's on a run, you know, or things like that. And then also there's a situation where it's like people are doing different things. I'll give you an example. So I traded a strategy where we were basically gaming the system, and you were essentially trying to make swap. Okay, so the swap that you get paid, and that's it, right? And it was going really, really well. Like we were on the best months, you could get like 7% a month, which is pretty good for just essentially getting paid to wire money back and forth. Because what you're doing is you keep wiring money to try and keep the trade open, right? Mm-hmm. So that's the game. And you don't want to get too greedy, because if you get too greedy, you get popped out of the trade. But if you're not greedy enough, then you're not going to make, 5 to 7% a month. So in this situation, we were both meant to babysit these open positions, right, on the accounts and collect the interest. Well, I had a trading partner who decided that he was going to take directional trades in our swap trading account. So you can imagine, right, the disasters. Anyway, the point is, there are these issues when you're working or trading with other people, where some people might have certain goals or certain perspectives versus yours. And how do you match those up when you're working with other traders? I think this is something really important, because I think sometimes people forget that just because you like somebody, you know somebody, and respect their trading, doesn't mean you should be trading with them. You know what I mean?
Yeah.
I mean, because there's a lot to unpack, right? So I just wanted to get your thoughts on that, because I've had a lot of experience in this sort of thing, and I've seen a lot of different things, but I'd be interested to get yours, because it's a minefield. It really is. It's like having a business partner, in a way. It really is, because if trading is your business and you're doing that trading with somebody else, it's like having a business partner, whether it's formalized or not. So I just wanted to get your thoughts on that.
Yeah, I mean, that's a tough one, right? I think, like you said, there's a lot of different ways you can slice it. You can be trading with somebody, you can have a money guy, you could be trading in a mastermind group, you could have a trading accountability partner. And I think the bottom line is that you should look for a personality match. Is it someone who you get along with, number one, but also you can be respectful to each other. You'll be both supportive to each other, and you'll be able to set and manage some boundaries from the beginning. I think that's really important. So like setting up, okay, hey, this is the account. This is not our directional account. We're doing swap in this account. So you got to respect that. And if they're cool with that, then great. But whatever they do after that, obviously, is out of your control. But I think that's the number one thing to look for, right? Is a personality match and a respect match. Is that person not only respect, but also accountability? Is that person going to do what they said they're going to do? And if they don't, and if they've proven that they don't do that 1, 2, 3 times, then you find somebody else, I think. But I think that's the bottom line in any relationship. And a lot of those trading groups or whatever, they can be a lot more trouble than they're worth, in my opinion. Mastermind groups and stuff like that, because everybody either has an opinion against yours and they try to beat you down about it, or if they're respectful, they might not be supportive, or they might be flaky. So I think it's actually pretty hard to find a group that's worth joining and trading with, at least in my experience. I don't know. What do you think about that?
Yeah, no, I agree. I agree. I think that's why, like, when you look at like the prop firms, that's why they have all these hurdles to let people in. They don't just let anybody in, right?
Yeah.
They'll usually make you qualify or pay money and learn how to trade through their strategies or their, approach, and then qualify. Like any group worth joining is always difficult to get through. If you think of any like university or company that you wanted to work for, whatever, it's the same thing with trading, I think. So yeah, I think the key is to have those, like writing a system. When you write your system, you have your rules for trade management, for risk, for entries, for exits. And it's the same thing with that. So like in my experience, one of the things we had to do is we had to just break off money and give it to the trader to trade aggressively, instead of allowing the trader to use the swap account. And also, let's say that you and I are trading together, and I'm trading a trend trading strategy. So I follow the trend. If the market's trending, I'm doing well. If the market's not trending, I'm losing money. Okay. Or best case, breaking even, but probably losing money. And then let's say you are trading a reversion to the mean strategy. So when the market's trending, you're losing money. And when the market's just chopping around, you're loving it. Okay. So what can happen is, let's say we have 6 weeks of really strong trends. So I'm killing it. And then I say, hey man, how are you going? And you're like, not so hot. Yeah. And so there's this temptation to pull your money right out of your hand so that you don't lose money for our collective good, right? But of course, what's going to happen next week is that the trends are over and then you're going to kill it. You know what I mean? So like there's this like competitive sort of, it's almost like when people are looking to invest in mutual funds, they'll look and see which ones are at the top and they'll invest in those. Well, those are due for a retracement, right? They're going to fall back into the middle of the pack. What you should really be doing is looking for those funds at the bottom and then sinking your money in there and hoping that that the markets change, that they turn it around, right?
Yeah.
But that's not human nature. So yeah, it's in some ways you even have to have rules for like, how are we going to pull the rug out from somebody? You know what I mean? Because it's easy for people to get thinking, oh, well, I'm the good trader here. Hugh's not even pulling his weight. Look what I've done since the beginning of the year. I've been killing it and Hugh's been just losing money. Like, we need to get more money to me, or like I should get paid more because I'm making money and he's not, it'd be like this whole thing. There's actually the best example of this that I've seen in terms of like leveraging this experience that you have when you're working with other traders is where they had teams and they taught. So they had like a leader and the leader would teach each team their strategy and the teams would compete. And so each week, each day, each month, they would see how well they were doing, right? And so the fund would allocate funds to each of these teams. There's like 7 teams, and they would each get funds based on how their performance was. And the traders in the teams as well, they would be responsible for bigger accounts as they did well and followed the strategies and all that. So that was kind of cool because it was almost like a sports thing, you know what I mean? Where you're like competing against others. And so it wasn't really, and everything was like, everybody knew what the rules were, like how you would get more money to trade, how your team would get more money to trade. It's totally lined up. And of course, the coaches were incentivized. Like they would get a chunk of the team's revenue, of the team's profits as well. So it was a really cool strategy. And so, it was different to if it would be like a 2-person or a 3-person trading team because it was more well defined and they even had like their team name and stuff, like mascot and stuff. You know what I mean? Like
they have jerseys and stuff.
Yeah, I don't know, maybe, yeah. So anyway, I just think like that's a way to kind of leverage that competitive sort of you're winning, you're losing, I'm winning sort of, you know what I mean? Like that sort of thing. Like if people are looking to do that model needs a lot of structure and everything. But yeah, so I just thought that was a really cool way of dealing with it because when it's a small group dynamic, it's a little bit different. When it's like, no, it's your fault. No, man, it's my fault. It's like, that kind of finger pointing and stuff. Yeah. So, but one thing I wanted to mention though that I forgot. So there's a way I think to get that criticism, but without the pain of the money involved, which is basically having a trading accountability partner. We've talked about this before, right? So one of the really cool ways of trading with somebody is to not trade together in the same account or the same pooled money, but actually just talk about how your trading went each week. So like on the weekend, you meet up with your trading accountability partner and talk about what you did well, what you didn't, let them go through it. So that's like a really good way of getting the critique aspect of a trading team, but without the friction of the money. And you know what I mean? You just have to be open and honest each week and share what's going on. So I think that's a really good way for traders to, to leverage that dynamic in a positive way, is to have someone that sort of critiques you and you do the same. And you're not critiquing them as a person. You're just, how well are you following, right? Your rules. So it's your behaviors. It's not you, the personality of you. So yeah.
Yeah, I think that's really the best solution to like a trading group or any kind of support, because ultimately, even if you start with the same system, you're going to branch off and trade your own version of it. Worst case scenario, like when I hear you talking, all that's going on in my mind is ego. That's what gets in the way, right? Everybody's ego. They want to be the top dog. They want to be the highest performer. So if you can work with somebody who can put their ego to the side and just help you out and just support you, and you can do vice versa, I think that's the best solution.
Yeah, that's a great point. Yeah, absolutely.
All right. Thanks, Walter.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
What are you getting out of not following the plan?
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, a YouTube listener, I guess watcher, has a question. He asks, why is it so difficult for a trader to follow his written plan? What do you think?
Well, if you don't incentivize it, then why would you do it? So why is it so difficult to get people to follow the law? Well, it's not, because you're incentivized to follow the law. If you don't, if you go faster than we say you should go, then we can take your money, right? If you hurt somebody really badly, we can take your freedom, right? So if you're having issues following your written trading plan, then that's because there's no consequences, right? In fact, I would even argue that if you're not following your trading plan, then your life is set up to reward you not following your trading plan. You know what I mean? So do you know what I mean? Like that's like we'll fall in. Have you ever seen that thing where like they drop the balls and it's like and they bounce off the little pegs and they end up in different slots and stuff? Yeah, is that what it's called? Yeah. So that's like, I think of people like that. Like I think of myself and people like that, where you just kind of bounce and you just kind of go like with the flow, and the easiest path is where we end up, Like if it's easy for you to wake up in the morning and make some eggs and then read a book, you're probably going to do that. If it's just killing you that that you're gaining weight or whatever, and you just want to, and you just can't stand the look of yourself, and in the morning you're not going to eat some eggs and read a book, you're going to go for a run, right? Or you're going to go work out or whatever, right? It's because the pain has motivated you so much that it will be more difficult for you to sit and eat breakfast knowing that you should be working out than for you to go and work out, right? And it's the same thing with your trading plan. So if your trading plan is designed in a way so that when you do the right things, you get rewarded with those things you like, and if you don't do the right things, you don't, or you get things that you like removed, or you don't get to do the things you like, then guess what? You're gonna follow it. I mean, it's really, I hate to be like over simplistic, but you can read the Charles Duhigg book about habits, right? I think it's The Power of Habit or something like that. So yeah, that's what I would do. Is I would, and we can put that book up in the show notes. But that's what I would do, is I would design your life so that you will follow that path. Because right now what's probably happening is your life is set up so that the path that you're on, that's the easy one. Like that's the one that's going to reward you, right? And that's why, like, I know we talked about in the last episode about like training accountability partners, but that's one of the things that when you have a training accountability partner and you know that each week you're going to have to say, okay, this is what I did. This is why I did it. This is what I didn't do. I know I should have done that. Like if you have that in the back of your head, knowing that in a couple of days, you're going to have to explain your behaviors right that you're doing right now, that's a big motivator too. That's a huge motivator. The observer effect, it's called, where you like know that somebody's watching you, and that changes what you do. Like if you have a workout partner, and I had one when I was in graduate school. My friend would knock on my door every morning at 5:30 in the morning. I knew he was going to be there. You know what I mean? So what am I going to do? Am I going to wake up, go down there and open the door and say, I'm not going with you today? Like he's in his workout gear. He's going to go to the gym, Like what am I going to do? So it's the same thing. Like if you know somebody is counting on you and they're going to look at, they're going to watch you and see what you get. Are you going to come with me to the gym right now? I'm ready to go. So that sort of thing with the training accountability partner can really help. Those are my thoughts on how, you can modify your life so that it's the path that you're going to take. What are your thoughts on not following a plan?
Yeah, I think there's also the awareness around what are you getting out of not following the plan? Because you're getting something out of that. That is stronger than actually following the plan, or you're getting more reward out of not following the plan than you are from following the plan for some reason. So, be aware of what that is. Maybe it's the lottery ticket mentality. Maybe you think you think a trade is like a lottery ticket. So you're buying that and hoping it'll win. And that's more exciting to you than actually following the plan and, getting the 63% win rate or whatever it is. So something to consider there also.
Definitely. Yeah, definitely. Yeah.
All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Good job. You're following your rules. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, we have a question here from a trader. The trader says, I want to avoid the fear of missing out, FOMO, as this causes me to break my strategy rules and I have bad results. All right, so my thinking along these lines is that if you are having FOMO, fear of missing out, so you're breaking strategy rules. So it sounds like there was an entry or there may be an entry, right? You don't have your entry yet, but the market's moving. So you're like, I need to get in, right? So in a lot of cases, like people have pullback entries somehow or whatever, right? Like the one that I trade, Tokyo Train, is like that. System 2 trading system is like that, where you're kind of waiting for a pullback to get in. So then you're breaking your strategy rules and you're getting bad results. Okay, so we know that the bad results are coming from breaking your rules, right? If you have strategy that you believe in, you've probably tested it, you probably have the numbers, you probably have some confidence in it, right? If you're getting bad results, you're saying, well, that's because I'm not following my strategy. So really what's going on here is this person is not following the rules, right? They're a slave to the emotion, the fear of missing out. They're a slave to this, oh no, I'm going to miss out on an opportunity. And they're not a slave to their rules. So the reality is, if you want to change your results, assuming you have a strategy that makes money, we don't know that that's the case, but let's assume that what you need to do is set up your life so that you are following your rules is the only thing that makes sense, right? Because right now, what makes sense to you is following your emotions, right? Not following your rules. So what you need to do is get away from that and move to a situation where you know that if you follow your rules, you will be rewarded. If you follow your rules, you will have a trading accountability partner or someone who looks over your trades every week, whatever, that says, good job, you're following your rules, even if you lost money that week, right? Because that can happen. You can definitely have a week, especially if your win rate is anywhere around 50% or less. It's quite easy for you to have a losing week, depending on how often you trade. So yeah, so I would just say this at the core is emotional trading. And then it's kind of like this weird blame game where we blame it on, we're having bad results because we're not following the strategy. If I had just followed my strategy, right? We don't know that, because you could follow your strategy and still lose. You could follow a bad strategy, right? That doesn't make money. But in this case, it's just kind of assumed that that's what we have. So that's kind of my thinking for this trader. What are your thoughts on this fear of missing out issue?
Yeah, the thing that comes to mind is something you mentioned before in a previous episode on thinking like on a long enough timeline. So if you said gamblers think on a long timeline, right? They're not so concerned with the current bet. They're concerned with how am I going to perform over like 10,000 bets or 1,000 bets or whatever it is. And I think this is a similar situation where, you have to trade enough so that your advantage plays out. And if you don't do that, then you're always going to be at the whim of your emotions and what looks like a good trade at the moment, but isn't part of your system. So I think if you can think in a longer time frame, you think about, okay, on a long time frame, if I don't follow my rules, I'm going to lose money, right? And if you follow the rules, then you make money. So I think thinking that way helps a lot.
Yeah, that's a really good point. I've been testing a strategy over the last 3.5 months or so, where it had a really nasty drawdown, and I was like, it trades almost every day, right? And I was like, but I was thinking in terms of the long term. I said, I think it'll probably pull out of this, and it is interesting that study where they study the best gamblers, that they look at like they look on a really wide horizon and way out into the future. The thing about trading, though, or even gambling, I guess, is that once you look in that really long term, you realize it doesn't make any sense to take huge risks. You know what I mean? That almost becomes like a rookie mistake. You know what I mean? Like, because I remember the first time I got some traders together and I was gonna like give them a crash course in trading, right? I had to, because I just got out of break-even trading. So all of a sudden I'm an expert, right? But one of the things they said was, like, what are some risk management tools that you know of, or risk risk approaches to risk management. And you know what they said? They said, well, if the trade looks really, really good, like it's going to be a winner, then risk more. And that blew me away. Even then, I was like, you know what I mean? So that's like that kind of thinking just goes away when you have like you were saying, the long-term gambling thing, where it's like you're going to live for thousands of years, and then how would you operate then? Because then you know that if you have a really small edge, you're going to make a lot of money, like a casino, right? Mm-hmm. Casinos have these really razor thin edges, but they make a lot of money. And why do they make money? Because they just get people that go through the system and they're skimming off that little bit, like the slot machines that pay out 98.5% or 97.2% or whatever, it pays out. So every dollar that goes through there, 97.5 cents gets spit back out one way or another in the form of jackpots, and they just take that little bit. Well, it's the same with your trading strategies, right? If you're thinking of the long term, you go, who cares if I keep, ending up with these little tiny wins and these little tiny losers, and once in a while I get a big winner or whatever. If I add it up over time, over years, you're going to see a big fat result because you're compounding and all that sort of stuff. So yeah, it's a really, really good way to look at things. It changes everything. It really does. When you start thinking in terms of long term, there are a lot of really good habits that come to the forefront when you do that. Whereas, the crazy gambler doesn't think long term. They just think the next bet, right? Oh, this is the sure thing, right?
Yeah.
So they do that. Yeah.
Bet everything. I think it also helps to think about that in your real life too, right? Like if somebody yells at you on the street or something, or if somebody honks at you in a car, like in the long term, that doesn't really matter. So why are you going to get bent out of shape over that guy, right? He's just an ass or whatever. But I think it helps to look at it that way too.
Yeah, that's a good point. And they could, maybe their dog died that morning or something. Like you don't know, you never know what's going on in their life too. Yeah.
All right. Thanks, Walter.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
It was that you must know at any given time, where is the market headed, right? Okay. And I think that's kind of built into this question. So I think you're kind of picking up on the sort of the same idea that I was thinking. And I could be wrong, but I think what this trader is saying is that I have no idea when I sit down and look at the charts where it's going. So I need to know, right? I need to become an expert, right?
Yeah.
I disagree. I totally disagree with that idea, because I had that idea where we would I literally would call my trading buddy. We would get on, it wasn't Zoom back then. It was like Skype or something. It was Skype. Yeah. We would get on Skype and we had the same, I don't think we screen shared. I think we basically had the same screens that we could log into, so we saw the same thing through the same template, the same, indicators and everything. And our question always was, okay, where do we go? Do we buy or sell? And we were trading the pound yen every day, at the London Open, basically. Mm-hmm. And we did that back with the euro too, when we first started trading in 2001, when I was trading with him. So, I think that's the wrong way to look at it. And I could be wrong, but almost every really good trader I know has this same sort of outlook which is, I just sit and wait until there's free money over there in the corner and I go pick it up. Mm-hmm. Right. Mm-hmm. So you're almost like that lion that waits in the tall grass until there's like some weak little water buffalo and then you pounce on it. Right. That's kind of what I view trading as, And so I don't think that you necessarily, as an expert trader, would need to know when to enter and when to exit, which gets into the other sort of subtle thing that you were touching on too, which is you can be a really good trader. And I know you said this, and I'll say that basically in a different way. You can be a brilliant trader. You can make piles of money. You can change your life. And you can also think, I really screwed that trade up. And that can happen all the time, because you might have a trailing exit that popped you out of the trade before it went another 500 points, or 500 pips or whatever, right? Mm-hmm. You might have a really good system that makes money, but you feel bad. I'll give you an example. Yesterday, I took a trade on my system. I put the orders in and the orders are triggered or not. I was kind of high-fiving myself because I had several days in a row, that were going well. And I was like, yeah, and I saw that it was probably going to click in during Asia. So I'm like, yes, another day, Mm-hmm. And of course, what did it do? It just barely clicked in my 3 orders and then went and then stopped all 3 orders out, right? Made nothing on the day. Mm-hmm. So the worst possible result. other than getting gapped on your stop or whatever. So it was like the worst thing. But I don't look at that and say I did anything wrong. Like all my numbers, everything pointed, the system is a straddle. So it'll take a buy or a sell, but it took a buy in this instance. And I anticipated it was probably going to be a buy, and everything was looking good because from the buy side, I've been making money, and then it just collapsed. But that doesn't, I don't take that personally. You know what I mean? And when I take trades, a lot of my discretionary trading, I have two targets or two ways to get out of a trade. I split it up. One of them has a target and one of them has a trailing exit. So that way I kind of trying to be always right. So if it really goes in my favor, hopefully my trailing exit will make me a big pile of money. If it doesn't go, it just goes a little bit. Hopefully my target will be hit and I'll make a little bit of money, right? And it'll, you know what I mean? So I don't know. I literally, most of the time I look at the charts and I think, I have no idea where the market's going to go. I have a couple of hypotheses. It could go do this and go up. It could do this and go down. It could do this and go nowhere. I have lots of ideas about what could unfold, but I don't have to be married to anyone. So I think this idea that, because you look at the charts and you don't know what's going on, you need to learn more. You need to become an expert. I think that's incorrect. I think that in a lot of ways, and you've talked a lot about this on our podcast here, understanding yourself and humbling yourself and open to new information is really important as a trader. And so I don't think that expert traders necessarily know when to enter and when to exit. They might design rules where to enter and where to exit. That doesn't mean they're always going to feel like those were the perfect rules for every sort of trading environment and every trade that unfolds. Because I certainly don't feel that way. I'm always looking how would this be different? And that's a slippery slope that you can get into, and over, curve fitting and over designing your parameters so that they work really well on the last trade. And we've talked about that as well. But I think the main thing is what you hit on, which is you don't necessarily need to know where the market's going. And you actually don't need to necessarily have perfect entries and exits. You just need to have something that's good enough to extract profits, right? And then you work on the next system, right? You work on another one that's complementary. So one system works really good in trending environments, and the other one works really good in, tight range bound environments and that sort of thing. So I would just caution anyone who thinks that you must know where the market's going to become a profitable or expert trader, and that you must know where the perfect entry and the perfect exit are, because that's not true. It's just not true. You just need good enough. And in fact, getting to good enough is usually the type of strategy that will work in a lot of different markets, right? One of the signs that you're overfitting, you're curve fitting, is that it starts to break down in certain situations, right? Like maybe it works really good on, the Euro USD, but it doesn't work so good on the Aussie CAD. So it could be, now it doesn't necessarily have to be, but it could be that what's happening is you kind of, using the specific moving average or the specific Bollinger Band settings, or, whatever you're using indicator wise on that kind of fits that particular market, the Euro USD, and doesn't work when you're looking at other pairs or the market. So yeah, those are my main thoughts, is that, there's a lot to unpack. It's a very simple challenge that this trader has laid out there, but there's a lot in there, and a lot of sort of deep and dark roads that you can go down and get stuck in for years. I know, because I've done it. Yeah.
Yeah. Same here.
Yeah.
And to extend your idea of you don't need to know where the market is going to go. If you look at hedging, now hedging isn't for everybody, obviously, but our friend Gonzalo, right? He was talking about hedging at the conference, and in that method, you don't need to know where it goes. You just you could close your eyes, enter a trade, and then you would just manage the trade on both sides, right? So I think that's something to consider also, look into that, not necessarily trade it, but look at the concepts behind that and the fact that you really don't need to know exactly when to enter and exit.
Yeah. Yeah. It really frees you up, doesn't it, when you start thinking that way?
Yeah.
That style of trading can really remove you from it kind of removes the ego from the trade, which is interesting. It's a very interesting way to trade, given that so many of us are stuck. Our ego is tied to each individual trade. So it's it's a referendum on how well do you trade every single time you take a trade, what are you going to do here, buddy? Are you going to pull this one out?
Yeah.
But it changes when you start trading, like you say, like Gonzalo. Yeah. Yeah.
Okay, cool. Thanks, Walter.
Right. Yeah.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Your confidence, and you get to that point where you're like, okay, I know what's going on here. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader, and the question is, what's your biggest challenge? And he says, I'm trading a small account and I need to see more profits, more consistent profits. So that's what I need because I'm trading a small account. And the question about if you wave a magic wand, what's the one thing you would change about your trading? He says, I need confirmations before entering a trade. Okay. Mm-hmm. So what are your thoughts about this, unpacking this idea of trading a small account and needing more consistent profits and also needing confirmations before deciding to step into a trade?
Yeah. So reading between the lines, it sounds like he's trying to make a living with a small account. That's what he wants. But just my opinion on that. But even if you have a big account, you still want consistent profits, right? So I think this is a case of somebody who wants to be very sure about the outcome of the trades, and they want like high win rates. So in that case, you'd probably look for like a high win rate trading strategy. And you can never have like 100% confirmation. So you have to, again, go back to your system and lean on those statistics, your win rate, your win versus losses, and all that. And just take it from there, because the more trades you take based on that system, the more profits you'll probably make. So I think that's the way I would slice it. Maybe I'm reading that wrong, but that's the way I see it. What do you think?
Yeah, I think those are really good points. I agree. I think, that thing about the thing that I wish I could change about my trading is that I need confirmations before entering a trade, and then couple that with I need more profits consistently. Yeah, I think this is a confidence thing. I think this trader is looking to add more indicators or more confirmations, more reasons that this trade is going to be, working out for me, because he's feeling under the gun trading a small account. Again, this is all, like you say, this is sort of reading between the lines, trying to figure out what's going on here. But if I had to guess, I would guess that this trader is feeling rather lower confidence because he's under the gun trading the small account, wants to really build it quickly. And so I would caution. First of all, I wouldn't be trading the account. I would be trading demo or even in in a simulator like Forex Tester or something. And I would be trying to, as much as possible, trying to build up your confidence without risking money. And so if you're trading a small account, you might even want to trade with smaller accounts. So once you go through the simulator and build up your confidence, and let's say a small account's like $5,000, he might actually want to trade like a $500 account, 10% of that first, and just get good at executing first. As you know, and most traders probably know listening to this, when you're deciding about a strategy, you end up usually on one end of the scale or the other. On the one end of the scale is you have really high win rate, but lower reward risk ratio, which means you got to execute really well or you screw it up. Your execution, the wiggle room for execution is really tight. And if you get slipped by your broker or anything like that, you're going to be screwed. And so and think about it in terms of like, if you had a strategy where you were buying and taking 5 pip profits, right? It's real easy to see the market go 5 pips in your favor, right? It's really easy to accumulate those. But as soon as you get slipped, or as soon as the market goes hard against you and stops you out at, a 25 pip loss, you've lost 5 winners then, right? So that's kind of the one end. And the other end is you have the lower win rate, but you have a higher reward risk ratio. There's a little bit more room to kind of screw up on your entries and exits. And the broker can't do so much to screw you over on these sorts of strategies typically. So it's a little bit, quote, easier to deal with in the execution of it. The problem is psychologically, it's damaging when you have a 20% win rate. And you know that chances are 4 out of the next 5 trades you take are going to be losers. That's kind of where you are. Now, I know people will write in and say, well, I have this strategy that's, it's got an 85% win rate and a 10-1. I'm like, yeah, that's true. But those trade like once every 5 years, right? There are those strategies out there. They totally exist. I've seen them. I've traded them, but they literally trade once in a blue moon. So, okay, fine. Good luck with that. You know what I mean? I mean, good luck. I'll see you when you're 100. See how you've done with your 5 trades, Yeah. So, but anyway, the point is, I think that's exactly what's going on. I think you've clued into it too. I think it's this idea of, I'm really under the gun trying to make a living on this small account. And so I need more confirmations so that I can get my win rate up. And I think that's the wrong way to do it. I think you need to build your confidence organically by getting trades under your belt and understanding that any given trade is just a crapshoot. It's a coin flip. It's a loss or it's a win. It has nothing to do with you or the number of indicators that you slap on your chart before you decide to take the trade. It really doesn't matter. So yeah, that's what I would do. I would focus more on building up your confidence. And I know this is not what a lot of people want to hear, but it really is. It's work, just like any other job. You build up your confidence and you get to that point where you're like, okay, I know what's going on here. I have confidence that, my 48% win rate is good enough. That's going to work for me. So yeah.
I mean, that's not the sexy answer, but like that's what it is. It is what it is. And I think also if you don't trade your live account or your entire live account, that also gives you opportunity to add more to your account from other sources, like your job, or maybe you take on a side gig or you have a side business or something, and you can build up your account that way while you're testing, while you're doing all this demo trading. And that allows you to have a bigger account later on when you're ready to go.
Yes, exactly. That's right. That's exactly right. Yeah. You kind of want to it's kind of like with like running a race, right? You kind of want to run the half marathon where the second half of the half marathon, you're like gaining speed, You want that negative split, as they say, right? You want that. And it's kind of the same with trading. Like you want to get to that point where right about the time you're on the home stretch and you're going with your live account, you've done all the work. Your confidence is at peak high. You've taken so many hundreds and maybe thousands of trades. You're at that point where you're ready to go live and you're ready. You are confident. You are ready. You understand it's a normal curve of trades. Yeah, we all wish we could have the ones on the long tail that are the big winners, but you know what? That's how it's going to be. Most of the trades are going to end up in the middle of the curve, and that's how it's going to go. And so you kind of want to. It's just like running a good race. You want to be on the home stretches where you really want to be hitting your stride, and that's where you want to be at the point where you're at peak confidence and you're ready to go live and just turn it on, man. Flip the switch. That's what you did all this work for, right? Mm-hmm. Is getting to that point. So yeah, so I would definitely agree with that. Yeah.
Cool. Awesome. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So we have a question here from a trader. Question that came through. The question is, if you could wave a magic wand and change one thing about your trading, what would it be? And this trader, he says, it's really about accepting my losses. Now, I think this is a really interesting concept because the way I look at accepting losses is that what happens sometimes with trading is we believe that our ability as a trader is tied to our win rate, or our value as a trader comes from the last trade we took. And so there's a whole lot of energy that goes into explaining why the last trade didn't work and maybe modifying, our system so that future trades don't end up in the same loser category as the last one and things like that. I think our ego can kind of get mixed in with the strategy, and that can lead to some tricky decisions that probably in most cases shouldn't be made. But I'd be curious to get your thoughts on that. That's kind of my thinking about accepting losses, is that I try my hardest, and I explain this to my trading students. You should be at the point where if you have a losing trade, there's only one reason why that happens, and that's because it was the luck of the draw. It was bad luck. So you flip a coin, it lands on tails, you lose. It lands on heads, you win. And I know that's oversimplifying, but that's basically trading. If you've done everything right, if you've executed exactly as you should, the only reason why you have a loss is bad luck. It shouldn't be anything you did, anything that was wrong about how the way you analyzed the market or the way you did this or that. Nothing to do with you and everything to do with luck. And if you can get to that point, what happens is you kind of remove your ego from it and you just focus on the thing you can control, which is the execution of your strategies. And so I find that to be most freeing. But I'd love to get your thoughts on this idea of how do I start to get to that point where I can accept my losses?
Yeah, I totally agree with you on the ego part. Like that's all it really is, right? Is our ego fighting back and saying, oh, you're wrong, you're dumb, you messed up or whatever. But yeah, like you said, in reality, it's just luck of the draw, playing the numbers, playing the odds. And I think a lot of it also has to do with just getting used to losing, maybe going through Forex Tester or demo trading or whatever, and just kind of like exposing yourself to that and being okay with that, and just kind of doing it over and over and over again so that you get acclimated to it. And I think that's really all it is.
Yeah, it really is, isn't it? I mean, it just comes down to, we feel like in life, so often you feel like if like you're trying to win a race and you don't win the race, right? So what did I do wrong? How can I get faster? Or, you try to get that promotion at work or whatever, and you don't get it. And so you think, well, what could I have done differently? So you're always kind of, as humans, like, think about it. Ants have been making ant hills for, I don't know, thousands of years, millions of years. They've been making these little ant hills, and they're probably pretty much the same. Like the ant hills that were made 2,000 years ago are probably about the same. But as humans, when did we invent the car? Like in the 1800s or late 1800s or something? And look at how far they've changed. Like, we're always thinking of ways to improve things. That's just the way the human mind works. And the same thing happens with trading, isn't it? Where it's like, how can I make this system better? How can I make this car better? How can I make this fan better? I mean, we have fans now that don't even have blades on them, right?
Yeah.
It's so crazy how humans are. Like, they're so insane the way that we improve things, and we're constantly looking at ways to make them better. Whereas, if we didn't have so much of that mindset, I think that would kind of help with the idea of, accepting losses and really trying to focus on those things that you can control, which is being the best executor of your trading strategies as possible. So it's one of those spots, and there are many of them in trading, where our instincts or the way that we're built, it kind of goes against what we really need to do in trading. A lot of the basic instincts we have as humans works against us when we're participating in the market. So it's a tricky
I think
thing.
at a certain point you have to say good enough, right? That's good enough. I did everything I could do, and that's the way it's going to be. So let's just move on and not think about it too much.
Yeah, and actually that brings up a good point. I've seen systematic traders who like make automated strategies. They talk about how, like, let's say you run optimization and you go, oh, the best moving average to use for the strategy is the 23 exponential moving average, right? They say you shouldn't use the 23. If that's the best one, you should actually use something close to like the 20 or the 25 or whatever, but don't use the 23, right? And it's kind of this idea of, you want to get used to the idea of using good enough, because whatever was best for that strategy back the last 5 years is not going to be what's the best going forward, right? So you're always going to be chasing, history, so to speak. So yeah, I think it's interesting when you hear systematic traders talk about that, about kind of like what you're saying, like using what is good enough. Like, it's good enough to work, but it's not like the ideal thing, because you're always going to miss on the ideal thing. We don't know how the markets are necessarily going to behave over the next 5 years. Yeah,
that's an interesting concept. So would they go back and test those, or would they just put it in like a live environment?
Yeah. So well, from the books that I've read, right? So what they say is, like, you run the optimization, you go, okay, which one is the most profitable? Oh, it's the 23 moving average. Okay. And then what would the 24 give you? What would the 25? What would the 22 and the 21? And they would look at it like that. And as long as they're all pretty much profitable, I mean, not everyone says it, but some of these guys will say, don't use the optimized one, just use one that's good enough, because you don't know. Like, it's not going to be the 23 the next 5 years. There's just one thing guaranteed. If it worked 5 years on the 23, the best, and that made the highest profit, it won't be the 23 the next 5 years. It might be the 20 or the 26 or something, but it's not going to, you know what I mean? So I just found that an interesting idea, because it kind of forces your brain down that path, right? Of not over optimizing, and of good enough, which is what you said. Like, it kind of clicked that in my mind, like the good enough idea. And I think I try and do that a lot with simple trading strategies. Some people look at my strategy and say, you don't have enough. Like, you're overlooking, you know what I mean? Like, what about, you don't have enough. Like I took the Ichimoku and I stripped like 3/4 of the stuff off the Ichimoku, right? Like, Ichimoku traders have told me, oh, this can't work because, you're not looking at this line and then all that stuff like that. And I'm like, well, I don't know. It works for me. I mean, it's pretty simple. You're just using price crossing over, one line, you know what I mean? So yeah, it's just, if you can get to that point where you're okay with good enough, you're okay with simple, it just, the fewer degrees of freedom you have, the less likely you are to overfit and curve fit and get to the point where you're not you're not really going to have something that works in the future. So yeah.
Yeah, interesting. Yeah, my wife told me a story recently that kind of goes what you're saying right there. She said that I think California has asked if they want to remove the daylight savings time, right? Like about 6 or 7 times. And every time they've said, oh no, let's keep it. And the number one reason was because it's always been that way. So like you're going to wake up 1 hour earlier, 1 hour later, you're going to mess up your whole schedule just because it's always been that way. And I think that's something to consider, like with that Ichimoku example, right? Like just because they've traded it that way the whole time doesn't mean you have to trade it that way. And I think that's something that people should really look into and experiment. And you're just as smart as any of the other traders, so don't sell yourself short.
Yeah, that's so interesting. Yeah, I've seen similar things where they say, like in Quebec, they were voting to become like an independent country or whatever, like a independent from Canada, and they just missed, like 49% voted yes, right? But 51% are like, we've always been part of Canada, so even though we speak, I mean, everyone's supposed to learn French in Canada, but it's kind of, and in Australia it was the same. Like Australia was going to vote to be a republic, and everyone thought it was going to pass, right? Like all the polls said, I mean, this was years and years and years ago, but everyone thought it was going to pass, that they're becoming a republic. Like it was baked in the cake, right? And then when it came time to vote, everyone was like, we've always kind of had the Queen, and we'll stay with the Commonwealth, So it was really it's really interesting, like that momentum for tradition or whatever, where you kind of like, it's always kind of been that. That's the there's a cognitive bias, status quo bias. Yeah, status quo bias. That's what it's called. Where it's like, it's always kind of been this way, right? That's how we always do it. So yeah. So interesting how we get into that. We get into that mindset so easily.
Yeah, and I think it really is in a lot of those cases. It's really a case of that generation has to pass away, and the next generation has to make the change. Otherwise, there's just too many people who are in that camp, right? And I think in our own minds, we should be aware of that. How are we giving into that tradition bias or whatever it is?
Yeah, I think, that's a good point. Like, I think eventually, like how on your phone, you can choose different rings on your phone. And that ring that's like the old phone that was like the old ring, like that'll eventually go away, right? Because there'll be no one alive that knows what that means. So all the phones are going to have all these jazzy ching, 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 all these rings that sound like that, and there'll be no more option for the ring because nobody even knows what that what is that? Yeah, it's funny. All right, Hugh, thanks.
All right, cool. Thanks, Walter. See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh. Sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter. What are some good day trading psychology tips? The psychology with day trading is quite a bit different from other types of trading. So what do you think? What makes day traders successful?
Yeah, that's a great question. So I'm working with one right now, and she's pretty good. But there's a couple of things that come to mind. As I see it, taking a step back, and actually Adam Hartley talked a lot about this at our conference in London, where he was talking about trading the lower time frames. And this is the reality, or I believe this is my reality. What I believe about trading is that when you trade at higher time frames, when I say like higher time frames, like 8-hour, 12-hour daily, weekly, you have some advantages. One advantage is you don't have to be really, really spot on with your execution, because generally speaking, you're going to have really wide, like really far profit targets. You're going to be making hundreds of pips in many cases with those higher time frames. So if you get in a pip or two off of the ideal price, or where you quote should have gotten in, you're okay. So the higher time frames make it easier in that sense that you can be a little bit sloppy and still be profitable. If you're trading the lower time frames, that's not the case. If you're trading the lower time frames and you're sloppy, you don't have to be that sloppy to go from profitable to not profitable, right? And same with your broker. Your broker can slip you, and which is typically what we see in the retail world, especially in Forex, where you will be slipped. And when you are slipped, it's just eating away from your profitability, unless you do something to anticipate that or counteract that. So I just want to get that out front. I think it's better for most traders to start with the higher time frames, and if they wish to trade the lower time frames, eventually work their way down there. That is usually the path of least resistance, right? However, the advantage, and Adam talked about this at the conference, is that when you're trading the lower time frames, you actually get instant or near instant feedback. If I'm trading the 5-minute chart, I'm going to know within a half hour whether or not that was a really good trade and how well I did in terms of that trade. That's not the case when you trade the daily, right? It may be weeks before you know. So there's that. And then it's kind of like they say, you know, money amplifies your personality. So if you're like a really greedy, domineering person, and then you have the money, which is basically the power that enables you to be more domineering and more greedy, right? You know what I mean? Kind of amplifies. And that's sort of what goes on in the psychology aspect of trading, I believe, when you're trading a lower time frame. So if you have a problem with revenge trading, in other words, you have a trade and it's a loss, so then you double down on your next trade, take twice the risk to make back, you know, those losses from the previous trade. Those sorts of things, if you're doing that on the lower time frames, because you're getting this instant feedback and you're finding out immediately how good that last decision was, that's really bad. And you don't need me to tell you that. That's a tough thing to do, to overcome. All of those psychological things are going to bubble up, and you're going to have to deal with them right away. The advantage of trading the daily charts or the 8-hour charts is you don't have to deal with those emotions right away. You can actually put it away and say, all right, I will deal with that later. I understand that I have these feelings of revenge trading and all that. So this is a long-winded way of saying the best traders for the lower time frame in terms of psychological makeup, temperament, all this sort of thing, I believe are those people who are extremely self-disciplined. In other words, people who are trained as athletes, make really good people who are collegiate athletes or even professional athletes. It almost doesn't even matter the sport. It could be, you know, what do you call it when they have the bows and arrows?
Archery.
Archery, yeah. Archery, or, you know, running or whatever. It doesn't really matter. If you have that mindset of like you're very, you know, motivated and you're regimented and you have a schedule and things like that. Because one of the problems with trading the 5-minute charts is with Forex, you can trade it all the time, or cryptos, you can trade it 24/7, right? So you're all like, it's always there. So you need to have that specific time where you set aside, okay, this is what I'm going to do. So this is my long-winded way of saying, if you're thinking about trading the lower time frames, you need to be concerned about all of those trading issues you have, because they're going to come up quickly. You're going to have to deal with them. If you are not disciplined and regimented in your approach to your trading, those will come back. Those will hurt you badly. So it's almost always, in my opinion, recommended to start higher and then go down to the lower time frames. It doesn't mean you can't do it. I'm not saying you can't do it. I'm just saying it's easier if you get the fundamentals down and then, you know, on the daily chart, and then work your way down to the 1 hour and the 15-minute and so forth, right? And that's what we've seen over and over again. You know, it takes a special type of person who's highly disciplined and self-motivated and regimented who will do that. And that includes taking breaks. Because it's so psychologically exhausting, it means that you need to have time off. Like I've talked many times about the couple I know in Spain, and they take the summers off, right? So they trade the 1-minute Euro chart every morning in their own little offices in their house, and they do it for 3 hours every London Open. And then at 11 o'clock London time, which is not the same, I think Spain actually is on a different time zone, whatever, it doesn't matter. The point is, and then they go and sail all in the Mediterranean. They go on the sailing all June, July, and August. They are not trading. So they're not trading most of the day. They're trading for 3 hours, and they've got a good 3 months vacation to look forward to every year. And that's the kind of thing I think that makes sense. If you're going to be really intense and trade those lower time frame charts, you need to have some sort of schedule like that, where you have your runs or your walk with your dog, or, you know, your workout at the gym. And you know what I mean? It kind of fits in your schedule. It can't be something that's just always lying around, you know, kind of encouraging you to come over and have a look, you know, sort of thing. That's bad news, right? So those are my thoughts. What are your thoughts on it?
Yeah, I agree. I would add one thing. Another thing I noticed is that people who are good at day trading are pretty good usually at not thinking about the past, not dwelling on the past too much, and just going forward and saying, okay, I didn't do so well that day, but today's a new day and I'm just going to do something. I'm going to do my best again. So I think that's another thing to either cultivate, or if you have that, then that might make you a good day trader. But I think a lot of times it can be easy to get really wrapped up in your trades, wrapped up in losses, wrapped up in trying to make a lot of money quickly. So I think that's another thing to look at. Just, if you're not the type of person who can really let go of things easily, then maybe day trading is not for you. Like you said, start on the higher time frames and then kind of work your way down until you get to a point that's really comfortable.
That's a great point. What you said reminded me of, there's a guy named Peyton Manning, which people may not know outside of the US, but he's like a famous American football player. And he said that what he learned from his dad, who was also a pretty famous American football player, was that he had to reset after every play. And I think it's exactly what you're talking about. Like he said, you have a bad play, where you throw an interception, which is when you throw the ball to the other team. He said it was always about going back to the sideline and resetting, right? And if you look at the really good Olympic athletes as well, like the divers, that do the spins and stuff in the air and the twists and all that, that's the same thing. Like if they have a bad dive, they completely reset. They let go of that and it's over because there's nothing they can do about it. The judges have scored it and they're on to their next dive. So in another 15, 20 minutes or whatever, they'll be their turn to do the next dive. And it's all about the reset. So I think that's a really good point. People forget, you can't do anything about what's happened, right? You can't, there's nothing to do. It's done. It's sealed. So all you can do is put all of your energy, focus, and attention on the next decision that you have to make, the next execution that you have to make. That's where you have your power. Your power is always on the next trade. It's never on the trade that's been completed. Now, an open trade's a different idea, right? Like an open trade, you still have a bit of like, you know what I mean? But when it's done and it's locked in and it's a loss or a win or a break even or whatever, that's it. There's nothing you can do about it. And that's, you're right. A lot of the big problems that come up for traders is the fact that we're always kind of tweaking based on what happened in the last couple trades or the last trade in particular. So yeah, so the reset, I think that mentality of the reset is key. That's a really good point. Yeah.
Yeah, I think basketball players are probably the best at that, right? You watch like Steph Curry or LeBron or whatever, they'll miss like 5 shots in a row and then they'll still keep coming back and then they'll hit like, 5 more in a row. So
yeah, that's how, that's how I was testing a system last year. I'm still testing it. And when I started testing it on a live account, small live account, it kind of went up a little bit and then it went down and had a nasty drawdown for like, I don't know, 4 weeks, 5 weeks. And it trades not every day, but 3 times a week. It could trade every day. There's an order every day, but it usually trades about 3 times a week. So, it trades fairly often. And well, for me, it trades fairly often. And what was so interesting was I wasn't even like, because I had done my back testing on it, I wasn't concerned about the drawdown. I mean, I was looking at it, I noticed it definitely, but I did, you know what I mean? I just kept putting the orders in every morning. Put the orders in, and now here we are. Well, now it's up nearly 48% or something like that since November. So November to March, whatever that is, 4 months or something. It's something like that. Yeah, it's about 9% a month, or a little bit better than that. So yeah, I mean, it's pretty crazy that if I had let my emotions run, I would have shut that trade system down after about 5 weeks. I would have said, "Oh, it doesn't work. It's at a 21% drawdown. Blah blah blah. This is terrible. Blah blah blah." But because I just kept chopping wood, keep going, now I can see it's probably going to have a pretty good year. We'll see. I mean, we got ways to go, but I'd be really excited to see what it looks like a year, in next November. This year, when we get to November, which currently as we record this, it's like 8 months away or 7 months away or whatever. I'd be really curious to see where it is in a year. Because I know there's going to be another drawdown. Just because we're at equity highs now doesn't mean we're not going to have another drawdown. We probably will over the next 3 weeks, most likely, But but that's like you say, it's just that mentality. Keep taking shots. And that's what casinos do, right? Casinos don't kick you out of the casino because you won, right? Like if you're not cheating, if you got lucky and you win, they want you to come back. Why do they want you to come back? Because they have the odds in their favor. They know that as long as you keep playing blackjack, you're going to lose, or you keep playing roulette or whatever you won on. They want as many of your plays as possible, because the more plays you give them, the more likely it is that they win your money. That's why you get free tickets to the casino, right? Free suites and stuff like that. So Yeah, it's the exact same thing, and it's a great way to look at it. So I really think if we can just make that mindset as traders, a lot of good comes out of that. So
Yeah, totally. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Nobody's going to be perfect. Nobody's going to be exact. But I think, it's good to take in these ideas and see how they fit in your paradigm. And
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
hey, Walter, this is kind of a philosophical question, but I think it fits in with psychology. I think Jung and a lot of other psychologists, they thought that there were probably like 3 parts to the human mind, right? What do you think about that and how that applies to trading?
Okay, so I may say something that's going to be kind of weird, but I think that all sciences are fairly new, I would argue. And psychology in particular is extremely new in a sense. Like, think about quantum computers. How long have quantum computers been around for? Not very long, right?
Mm-hmm.
So they're in their infancy. We don't really know much about them. Like they found things like this is crazy, right? The reason why they go to great lengths to put these quantum computers in these cases and put them in at such a cold temperature is because they've literally, now this is going to sound really woo-woo to people, but they found people walking by the quantum computer impacts the processing going on the quantum computers. So they're like, they don't look at it like it's the consciousness of the person, but it could be, right? So the reason I bring that up is there are so many things we don't know. For example, in quantum computers, because they're so new, we just started using them. Same thing I would argue in psychology. I would argue that what typically happens in a field like psychology, which is fairly complex, and even neuropsychology or neuroscience, what we typically will do is we will rely on the dominant technology of the time to make analogies. So Freud was relying on the steam engine when he talked about the mind and how, if you think of the id and the ego and the superego and all that, right? Mm-hmm. He was relying on like steam engines and things building up and then exploding and stuff. And then what you found, like, for example, in the 80s and 90s, is you had these cognitive psychologists and they're all using the computer analogy because that's the dominant thing, right? And so I believe all of that stuff in the theoretical area of science, and I would even argue physics as well, but I don't want to go down that rabbit hole because that's a totally different. But let's just stick to psychology because that's what we're on, right? I believe that we as humans will rely on whatever the dominant thing is at the time to kind of explain things and make them fit into little boxes and make analogies. And so we can think of them more easily that way. I'm not saying it's wrong. I'm just saying it changes, right? So all those things that like Jung and Freud came up with back then, they're kind of in the context of that day. It made sense. Just as if you talk to people who are studying memory or studied memory in the 90s and the 80s, they talked about, like RAM of a computer and RAM in your brain, sort of. They made the analogy of short-term memory and long-term memory, which is kind of what your computer has. It has a hard drive for long-term memory, has the RAM. Is it the RAM? Yeah, RAM for short-term memory. You know what I mean? So, like, look, I'm not here to knock anybody. I am no theoretical psychologist or anything like that. I'm just saying I think that these things are dated and it can figure out. It's kind of like when you read the Bible or whatever, or a translation of the Bible, you can see the influences of the culture of the time, during that translation. And I think it's the exact same thing in science. All these people are coming up with theories, which we need these people. They're smart people. They're doing great service to science and all that. I'm not knocking them. I'm just saying I think that the utility of their approach is probably at its highest at the time and period when they came up with it. And then later on in time, it kind of degrades and isn't as useful for us. That's my opinion. So, I mean, I know some people they're going to disagree with that and they're going to think you're crazy or whatever. But my opinion is that that's where we need to interpret their theories, is in the context of their day, of their time. Yeah. What are your thoughts on that?
I agree. I think that, well, the way I look at it is, as far as I can tell, there's two parts to the mind. There's the conscious and the subconscious. Like there's the parts that we can change consciously and we can do something about on a daily basis. And there's some stuff down there that I don't know where that comes from. I don't know how to change it sometimes. And, you know, it does affect my behavior in certain situations, right? So in practical terms, that's how I see the mind. Like you said, I also believe that a lot of these things are popular, you know, memes, if you will, of the day. And they come from people who have some theories. I think, you know, Freud was, in my opinion, not that I know a whole lot about psychology, but in my opinion, he was pretty off about most things, right? By the same token, I think that Jung was pretty on about most things, but like nobody's going to be perfect. Nobody's going to be exact. But I think, you know, it's good to take in these ideas and see how they fit in your paradigm. And my paradigm is like very simple, but, you know, I think that that's just something to consider. And in a trading context, I think that being able to understand, okay, there are some stuff in my conscious mind that I can control pretty consciously. And there's some stuff that I can't control that I might need to work on by some other means, you know, hypnosis or whatever, right? And I think that that's kind of where I stand on that. And that could change, obviously, but you know, that's what I think.
No, I think you probably bring up the most important point, like in terms of Freud, like his contribution, this idea of the subconscious, right?
Mm-hmm.
I think that's really, really cool. I think that, you know, with modern technology, for example, so we have studies where, one of my favorite studies, we have studies where people are shown, okay, so you go into the lab, you sign your life away and say you're going to do the experiment. You sit there in front of the computer, right? I think they might have some that have goggles, but I think this one I'm talking about is just the screen, right? So what happens is they actually show you slideshows, right? Like images, photographs. And some of them are disturbing, like maybe like a dead bird or something, or someone who has like a really damaged arm, right? Like a cut arm or something, right? So they're sharing, and then some of them are nice, like butterflies and bunny rabbits. Okay. So, and what they found was because what they were doing is they're recording the reaction on the eye and probably the galvanic skin and all this stuff, right? So they got these physiological, and what they found is fascinating is that before the really gruesome images that were shown, the people would actually react before they were shown the image. So they would have a guttural reaction to the disturbing view of the guy with the arm chopped off, or what, you know, whatever it was, like something nasty. And that would happen before they was actually shown. So, you know, these sorts of things like this, when you get into the woo-woo world, it's kind of like, whoa, you know, I mean, there are psychologists that will talk that away, just like people will talk away near-death experiences, and they'll come up with all these, you know, in my opinion, you know, Occam's razor doesn't apply when you start talking about these things, because they start coming up with these really convoluted ways of, you know, explaining away when I mean, you know what I mean? Where it's not Occam's razor anymore. You know, Occam's razor in this study would be, okay, we have some sort of pre-stimuli awareness. In other words, we know what's precognition. We know what's going to happen and be presented to us before it happens. And so it's just fascinating that when you get into that area. So yeah, so I think long-winded way of saying I agree with what you're saying about Freud. Like Freud is, you can study psychology for decades and never really learn much about Freud, right? But there are people that spend their whole life in the neo-Freudian, you know, area of psychology, and you know what I mean, like all of that. So I mean, it depends on where you're at, and it's like anything, you know, you can study geology and never ever learn anything about gold or whatever, you know what I mean? Like, yeah. But some people like the, you know, ones that get paid, they know a lot about oil, they know a lot about gold, right? Those are the geologists that are out consulting for the companies, right? I mean, so there's obviously advantages in that. So yeah, so I agree with what you're saying about, you know, that was a giant, massive contribution that Freud made, and Jung kind of took it in his own way, you know, twisted it a bit and stuff like that, which is awesome. And that's great. I encourage people to do that, you know, to think beyond what your contemporaries are thinking. So that's great. But I just love this idea of the unknown. Like there's so much that we don't understand. Like there are people right now, okay, there are neuroscientists right now that think if they can map out all, and I know some of these people, okay, They think if they can map out all of the neurons in the brain, that they can basically duplicate consciousness, that consciousness arises from the neural network, right, of the neuron. Like, you know what I mean? Like, that's the thought, is that once we get this, we'll understand it. We got it. We just, it's like the DNA. When we map out the human genome and all that, we'll know exactly where all the diseases come from. We'll know what you're going to get and all that. And they're like, okay, no, wait, now it's epigenetics. Okay, so environment does have an impact. All right, darn, we missed on that one. Sort of that sort of thing. So I really think, there are so many things we don't understand, and this idea of the brain being like a receiver and receiving this precognitive information that you're about to see a really nasty picture of a dead bird, right? You know what I mean? Like, that's amazing to me. I just think it's really cool that there are still lots of things to be discovered. And as traders, bringing it back to us as traders, that means that, we shouldn't necessarily throw away something if it's a little bit outside what, you seems to be obvious, right? Like, obviously there's no such thing as, psychics or precognition, because if there were, they'd go and claim that $1 million reward that the amazing Randy has offered for anyone that can, prove that they're a psychic or whatever. You know what I mean? Like, so there's a lot to unpack there. And I think the deeper you get into it, the more you can find your little niche and find your edge, psychologically, in the area of psychology or research that you think will best apply for you. So that's what's great about science. There's these wide ranges of areas that we can go into.
Yeah, totally. And I think, it's all a matter of like what makes sense to you, what works for you, right, is the main thing. And on that topic of psychic abilities, what's his name? Ingo Swann.
Yeah,
he was one of the famous psychics for the government, right, in those CIA tests or whatever. And I read his book, and he said something really interesting. He said, if psychics can see the future, that must mean that it has already happened. If you think about that one, I was like, okay, that's possible. Like, how can you see something if it's not there already? So just something to chew on, right? Something to think about.
Right. But then some people will say, well, there's parallel futures, like it could go this way or it could go that way or whatever, right?
Yeah.
So I always thought, like, if that's true, like the people that argue that, I always thought, if it's true that there's a multiverse and there's all these different branches of where we could go, then what are they seeing? Do you know what I mean? When they're seeing the future, which one are they seeing? A particular one, the most likely one? Are they just seeing the general outcomes that most of the branches, end up over in this area? Like, I always kind of try to, are they seeing like the mass conscious, like what most people are going to experience? Like, I always try to think what is it exactly they're seeing? Like Ingo Swann. I just I find that fascinating too. Like, if what they're saying is true, and that they're seeing the future, and if it's true, as he said, that that it's already happened, then does that mean there's no free will? Like, we're always going to make the same, like, you know what I mean? Or is there free will, but we end up in the same place? Do you know what I mean? Like, it's weird.
Yeah, I know. I think it's really, from what I've seen at least, like, it appears to be, well, it depends on the skill of the reader first, right? Like, what's their skill? Are they just making stuff up in their mind, or is it something that's actually coming through? Another thing I think is they generally seem to see the highest probability outcome. But then there also appears to be certain events that will happen. Like, you have a lot of free will, but there are these like landmark events that will happen for some reason or another. I don't know. That's the way I see it at the moment, but who knows, right?
Yeah. That to me makes sense. Yeah, that to me makes sense, that you would have, that they would see like the main big picture events, right? And then all the stuff that kind of supporting stuff that gets you there is kind of irrelevant, or they can't really, they can't pull that in or whatever. But yeah, it's, the whole thing is fascinating.
Yeah. And I guess it comes down to also what you do with that, right? It's going to happen. What are you going to do after that? And same with trading. Like, the trade's going to work out this way or the other way. What are you going to do? So
exactly. Yeah.
All right. Cool. Yeah. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
The longer your view, the better off you are, I think, as a trader. I really believe that. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question from a trader, and this trader is currently making money, wants to make money faster. He's trading real money for a couple years, and his big issue, his big challenge is, I have a difficult time accepting losses. So what would you suggest for our trader buddy here who has a difficult time accepting losses?
That's an interesting one, huh? Right off the top of my head, I would think that maybe that part about trying to make money faster is what's causing him to not accept the losses easily. Maybe he thinks that he should do better, or that would be another thing. Like maybe he thinks he should do better. Maybe like there's a perfectionist kind of syndrome also. So those two separate things. So maybe the first thing would be to consider how you could get a bigger account, maybe get an investor, get some family money or something like that, and just try to scale up that way instead of beating yourself up so much on the losses. And then if it is a perfectionist type thing, then there would have to be some exercises that you do around being okay with those losses, being okay with those losses actually contributing to your gains. That's what I would say off the top. What do you think?
Yeah. I mean, I like thinking in the long, like trying to bring it to the long view, the casino, and so that you don't really put any specific importance on any given loss. Because, just as the casino doesn't really care that in the last 5 minutes, they lost 25 million, so let's say on the floors of the casino in the last 5 minutes, but they know, given that all the odds are in their favor, by the end of the hour, they'll be back up again or whatever, right? Like that's kind of, you can't control the outcome. So I can flip. Okay. So I can flip the coin. And I can say, hey, Hugh, do you think it's going to be heads or tails? And you can choose heads or tails. But that doesn't mean that you're going to win, that you're going to be right? You can even choose the coin. I can say, Hugh, I got this old Roman coin. I got the Australian 20-cent piece. I got I've got the Kennedy $50. Is it a $50? Yeah, $50. I have all these coins, right? Which one do you want to flip? It's totally up to you. Which one do you want heads or tails? You can have either one. I don't care. I'll take the other side. So, it kind of feels like we have some control over that by you choosing the coin and you choosing whether you get heads or tails, and I don't get to choose that. But the reality is it's still a 50-50 proposition. Not all trading systems are. And with the casinos, they have such a slight edge. They just want to push as much money through their tables and their machines as possible, because they know they're going to skim that little bit off of it, right? Which is what pays for all the lights and all the staff and all the free drinks and the shows and the restaurants and the, you know what I mean? Like the convention center and the pillows and the maids and everything, like that little bit, right? And so it's the longer your view, the better off you are, I think, as a trader. I really believe that. You can just sit there and go, look, here's my edge. Here's how much money I want to push through this month, this year, this decade. And here's what I think is probably going to happen. You never know what's going to happen. There's no guarantees, but that's what you want to get to, that point where you're just focused on the execution. You reward yourself for executing correctly. You do not reward yourself for getting lucky on the last trade. That's not under your control, right? It's just not. That's a function of the win rate and your execution. So as long as you're executing as you should, that win rate should settle down, and you should know within about 100 to 150 trades, you're probably going to know what your win rate is. Like it ain't going to move much from that. And if it does, then you got to decide, what's going on here. Is it really broken, or am I just in an unlucky streak? But yeah, that's what I would say. I would say concentrate on what you can control. And if you've ever played the lotto, do you choose the numbers? If you play so you kind of feel like I can choose the numbers. Like I got the control, right? But you really don't. You don't have the control. You might as well just have the computer do it or whatever. So yeah, so it's tricky. It's a tricky thing, isn't it? Yeah.
Yeah, it is. Cool. All right. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Look into resilience, and I would look into positive psychology. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader about recognizing different types of markets. So this trader says, I'd like to know when the market is trading in a range and trade it like one instead of pretending it's going to break out into a trend, which when it does, it's a fake. Boom, I take a loss. Or to recognize a trend and then get in at the right time instead of at the end when, you guessed it, it's another trading range. And also to hold on to a winning trend without panicking and selling out and getting back in and repeat. so this trader is obviously frustrated. We've all been there, right?
All been there, yeah.
Yeah. So I have a lot of thoughts on this, but what's your impression, or what do you think is going on here?
Yeah, two things come to mind. Number one is like maybe you got to work on a little bit of patience. I think a lot of people try to pick a range or a trend in the early stages, and it could go either way. So I think you have to learn how to identify that. And then number two would be identifying it. So either wait for the range to develop or use an indicators or something like that will give you a good idea that you are in a trend if you have a hard time spotting it, just with a naked chart. So you could do like multiple, like 3, 4, 5 indicators to show you that, when they're stacked up correctly, that'll show you that, you're probably in a trend, and that's a good place that you can look for some trades. I don't know. What do you think?
Yeah, certainly there's like the mechanical side of it. I agree. Like there's a lot that you could identify as, okay, this is how I'm going to trade. I'm going to wait until this happens if it's trending to identify that it's a pullback and define it as a pullback and all that, right? Mm-hmm. But the other side of it also is kind of like the mental side of dealing with these sorts of situations, right? I think you could kind of split this question into what do I do mechanically, which is technically on the surface level what this trader is talking about, right? Like, what do I do? I don't know what to do here. It just everything I try kind of like if you ever we actually, when I first started trading, my friend and I, we actually did this. We were like, it was so bad. Well, we tripled the money on the first night or the second night trading the Swissy. And by the Friday, we basically were busted, lost all my money. But then we got some more money scraped together. And we started, like, after this sort of thing kept happening, we started thinking, why don't we just reverse our trades? And I think everyone's been there, right? Where you have this system and you think it's so great, you start trading it and it's like everything goes against you, right? Which is kind of the frustration that's seeping out of this question from this trader. So there's that side of it, like the mechanical side of it. Like, how do I identify a range? How do I identify a trend? How do I know when it's a pullback versus the end of the trend? There's all that part of it, right? But there's also the other side of it, which is like the mental, like, how do I build up resistance or immunity to this sort of thinking where I just feel like everything's going against me? You know what I mean? Mm-hmm. That's kind of how I see this, is like, yes, okay, fine. If you want to do the mechanical stuff, my favorite thing is to just look at what people think. So if you find on the dark internet, these not really on the dark web, but in little corners of the internet, you'll find brokers that actually tell you what percentage of traders are long or short different markets, right? And I find that to be extremely useful information for identifying the strength of a trend. I use it as a proxy of trend strength. In other words, when all of these traders are going long, I want to be short, and vice versa, right? Mm-hmm. So I use that as a proxy. But that's, the mechanical. You can look at, patterns, and are the candles getting really small and wicky and closing near the middle? Okay, that's probably a pullback, right? Are the candles really big and giant? Then that's obviously the trend push. So you got to wait for another little pullback, right? And pullbacks come in all different types, shapes, and sizes, and all that. But to me, the more interesting aspect of this question is, what do I do? Like, I feel like everything's going wrong. What do I do? You know what I mean? And we've all been there. Like I said, my friend and I, we literally when I first started trading currencies, we literally we're trying to map out a plan. Like, how can we take our system and then instead of taking the trade, just reverse it because everything's
Turn your
going
chart
against.
upside down, right?
Yeah, exactly. Yeah. Actually, and I know a guy who did that. He invited traders to trade for his fund, and they traded on demo to qualify, and they weren't trading on demo. They were trading on live accounts, and he flipped their trades. So, I mean, and they made money for him. And he was like, man, the most difficult thing was just trying to get those traders to keep trying to qualify because I was losing my best traders, because he was, it's just crazy. But anyway, the point is, I think you need to build up some resilience. So this sort of thing is going to be rooted in two areas. So there's the feeling, emotional part of it, and there's the logical. You can build up your logical confidence by doing testing, right? Lots of testing, get your data, get your numbers, and okay, typically, I have a 48% win rate. So what does that mean? Well, any given trade is actually slightly more likely to be a loss than a win, right? So you can couch it in sort of statistics and logical mind. And then the other side of it is building up your feelings that you're going to be successful and actually, going, hang on. So I feel like every time I take a trend trade, the trend is over. Is that actually the truth? Can I look at the numbers and see, is that true? Is it always the case that when I get into a trend, a pullback on a trend that it fizzles out? Well, actually, no, it's not really. If I look at my numbers, right? And how many of these winning trend trades do I really need? Maybe you have a strategy that has a lower win rate, but once or twice a year, the trends are so strong and so significant that makes up for all of your losses that you've had the last 6 months, and you end up in the black, right? There are a lot of trend traders that trade that way. There are a lot of professional traders. There are a lot of funds that trade that way, where they literally have months and months and months, even years, where they're down 20%, down 12%, down 8%. And then 1 year, boom, they're up 600%. They're up 300%. That's normal for trend trading, right? So I would look into resilience and I would look into positive psychology. There's a whole wealth of information there for building up your resistance to these emotional, I think resilience is really important for traders, one of the overlooked things. And so if I were this trader, I would be working on my resilience and certainly, building out a strategy. Like we said, all that stuff can be done. And, getting your stats and your numbers and all that, that's great. But the part of it, I think that's probably going to be most useful. Here's an example. Actually, I was talking to a trader the other day and she was explaining this. And it's a really good a really good analogy, because we were talking about resilience and she was saying, I've learned that I imagine that she's driving her car and the windshield, it's raining. Okay. And so all these raindrops are hitting her windscreen. And so these are issues that come up. So these could be problems in your trading, problem trades, difficulties in your life, right? There are these little drops that hit your windscreen, and then you are the wipers. You just wipe them away. just let them go, let them fall out. And while it might seem like it's overwhelming when it's raining, it's all just a bunch of little tiny individual drops that you can just wipe away and let them go. You can leave them there on your windscreen as long as you want, but you're also able to flip on the wipers and flick it away, right? So, I mean, it's kind of an interesting way to see these little issues that creep up that we all have. And particularly when you're in this sort of stage of your trading where you're thinking, geez, nothing's going right. It can be really difficult. I understand.
Yeah, I would also, one thing that came up when you're saying that is that I would also look into your previous programming, right? From anywhere from when you were born until right now, and kind of look at your thought patterns, because the way that you were talking, or the way this trader is talking, sounds like a friend I have, and the way I used to talk before. So I always had this mentality that things are going to go wrong, right? Things are not going to work out. So at a certain point, I would just give up and stop trying. It could be this trader psychology, I don't know, but I would invite you to look at that, and like you say, look at specific situations where you did succeed and things did work out, and kind of build on that, right? And not dwell on what went wrong, but look for a solution instead. Yeah,
it's true. And it's so easy to get into the catastrophizing mindset where one little thing goes wrong, and then you build up this illogical chain about why everything's going to go wrong, right? And that's something you got to guard against. And there are antidotes for that. They're just simple ways of rephrasing things. Going, okay, yes, I've had 5 losing trades in a row. Have I ever had 5 losing trades in a row in my testing before? Yes. Okay, fine. What happened after that? Well, it tend to be a big winner after that. Okay, all right. So could this just be normal, everyday trading for my trend trading strategy? Yeah, it could be. So you just kind of talk yourself off the ledge sort of thing and get back to a more logical reasoning, because it's so easy to get into that really negative state when things aren't going well. And I understand it. We've all been there. Like, we're not like making fun of this trader. And one of the reasons why we don't mention names is because we don't want people to think that we're not poking fun at them. We're just kind of digging into the question and saying, well, is this really the question? I guess you could at one level say that's the surface question, but really I think it comes down to exactly what you're saying. You know what I mean? You've got to be really strong psychologically to withstand. I mean, that's trading. That's the game. The fact is, for every trader that ends up trading well and going into like decades of trading, there's lots of traders that gave up along the way, right? The way I look at those traders is they didn't have the resilience to continue trading long enough to the point where they made it to the other side, right? It's really more of a survival of the fittest sort of thing, or who keeps at it the longest gets to the point where it's worked. And though it's so easy to just drop off and go, oh, I'm going to go sell multi-level vitamins or whatever, you know what I mean? Like, it really is. Yeah. So, yeah.
I don't want anybody to think that we're, talking bad about anybody or anything like that.
No.
There's plenty of times where I've asked a question and I didn't know this at the time, but I realized, oh, that's not what I really wanted to know. I was asking some sort of surface level thing and the real answer was deeper. And sometimes I heard they told me the deeper answer, but it didn't register because I thought it didn't answer the surface level question. So we're trying to get deeper in this and hopefully help more people that way.
Yeah, exactly. Yeah, that's right.
All right, cool. Thanks, Walter.
See ya.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
A lot of people who don't succeed in trading, some of them don't want to face the issues that they have.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I'm surprised we haven't covered this before, but if somebody's brand new to trading, let's do like a episode on trading psychology for beginners. So like somebody's brand new to trading, what are some of the first things that you think people need to know about trading psychology?
Well, that your savior is not your system. So when you first start trading, it's more of a treasure hunt. It's if I find this treasure, then I win the game. And then the longer you trade, the more you realize, if I understand myself, then I win the game. So it completely changes. You go from external, like looking for the treasure and hunting for the perfect strategy or strategies, to in the end, you end up trying to figure out, okay, how am I going to deal with myself? How am I going to figure out what's wrong with the way that I'm approaching this? How do I change things so that I am better able to do it? All becomes more of a self-discovery. So that's what I would say, is that in trading, we initially look to the outside, particularly the system, to save us. And then later on, as we trade for years and years, we understand it's really the system. It's like, okay, this is probably a bad analogy, but like, a beauty pageant, right? And and they have the swimsuit and the, evening gown and whatever. Does it really matter which evening gown they're wearing? Are they like, is that contestant going to win because she's wearing the most beautiful dress or whatever, or the best dress for her, physique? No, like it's going to be the whole, like the interview, the evening gown, the swimsuit. It's all that stuff, right? That's all summed up. And it's the same thing with trading. Yeah, sure, the system is important. You got to have a good one, especially one that you believe in that fits with what you believe. But that's not going to make your day. Like that's not going to end up. I can tell you right now, like the reason why someone who's a brilliant trader can share with you exactly what he's doing or she's doing, and it may not work for you. And that's really because it's what you believe that's so important. So yes, I would just say in a broad sense, in the beginning, we all look for the treasure, and then later on we start to learn it's actually myself. It's how I deal with my own thoughts, my own feelings, how I interact with my own strategies. That's what's going to make me a better trader. That's what's going to help me get to the point where I'm consistently where I'm at, where I want to be as a trader, or at least close. Because a lot of times, you always feel like you can improve. But yeah, so that's what I would say.
Okay, cool. Yeah, just to add on to that, I think that the ultimate payoff in trading is actually like self-development. And a lot of people who don't succeed in trading, some of them don't want to face the issues that they have. So I think that, that's part of the process. And that's ultimately one of the biggest rewards of trading, is figuring out who you are, figuring out how you can use your strengths to do this thing that can help you make a living. And at the same time, just maybe trading's not even for you. So that's also part of the self-development process also, right? But I think that, really facing who you are and what you're made out of, I think is, it's probably the biggest payoff in trading aside from the money. Yeah, I think that's, if you can come to embrace that, I think that trading becomes not only easier, but more fulfilling.
I agree. I think I would even go so far as to say that if I meet a trader who's successful or has been successful up to that point, and they don't have what you're saying, like they don't have that, like you get a sense that they definitely haven't gone down that road. I actually, and I probably shouldn't say this, but I actually think that they're just lucky. And I think that they're eventually going to crumble. Like, you know what I mean?
Yeah.
So it's kind of like if you go into the casino and there's that really brash guy who's going hard at the table, like pushing all his chips in and on whatever, on blackjack or whatever, or craps or whatever game it is. And then he wins and he thinks, oh yeah, I'm so good. Like I'm such a great craps player. Okay. Well, to me, that's exactly what you described. Like if you have a trader who doesn't have that, that they haven't gone down that path of self-discovery, all they've really done is they've gambled really hard and they've been lucky. And later on, what's going to happen is because they haven't gone down that path, they're going to get wiped out. Like, and you don't have to look any further than like, there are a lot of traders out there that have done this. Like Jesse Livermore is one that comes to mind, where you just get to that point where they just blow up, and it's because they're seeing trading as a game, and they got lucky. And the casinos are full of those sorts of people. That's why the casinos invite them back, right? Hey, come and stay at our suite. Like you can stay in the presidential suite. Come on back. We want to see you again. Because they know eventually they're if they keep doing that hardcore crazy risk stuff and they don't know, they have no system, right? They don't know what they're doing. They're going to blow up and give all the money back to the casino. So yeah, so I actually think like, and there are those traders out there who people will fawn over and say that they're so great and all that. But I always think, man, it's a ticking time bomb. Like it's not going to be pretty, sooner or later, if they keep doing what they're doing and they have no clue as to what, about themselves, like they haven't done any sort of digging into who they are and all that. They're just gambling, and they're gambling hard. They're a little bit wild with their bets, and eventually they're going to blow up. So yeah, but that's just me. That's what I.
Yeah, no, I mean, that's not just our opinions, right? It's an actual fact. And you can read books like The Market Wizards. What's the other one? When Super Traders Meet Kryptonite. I think even Millionaire Traders, right, has a few stories like that. So yeah. If you read those books, you can see where these people were, so-called successful. They had fun. They were trading millions of dollars or whatever, and they just blew it out because whatever, they didn't know themselves well enough. So something to be attention to.
Yeah, that's right. Yeah, that's right. Yeah.
All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Who are too scared to risk a lot of money, they never get to that point. But you have the advantage of being at this point now that can literally change your life. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, this question comes from YouTube. So a trader asks, should his trading psychology or mindset be after losing all of his money?
We've talked about this before in other podcasts. The Market Wizards book, they are almost not completely without exception, but nearly without exception. If you read Market Wizards and New Market Wizards by Jack Schwager, we can put the link down in the notes for this. But basically, almost all of those traders, they've been through that. They had a situation where they had too much risk on. They took a loss that either wiped them out or just was too hard for them to process, and they swore that they would never do that again. And so you can use that as a leverage point in your life. You can go, okay, I've done this, I've made this mistake, and I swear to never do it again. It's not the luck of the draw why this happened, right? That is not what's the luck of the draw. The luck of the draw is when you give your money to a broker and the broker runs off with the money and you never see it again. Okay, that's luck of the draw, right? But what you did was poor risk management. I mean, there's no way to I mean, I can sugarcoat it, but that's what it is. And so you need to get into risk management. You need to learn about risk, and you need to understand why. Not only did the risk rules that you employed, whether you were aware of them or not, led to that, but you can also see how the risk rules that you employed almost made it a certainty that what happened was what was going to happen. And I can link up the risk calculator if you guys are interested. You have to understand your strategies and have some statistics on them, the basic ones like average win and average loss and the win rate. But if you have all that, you can plug it into the risk calculator that we can put in the notes for this. Go there, watch the video. It's a short video, shows you how to use it. But that will give you an idea of how these odds play out, right? Because that's what you're doing. You're playing a game that you don't understand the odds to. That's the only reason why you would lose all your money. And I raise my hand as someone who's done this many, many times. Okay. I did this for over 4 years. I screwed up and did these sorts of things, these crazy things, because I didn't understand. Embarrassingly, I had a graduate minor in statistics, and I didn't understand what I was doing. So I am the poster boy for idiocy, right? So it's not about how much confidence you have in a trade. That's irrelevant to how much you should risk. In fact, some of the market wizards, there was an interview in there where one of them says, he goes, I don't think that you should have a graduated level of risk. Like it should either be all like a full risk for this trade because it's worthy, or none, right? So there are traders who will argue that like, oh, well, if it's this kind of trade, you could risk this much. If it's this kind of trade, you risk this much and all that. And he makes a good case, I think, I can't remember who it was, but he makes a good case for, either on or off, sort of binary and when it comes to trading. Anyway, so that's what I would say. That's my spiel, is that that what happened to you was not only likely, but probably nearly inevitable. That you were employing risk rules that you weren't aware of. So you need to understand what you were doing. And then how do you vow to never do it again? Because if you vow to never do it again and you don't ever do it again, you come from a long line of traders who are very successful, who use that turning point to become successful. That was the seed that a lot of those market wizards planted, and they said, okay, I'm not doing this again. This is awful. Like I borrowed this money from my dad, or all my investors that gave me the money, I blew it up, or all my life savings, I lost 35% of it one day, or whatever it is. That can be literally the point that grows your trading career if you let it and if you understand what happened. So it's a very good opportunity, actually, if you think about it. Like it's one of those things that traders who are too scared to risk a lot of money, they never get to that point. But you have the advantage of being at this point now that can literally change your life if you let it. But you gotta know what to do from here. So that's what I would say.
Yeah. Of the successful traders I've seen, the ones that were successful the fastest actually blew out accounts the fastest also. So it's like that fail faster type of thing, right?
Right. Yeah. So that's what it was. I wasn't blowing up my accounts fast enough.
Yeah. Blow it up now.
Yeah. No. Yeah. Oh man. Yeah. Yeah. I can see that. Yeah.
Yeah. All right, cool. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Nothing to fear in life, right? There is only a finding solution.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a question here from a trader who is asking about, we asked basically what's the thing that you would like to most change about your trading? And he says, I would really love if I could trade without fear. So this trader seems to have a lot of issues with fear. So I have some thoughts on that. So usually what I've noticed in most instances, what you're going to see with most traders is they're either going to be fearful of, they're sort of, if they have like low win rate strategies, they don't want to take the next trade. So they're kind of like shy, like trigger shy, I guess you would say. So they miss signals, or they don't want to take the next signal. So they're fearful of the loss, right? And then there are other traders who basically fear going wild. they have no that's the opposite, right? They take too many trades. They take trades on systems they haven't tested. They just get someone tweets out something and they take a trade based on the tweet or the article that they read at FX Street or something like that, right? Mm-hmm. So, there's those. But I think it basically comes down to the fear. Really, we have fear of the unknown, right? And so that's what I learned from a lawyer. He wrote a book on, there's a guy named Jerry Spence, and he was a defense attorney, and he never lost a case. He's a famous one out in Wyoming. And anyway, so I read his book, and he was talking about how fear tells you that you're like alive, and it really kind of switched it on for me, this idea of embracing the fear, because that's really the unknown. When you have the unknown, which is what we deal with in trading, you deal with probabilities, right? So we don't know there really aren't very many certainties in trading. Even if you have a stop loss and a take profit, it's not certain that you're going to hit either of those, right? Mm-hmm. In theory, it could gap over both, either one of them, really, or it could stay in the range for your entire life, I guess, in theory. But the point is that fear is something that you have when you don't know what to expect. That's what fear is, right? And it's the same with, like, if you go to a country, like let's say you live in a country where the country next to your country, the neighboring country, there's always this conflict with the two countries. And so what happens is you have like these really interesting ideas in your head about what the people are like in the other country, right? Mm-hmm. If you've ever talked to someone in Japan about people in Korea, or people in Korea about people in Japan, you kind of get this idea, right? Like there's this kind of unknown, and it happens all over the world. It could be, I don't know, maybe in Peru and Bolivia, they have the same thing, but wherever there's kind of this conflict of opposing views, right? So, and that's really just the unknown. You don't know what's going on there. So my antidote for this would be to say, you need to get more information. And the best way to do that is to actually practice your strategy. It sounds kind of obvious, but a lot of traders don't practice their strategy. They don't use a simulator where they go in and take the trades as if they were trading live in a live account and gather up that data and get that experience and that sort of stuff. Because the more experience you have with your strategy, the less fearful you are, because what happens over time is the unknowns they shrink down because you've traded the strategy in so many different situations, right? So that's really, I think, what I would say to this trader, but I'd be curious to hear what you think about this. This trader who says, I really, trying to trade without fear.
Yeah, no, I totally agree. And just to take a step back from what you're saying, I think I've noticed that the people who are afraid to trade, generally half the time, I don't know, more than half the time, are trading sizes that are too big for them. So that's why they're afraid to take the trade. So they're going to lose too much money relative to their account, or they're just, like you said, over trading, right? So you want to take a step back and ask yourself, am I risking too much? And then, is that why I'm afraid? And then going forward, I would also invite you to look at things that you're afraid of in your real life. Like, have there been situations where you went to a country and you were afraid because you didn't know what was going on? So like for me, I'm in the US. So if you go down to Mexico, certain parts of Mexico will look kind of sketchy compared to, neighborhoods in the US, right? But they're equally safe. Nothing's going to go wrong there most of the time. But, they do look a little sketchy because they don't have any like paved roads in some areas, and some houses are, run down and there's a nice house next to it. So just look at those kinds of things in your life and see, how can I face some of those fears? And when I did face some of those fears, was it as bad as I thought it was going to be? Because it's tough to say, but like, it's easier said than done. But there's really nothing to fear in life, right? There is only finding solutions, and being afraid of things makes you kind of freeze up and not take action, not look for solutions. So I think that's a good way to kind of back into the fear of trading, is to look at what you're afraid of in your real life, and kind of analyze it from a more distanced and more objective view, and then look at your trading in the same way.
Yeah, it's interesting, isn't it? Because what you were saying about like the neighborhoods, I think you get like these cues. So for example, if you're from, let's say you're from Ohio, all right? And so you learn these cues. Like if you're driving through a neighborhood and, everyone's got like the nice green lawn and they're all mowed nicely, and they've got their SUVs out front and everything, that cue for you is like, this is a safe neighborhood, right? But if you go to that neighborhood where like people are just kind of standing around, not doing much, and there's maybe some rubbish like on the sidewalk and stuff, and it's a bit dirty, some broken down cars or something, cars without wheels or something like that, you start thinking, okay, this doesn't look right. Like this is, you know what I mean? Like we get these, it's like we have these heuristics in life where it's like a mental shortcut. It's like, okay, I see this, so therefore this. And I think it's exactly what you're saying with trading. Like, I have a losing trade now. I've had 2 losing trades now. I've had 3 losing trades now. Okay, I'm trading a system that's going to bankrupt me. I've seen this before, right? Yeah. I'm going to lose my trading account, right? So you kind of get these cues. Yeah. And so the best way to, like what you said, like it's really interesting what you said, that prompted a thought in me about they're just challenges, right? So it's always a challenge. Like when you have a fear of something, it's fearful because it's a challenge and you don't know what the solution is. But what's interesting about that is to choose to be fearful is to actually choose to not accept the challenge. Do you know what I mean? So you're basically saying, I'm scared, I'm not going to look for the solution. You know what I mean? Isn't that interesting? It's and what you said, that kind of prompted that thought in me of yeah, it's true. Oh, everything's a challenge, right? It's not about a problem or a roadblock or this. It's just a challenge. And whether or not you accept that challenge, whether or not you want to look for solutions to that, that's your choice. You can choose to sit there and be fearful, or you can choose to go, okay, this is what it is. How do I overcome this? What do I need to do? Right? So yeah, it's a really good way of reframing it. And that's actually, reframing is just a great way in a lot of things in life to reframe that as a challenge, right? So we sometimes with self-talk, we talk about things and we make them bigger than they are. And instead, oh gosh, I've had 5 losing trades in a row. I'm just going to lose my account like I did last month, and blah, blah, blah. This system isn't going to work, blah, blah, blah. But if you reframe it in terms of, okay, well, what have my stats been? Okay, did my stats look like this? Okay, how many losing trades did I average? Well, it only has a 31% win rate. So I've actually, to have 8, 9 losing trades is not unheard of. So I've only had 5, so just kind of that, giving yourself a different perspective. Sometimes it helps if somebody else can do that for you, which is why, like having a trading accountability partner, someone that you talk to, sometimes they can help you reframe it and see it in a different way too.
Yeah. I think it's also a growth. It's a growing pain basically, right? Like think about when you're 5 years old, you were really scared of cars because they're these big giant things that make a lot of noise. But now like it's a similar thing. Now you're not afraid of them because you know how they work, and you know that they, you just get in them and you go. But it's a similar thing with trading. Like if you're afraid of taking a trade, then you have to grow into not being afraid of taking the trade. So just something to work on.
Yeah, definitely.
All right.
Okay. Thanks.
Walter. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Trader can stop looking at the numbers and enjoy life. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so we have a trader here who's written in a question, and the question is, if you could wave a magic wand and change one thing about your trading, what would it be? And our trader friend here says, I would like to learn to not look at my numbers, to just enjoy trading and living life. I thought this is a really interesting question because, well, this trader I think is fairly experienced. Let me just double check. Yeah, been trading experience, for years and years, right? And this trader is saying, I need to stop looking at my numbers. I just need to enjoy trading and living my life, which is really interesting because there could be like the subtext might be I'm spending too much time, at the computer watching watching price bounce around, right? We've all been there. But you could also read into this as like this trader understands that part of trading is letting go, right? And the idea of controlling what you can control. I'm really big into this. And when I work with some of my coaching students, a lot of what we do is this idea of focus on what you can control, right? So you as a trader, you can control what? Well, you can control if you get into a trade, when, at what price you get into a trade, how much that trade you're going to give it, how much wiggle room. In other words, how far does it go against you before you pull the plug, if at all? How far will it go in your favor before you take profit, right? So you control the amount that you're going to trade, right? And how long, even you could have a time stop, right? How long will you hold on to this trade? So all of those things are under your control. However, what's not under your control is this particular sequence of wins and losses. That happens to be random for everyone. Even if you have a 99% win rate, that is a random sequence for you, right? Your losers will come. And even if you trade martingale, even you can't. That martingale is really, if you think about it, the martingale approach is trying to take the randomness out of trading. Like, I will always win. You know what I mean? And of course, that doesn't work. Yeah. But this is really good. I think this trader is really close because the idea of not looking at your numbers to just enjoy trading. I believe that the easiest way to do this is to focus on your exits and entries and to pay attention to how well you are doing this. So you need to grade yourself on your entries, grade yourself on your exits, possibly even grade yourself on your mid-trade management. So for example, I have a target on every trade and then I have a trailing exit on almost every trade. And so I kind of have that mid-trade management where, when does the trade go to break even sort of thing? Is it when the trailing exit gets beyond my entry price? Or is it when I hit the first target? Do I move to break even? You know what I mean? There's kind of a decision I have to make there. So I believe that you should be scoring yourself on your entries and your exits, and you should really gear all of your focus and all of your attention on that. Now, this assumes that you have a system that you've tested, you have the data for it, it's going to work. Or you don't know it's going to work, but you have a pretty good hunch that it would have worked over the last decade or so, and there's no real reason why you would think it would stop working now, right? So that's what I would say about this idea of, just to enjoy trading and living life. Living life could mean that you're just spending too much time in front of the computer, and you can automate your exits. I've done that. You can do things like that, or you can simply trade the higher time frames. But when it comes to looking at the numbers, and it sounds like this trader's like, I just need to learn to let go. The trader understands you need to learn to let go, but how do I do that? And again, I think for me, what I found, and for the traders that I work with, we just put all of our focus on what we control, which is how well are we entering these trades? How well are we exiting these trades? How well are we mid-trade management, sort of thing, right? Which is, like I said, moving to break even or whatever. So what are your thoughts on how this trader can stop looking at the numbers and enjoy life?
Well, I mean, that's the whole point of this, right? So that's a good way to look at things, I guess. A couple of things I've kind of came up for me. One, I'm not sure what numbers they're referring to. So like you said, it could be the trade itself. Maybe you're spending too much time in front of the screen looking at the charts. So Yeah, I mean, like you said, I would say try to automate as much as possible. Try to, you could automate the entry, automate the exit, try to cut down the number of trades that you do maybe, or number of systems. If a system isn't like performing or adding a whole lot of value to your overall portfolio, then maybe cut it out and find something that's a little more time efficient in that sense. If you're talking about you're analyzing your stats too much, like your MFE or your drawdown or your win rate per week or whatever you're doing, then find a way to streamline that. And what's the minimum number of stats that you need to look at? And is there a way that you could automate that? Like have some sort of system that sends you an email or something with your just some basic stats, or just look at your statement once a month or something like that, right? Enjoying life, I think, is the whole point of this. So I think it comes back to the automation ultimately. Like, how do you automate as much as possible and only do the parts that you enjoy doing, right? I don't know, maybe it's the analysis, maybe it's the back testing. So figure out, what do you enjoy? What do you like doing in the trading process, and then try to outsource the rest. Maybe you could hire somebody to do some of your other stuff. And that could be one way to enjoy life more and get your time back.
Yeah, those are all really good options. Yeah. It's funny, isn't it? Like when you first start training, you kind of get sucked into it, like as if you want
to do as much as possible, I think, or something, right?
Yeah. I felt like I was trying to crack the code. I think that's why I was attracted to like GAN and things like that,
Yeah.
And I think that's why GAN is so attractive to new traders. The idea that he's cracked the code sort of thing.
Mm-hmm.
But all the traders I know that are successful today, they have more of this letting go kind of sense. You know what I mean? Like kind of like,
Like what makes sense to me, I think is important. What important thing for me at least, like if it makes sense to me, I'm more likely to figure out a trading strategy around it, as opposed to trying to fit myself into this other mold of GAN or Fibonacci or whatever it is, right?
Yeah. That's why I always cringe when I see traders like on YouTube or whatever say, this is like, if you have this strategy, you've got the golden goose. You know what I mean? Like that's part of that always gets me. Or actually, you can see it in the free factory forums too, where people like say this. And it's interesting because what ends up happening always, if you look at those threads, is someone will post a strategy and like it's like, I got it, and then everyone's like, first the naysayers come in and like, oh, this is crap, how come you didn't add RSI or whatever, something like that. And then then there's like some people that get some attention, like get some traction, and more people kind of look and see what's going on here. And then by the end, like years later, it's only the hardcore that are left, And usually the original poster is long gone.
Yeah.
Somebody else is kind of like a little team of people have taken over, But it often doesn't look like they trade it differently. So the way that the original poster posted it and the way that the people are posting at the end. And so if you come in as a newbie in the thread, you'll be like, hey, how come, what's going on? Oh, we found that, you got to have the smooth RSI and then, everything's good. It's so funny. Like, yeah, it's funny the process that it goes through. But I think that personally traders go through the similar process where you kind of like, you get the strategy, you get really excited about it. And you might even have some success for a while, but eventually there are things about it that you don't mesh with, and you have to either throw it away completely and find something different, or you modify it. That's where you end up usually.
Yeah. And it's funny, you look at those threads, right? Like how many people have actually tested it? I don't know. I've maybe counted 1 or 2 people per thread, and the rest of them are like, oh, I'm just going to do this right now, right?
Absolutely. Yeah. And you can tell by the questions, because they'll say, well, what's the win rate, or what's the, how is it, how profitable, you know what I mean? They're asking questions that they would know if they tested it.
Yeah.
You know what I mean? Like and then they're like, okay, yeah, I'm going to try this. Yeah. It's funny. It's so funny. Yeah. Yeah. Anyway. Yeah. So I think there's a lot that this trader can work with based on what we've talked about here today. So hopefully that helps.
Yeah, but I like to focus on like, trying to live better and live life. That's awesome. All right, thanks, Walter.
Yeah, definitely. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Male sort of characteristic of being like, it's definitely going to work, So So obviously, one way to look at this is to say, well, trading is just probabilities. In the end, there is a probability that your next trade is a winner, and there's a probability that it's a loser, and there may even be a probability that it's a break-even result. But that's what we're dealing with, probabilities. And now, whether you believe the probabilities have changed based on previous trades, that does depend on your strategy, because there could be some interrelationships between, like, for example, in some trend trading strategies, you may be more likely to have a winner after you've just had a winner, right? And that sort of thing. Whereas if you've kind of had win, loss, you may, or loss, you may not be likely to have another winner for a while until the market starts trending again, giving you really good signals. So that could be the case. But I think what's interesting about this is that the emotionally triggered part too. So this trader is recognizing that he is being stubborn, which I believe I had when I was starting trading, because I would move my stop loss. So I had a trade, I put my stop loss in, I take the trade, then the trade goes against me, and I move my stop loss further away because I don't want to be stopped out. Why is that? Because I was emotionally tied to that trade and I was being stubborn. I could have just decided to let the market hit my stop loss. That's what I do today. In fact, I can't remember the last time that I moved my stop loss. I just let it ride. But this trader is saying, he's getting emotionally triggered. That could also lead to things like doubling up on your next trade to make your money back, sort of this almost like a mini martingale trade, right? Or possibly straying from your rules because you're getting really emotional, right? Which, like I said, that's what I would do with my, moving the stop further. So I'd have like a buy trade on the USD CAD, and I remember like I was getting on an airplane, and before I got on the airplane, I moved the stop loss and I landed, and I was like, this was before there was internet on the airlines, and then they're like, oh wow, it moved even more. So then at the airport, I would move my stop even further. It's like, and then you end up taking like 4 trades worth of loss, instead of the original 1 trade loss. So by being stubborn. So what are your thoughts on this trader trying to get away from stubbornness and being emotionally triggered?
Yeah, that's a really good question. Well, first of all, great job identifying that you're stubborn and that you're emotionally triggered. That's key. A lot of people can't figure that out, or they're not willing to accept that. So that's great. That's a great start. On the surface, more surface level stuff, like I think you can, through realization, or just like you're saying, looking at your numbers and rationalization, and just like, not rationalization, but just like through objectively looking at your trading and your numbers, you can say, okay, I shouldn't be stubborn because these numbers, this is what happens. I have like a 20% drawdown or whatever, right? And that's a good place to start. But then if you look at it that way and you're still being stubborn and emotionally triggered, then you have to figure out, where is that emotion coming from? And this is what I've been doing, researching on my own for maybe a good 15 years, and even more so in the past 5 years. And all of the things that you don't like about yourself, or you have issues with, come from some sort of source. And that's going to be, it could be something in your childhood, something in your adulthood, whatever it is. But the reason you're doing these things is because it's protecting you from something. It's protecting you from an emotion that you didn't want to feel in the past. It's protecting you from some sort of getting hurt, right? It doesn't want you to get hurt, so it wants you to be safe. So it's going to protect you by doing this thing. So a good exercise that I found is that you sit down. You can do this with a therapist. You can do it with yourself by just sitting down and meditating, and just feel into that feeling. Like if it's being stubborn, like feel being stubborn, like feel it with your full body and see what comes through. It might not be an event. It might just be a simple fix, or it could be something like in your childhood or something like that. And just see what comes out. Keep asking yourself, why am I being stubborn? Why am I being stubborn? And don't judge yourself for it. Just let whatever comes come, and just see what comes up, and then face it. Just say, okay, that happened, but I choose to move on. And I think that goes for the emotionally triggered part too. Like if there's an emotion that's triggering you, or first face it. And then I think when you face it, a lot of times things will come up, and you'll be able to figure out either where that came from or how to resolve it. But a lot of times these emotions are triggering us because we are stuffing stuff down, and it's not, you're not able to release it. So I would also look at that. There's plenty of things you could do for that, like hypnosis, go see a therapist, meditation, plant medicine, whatever you want to do. But just kind of look at it in that sense, and don't beat yourself up because you're stubborn or you're getting triggered or whatever it is.
Yeah, that's a really good point. Some people may be interested in the trading tribe because it's basically the idea that it's basically what they do. So this idea of like where you're saying like lean into the emotion and feel the emotion. So at the trading tribe, you can find that you can go to Ed. We can put the link in the show notes. You can go to Ed Sequoia's site. So Ed Sequoia was the Market Wizards guy. He was one of the first interviews in there, right? And most people remember the Ed Sequoia interview because it's so unique. Anyway, he's written a few books, one on the trading tribe. I used to go to the trading tribe in my city. Don't go anymore, but it was really interesting because the whole idea is that we have these emotions, but we're not allowed in normal Western life to experience them. Mm-hmm. So you set up you kind of like subconsciously set up these things so that you have these really extraordinary events in your life. So you kind of set up the big argument, or you set up the big trading loss, right? So for traders, you're setting these things up. So what Trading Tribe is, it's a safe place to go to kind of experience these emotions. And you do exactly what you said. You kind of lean into it, and everyone's encouraging you. We don't really talk about trading at Trading Tribe. You just kind of feel it, right? Mm-hmm. So the best way to get information on this, it's not for everyone, because what we noticed at the Trading Tribe was people would come in, they read Ed Sequoia's interview in the Market Wizards, and then they like Googled him or whatever. They found his website and they found these Trading Tribe things. And so they're like, yeah, I want to learn how to trend follow like Ed Sequoia. And then they go to the meeting, and they're like, whoa, I was not expecting that, This
is not about trading.
Yeah, it was like people, yeah, exactly. People bawling their eyes out and stuff, and like, whoa, and they never show up again. That's it. But yeah, so the Trading Tribe book, Ed's book's really good because it explains exactly what you were talking about, kind of in detail. His theory, anyway. It's kind of Freudian, I guess, but the idea is that you need to experience these. If you don't have a place where you can experience these emotions, you will create these emotions in your everyday life. Like they will come up eventually. So yeah, it's kind of exactly what you're saying. It's just a different approach to sort of purging those. And the idea is that if you experience these emotions at the tribe, then there's no longer any reason for you to set yourself up for failure or whatever with your trading, so that you have these terrible emotion out, things, all that kind of stuff. So it's not just related to trading, but it specifically is a group for traders. And many cities around the world have local tribes. You can look that up at the link, sequoia.com, and follow the links there and see where the nearest one is, or if you can start one. They're all free. It's not that, it's just set up for traders. So that might be something to look into too. If you find yourself in that emotionally triggered state, which we all really are to some degree or another, whether we recognize it or not. It's just what do you do about it?
Yeah. And the culture is such that it's surprising how many people repress their feelings, right? Like even just some basic everyday feelings is super repressed. So anywhere you can have a safe space to let that out is, fantastic. All right. Thanks, Walter.
Definitely. Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey everybody, and welcome to another episode of the Trading Lifestyle Podcast. As you can see, it's been a while since I've done one of these, but I'm really excited to talk to Denny because he has this really cool software that's really going to help a lot of traders. So welcome, Denny, and maybe you could tell people a little bit about yourself and what you've been up to.
Yeah, sure. Maybe I can share my screen. Maybe, yeah, sure. I will just select my screen right there. Don't know if you can see it. Yeah, you see it. Perfect. So for the presentation, if you agree, I can we can have some summary about me. I have been a Walter Peters student a while ago now. I'm trading since 2016. I think I started in 2012. It's been a while, so I'm a swing trader. I'm mainly trading the D1 and H4 time frame. I'm manual swing trader, so it's very slow style of trading, but it's my own style. A few years later, I had another website on which I presented my backtesting system, my results publicly, and at this time I had I sold some signals, and the link between this and my software is at some point I needed backtesting software. Backtesting is very, very important. I think you and Walt already a lot of time on your channel, but it's very important for in every activity. You need to train yourself. You need to build confidence during your trading journey. So you have to backtest. This is the only way to improve yourself. You have to test your strategies, your ideas on the markets, and the backtesting software is very useful for that. So I have been trading successfully. However, I needed to find new system with a more trade frequency, with a higher trade frequency. And for that, I looked for some softwares available on the market. However, there were only very limited softwares because I needed to customize my ideas. I need a modular software, and the available solution were not. It was not possible to do it with them. So I wanted to design my own system, my own software, and I came up with an idea. I had to build it myself, but first it was only for me to test, to assess my ideas, and I designed small backtest engine with some interfaces, and I needed for that to be fast and accurate with good quality data, because during the backtest, the data quality is very crucial, because it's the main point of emulating the financial markets. So at some point, I needed a user interface to assess the strengths of my ideas, trading ideas, and to have some statistics. Again, it's crucial experiment when you assess a building system. So I end up with a backtesting software, in fact. So I told myself, if it's useful for me, maybe it can be useful for other traders who want to be traders, who want to test their trading systems. So I came up with the idea maybe of selling it, and right now it's the case. So I used this small software to improve, to add some new features for everybody to be like the average software, backtesting software on the markets. So I had some needs. The first one is to be fast. I know, and I think you know, a lot of backtesting software, and sometimes they can be very slow to load some symbols, to assess, to test, to trade. So I want it to be very fast, because you can have quickly new ideas. So it has to be quick to test. The other point was to be modular, because again, it's important to test easily new ideas and not code, not use some word interfaces or word software. It has to be smooth in the process. I'd like to avoid, again, to save time, avoid the step-by-step time forward. I think you know it too. Just pressing the space bar it's useful, but when you are backtesting tons of system, you lose a lot of time just by pressing spacebar to fast forward. So I needed to be faster than that, and other items like good data. I talked about it, and the efficiency. That's why there is a lot of statistics in the software to assess quickly the trading system. So maybe I can show you some features, but in the software you'll see there is a very common backtesting software features needed, like charting tools, like graphical tools. So yeah, here's naked markets. So it's pretty common backtesting software features. I will show you right now. So you can start a new backtest, and you can select the different symbols. You can select all major, for example. You'll see it's pretty quickly to load all these symbols, and after that you can fast forward. And for that, there are a lot of very simple tool to draw something. So yeah, you can change the time frame, of course. You can it supports the multiple monitors. If you want, you can detach the charts. So it's very basic features, but it's always needed for me and for every user. Of course, some other features, you can manage all the data you want to download. It's important to notice that all the data in the software are free. This is good quality data because it's coming from free and paying sources, but I wanted to be free in this particular software, and it's possible even on the Naked Markets website to download it for free, because it's just data. It's a very simple data. You just need to probe the market all day long, all year long, to have this data. So it's not very expensive to have and to gather, to be very fair and honest. So I don't see why the customer have to pay for this kind of data. So in this feature, you can select, you can update, you can choose your broker if needed. You can update and export data if needed. That's so you have common features like hotkeys to save time. We'll see after the rules, screenshot, yeah. Other stuff, pretty common again. So after that, if you want, you can set orders like a pending or instant order. You have the indicators, of course. I think it's pretty useful for some users. So that's the point, I think. Yeah, some tools for the risk reward assessment. But yeah, it's the common features. But if you agree, I can show you the feature which is very interesting, I think, in this software. It's called the Rule Manager. What is the Rule Manager? The Rule Manager allows the user to define some kind of rules to customize how they enter or exit the market. They can pause the market, they can take some action. For example, if I create a new backtest, we can see on the left, so we're on the AUSD daily chart frame. So we have all these rules here with some example. So maybe as an example, the engulfing buy rule. This is a setup rule. What is a setup rule? A setup rule is a rule containing a condition. Here we can see that we define a condition to be the last bar has to be a bullish one, an engulfing bar 2 engulfing 2 previous candles, and another feature is the bottom void bars. This is the space between the bars we can see here for the bottom. And here the action is to pause the backtest. So an easy test is to drag and drop this rule. We can set here, and automatically it will fast forward, and we can see that the software pause automatically. So it's very interesting to save time during backtesting, because instead of just pressing the spacebar, you can define what you want, like condition on the market to pause. And after that, you can decide if it's good or not to enter or to exit the market, which is the main point to save time with this kind of software. So here, I can, if I want, enter the market manually by setting stop losses or take profit, or I can use the entry rules. What are the entry rules? There are some kind of other kind of rules like that, and we can define a way of entering the market. Here we can set the type of order, buy stop, sell limit, or other thing, and we can see here this buy stop order. We can set the stop loss automatically. This is the low of the last bar. We can see the take profit, which is dynamically calculated, and we can set the lot size automatically or manually if you want. And you can set the expiration delay and the execution price, which is here the high of the bar. So instead of setting manually the order, you can easily just drag and drop. And right now you can see it's pretty easy to see how it's working. So this is one use case, very easy, but you can define a lot of rules. There are a lot of possibilities. I use a simple one, but it's possible. For example, here it's about the entry rules, the way we enter the rules, but we can define the way we exit the market. For that, we can, for example, change this rule, this entry rule. I will remove the take profit. I save the rule. So for example, I'm just there. I can set the order. There are no take profit, but I can see here the exit rules. There are some different kind of rules. The examples here are very simple, but still useful. PSR exit or a 3-bar exit, for example. So first we enter the market. This is done, and we can use the 3-bar exit by rule. What is this rule? We have defined a condition when the order growth is greater than 1. We'll see when the growth is greater than 1%. The action is to modify the order. And in fact, we modify the stop loss to be the lowest value of the last 3 of the previous 3 candles. So it's called the 3-bar exit. We can easily just drag and drop on the instant order. We can see here it's set, and we'll see when here it's not yet to 1%. It's now 1%, and we can see automatically it's set to the lowest value of the 3 previous candles. This is a way of trailing exit, for example. And we can see that. Another quick example just to show you. If I do the same thing, but I use the PSR exit, I will add this indicator to see better. And this rule uses an indicator value, the parabolic SER, and when the input is a 1, in fact, when there is a changing, when the value is upward or backward, there is this value is set to 1 or to -1. So we enter the market just here, yep, and we can use this exit rule. And we will see this is another way to trail the exit. I forgot to mention the action is to close the order when there will be a modification, a change in the PSYCHOLOGY direction. We can see, okay, it's closed automatically because here the movement, the direction of the PSYCHOLOGY has evolved, has changed. So this is the quick example, just to show you how it's possible to customize the rules, but there are so many possibilities. You can here, the setup rules are defined by posing the backtest, but it's possible. For example, another quick example. We'll take here the OZ-D12. So if I use this one, for the action, I can add action, and I can add some condition here. In this one, I used an action to pause the backtest, but I can add an entry rule. Like that, I have a fully automated system. I can show you here. So I'm doing the both here. I will do a pause and setting an entry rule. So we can see here. But if I want, I can remove the pause backtest. I save the rule. And we'll see here we have an automated system. It's not doing very well here for sure because it's just for the demonstration. But it's pretty handy to save time because the backtesting process to build confidence can be can be very time consuming. And I think that's it for the role manager. But an important point is that there are a lot of functions to customize. You can see here to set your condition. You can use some operators. You can have the value of all the prices, the value of the candle or previous candle. You can choose the time frame, and related to the time, you can modify the orders. And there are some price patterns. You can set condition when the candle is bearish, neutral. You can add a lot of things, and it's still in improvement. So the customer can request new features to add some new ideas. You can, for example, an easy maybe I can show you quickly. Here, if I create a new rule, let's say support resistance level. It's pretty easy. We can say for this level here, the last bar, when the last bar will reach support resistance level, in fact, it's just an horizontal line, we will pause the backtest. Okay, it's saved. So right now, if I detach this rule, and I will use this one I just created, and I will put this horizontal line maybe there, an interesting turning point for the price. We'll see it's automatically paused. So it can be pretty handy. We can do the same with the trend line, with the rectangle for the price area, for supply and demand concept. There's a lot of things to do, and you can use all indicators inside your condition to enter, to exit the market, or just to set a condition to take some action.
Oh yeah, this is amazing. I would have never thought of this myself, and it's super handy because it can be used by both discretionary traders, manual traders, and automated traders, and anybody in between, right? Because you can just set up your own rules and then drag and drop, or just have it run. So this is fantastic.
Yeah, exactly. Because if you are just a rookie trader, you can backtest manually, but you can have some semi-automated trading just to save time, or fully automated trading. So depending on your experience level, you can use it to your own advantage, and it's pretty handy. Myself, of course, I use it every day. But it's for this the rule manager it's pretty handy, I think. I hope so.
Yeah.
And just another feature I can show you, and that's a bit sad because in all the solution, all the existing software, backtesting software, they don't include this kind of features. It's the statistic module, in fact. So here it's not very interesting because we have only 9 trades. I can show you maybe. I have here some samples for information. It can take the backtest data to have some statistic about it, but it can take as input some external statement like MT4 statement, like ONDA broker statement, or some even a Forex tester statement, and you can see the statistics, which are very crucial to assess the strength of a trading system. You can see the basic graphs, the drawdowns, the growth over time, some statistics about the winning and losing trades, some specific ratio to assess quickly the strength and the efficiency of the trading system, some symbol analysis, timing analysis too. You can see the duration of each trade with the tickets, and the risk analysis, the risk of a run or risk of drawdowns, the list of trades, and you can even do some Monte Carlo simulation, which is pretty handy too when you do a lot of backtest, by setting some option like skipping position, or insert some artificial slippage to see if your trading strategy is very sensitive to slippage. Can be the case for lower time frame. But this module is pretty handy, and you can use it for your own backtesting results, but for external backtesting results as well. It's I use it.
Yeah, that's awesome. I mean, that's the one thing that's been missing, like you said, from a lot of software out there. I mean, Ami Broker has a pretty good set of like reporting tools, but that's only like automated backtesting, right? But with this, you can actually do their backtesting analysis and analysis of your live account, like you said, with the OANDA API or the MetaTrader connection too, right? So that's awesome. It's amazing.
Yeah, sure. Thank you. It's handy, and I don't understand why this kind of feature is not included in every software, because again, you can backtest a lot, but if you are not able to see properly the statistics of your own trading system, there's a lot of traps. You can think it's profitable, it's performing, but if you check some specific ratio, you can understand that it's not going so well, in fact. So I think it's very important, in fact. Another quick feature is the fast backtest. I show you. In fact, we can backtest here with a graphical interface, but it's just to save time. It's possible to do it without any graphical interface, and you can save a lot of time. For example, if I want to backtest some of my setup rules on several symbols at the same time, I can choose the time frame. I can use external API strategies. It's compatible with Forex Tester. And right now I will use the setup rule. It can be pretty. So let's do this. This example sample setup rule. We can see the default entry rule, and we can change if you want the entry and the exit rules. For example, it can be pretty useful to use it for one single system, one setup rule here, but you change the exit rule. You can see quickly if it's better to use a 3-bar exit system or a PSA exit system or some kind of what you want exit system. So it can be, and the same for the entry rules. This is the same condition to enter the market, but you will change here the variation, and it's possible here with different. I will not. It can be. It's rather quick, but and you can see when it's over. You can check the statistics for every backtest. So the same way, it saves time. It's the main point.
Yeah.
So yeah, it's a bit, but just to show you quickly.
Yeah, let's see this.
So we'll see. Yeah, it's not only 21 trades, so of course it's a very basic setup rules. But it's yeah, again, it's pretty useful. So yes, for this fast backtest feature about it, and again, the data is a quality data, and you can use the real spread data. Again, it's very important, I think, in the backtesting software to be able to use the real spread, historical spread, because in some software, it's easy to set the spread to just one pip, for example, but it can change the results, the performance of the backtest. So using the historical spread value is very interesting, because we want to be as close as possible to the the real financial markets. And again, yeah, Statistics Center, I talked about it. And just, yeah, last item is just the community oriented. In fact, every file, every backtest, every statistics you can share between users, of course, to assess the backtest of other users. If you are interested in some traders, you follow their performance, and maybe you want to invest some money on it, you can share this data. You can upload the statistics on the web without, you can check the statistic without having the naked market. In fact, it's still interesting. And again, it's possible to request some features to profit from it. Everybody can profit from it if it's very good. There are some public resources. If you have any question, don't hesitate, of course, Jörg.
Cool. So it's going to be naked-markets.com. And then the forum, I think the forum is really cool. That's a really great idea, because people can share their entry and exit rules, the formulas, and then their back tests. So that's going to be a huge one, I think, because people can build upon each other, right? So
yeah, exactly. Exactly. That's the spirit. Yeah.
Yeah. Awesome.
Okay.
Cool. So you've been working on this for a while, and
yeah.
How does the licensing work, first of all? Is that one computer or any computer you own, or how does that go?
Oh, to be honest, when I started this project, I didn't think it will be so long to design, because it was my own software. And after I thought I can sell it, maybe it can be interesting for other people. It took me about 2 years maybe.
Wow.
And for about something like that. But I'm pretty happy because it's useful for me and for other people. There are already some people using it and they are pretty happy with it. It's good. It's very pleasant. It's for information. It's developed in .NET framework, so it's pretty modular, and there are some features I'd like to implement, like a new API, and you'll be able to code to design new system with easy language like C#, for example, or Visual Basic, something like that. It's pretty.
Yeah, I was really impressed when I asked you if you could do a Oanda plugin or a Oanda API access, and you had it done in like a couple of days. I was like, oh wow.
Yeah, sure. Yeah, but yeah, it's a pleasure because you had a great idea, and everybody can profit from it. So it's a win-win. So the customer don't hesitate to request feature. I'll be very happy to implement it to improve the software.
Okay, cool. So it's ready for purchase, and we're going to run a special just because you watched this video for the entire month of May 2022. There's going to be a discount. So you want to talk about that a little bit?
Yeah, sure. So to remind, the website is nakedmarkets.com. So yeah, for the launch, this is the launch discount. The public price initially is $269, but for the launch discount for you, the price will be $179. During 1 month, I think we'll do this limited discount. So yeah, it's a way of sharing this kind of software.
And if they purchase a license, does that just work on one computer, or is it for whatever computers they own? Just one computer, right?
Yeah. At the moment, it's for one computer alone. It's bound to one computer.
Okay.
We'll see after, but at the moment it's one computer.
Yeah, that makes sense. Okay, great. Well, thank you for sharing this. I mean, I think this is a great piece of software. I think there's a lot of, like I said, there's a lot of features that I never even thought of before, but make a lot of sense, and they really speed things up. So I've personally been using it for how many months now? And and I haven't been.
I'm happy. Thank you.
Yeah, I haven't been using it recently because I've been testing this system that has like proprietary indicators, but even from the time since I last used it till now, like there's so many things you seem to have added. So I think, the development process is really going along smoothly and really speeding up. So I think that's awesome.
Yeah. Great. Just for information, about the improving process. The updates are very regular. The roadmap is public, so we are on the websites, on the forum. We can see here. We can see the next major feature which will be implemented, like the API, the news trading module. In the next coming week, it will be available, and some interface with MT4 to import some indicators or some strategies, or to export to MT4 all the rules which are defined in the rule manager will be exportable in MQL4 language if needed. This is some features, and it's updated regularly. I think it's important to be transparent for the customer, because it's a lifetime license, but they can follow up the improvement of the software. To be honest, of course, it's a software is young, so it can be improved easily with a lot of new features, and I think that's it. Just I'd like to thank you, Hugh, for this video. Of course, Walter Peters for this great community, Rima, and especially Yagas too.
Okay, great. Well,
thanks to you, Hugh.
Oh, my pleasure. I mean, thank you for presenting this to me and letting me test it out, because it really speeds things up for sure. So, any last words? Anything you wanna share with people, or?
No, I think that's all. Yeah, I wanted to design efficient, fast, and modular backtesting software. I use it myself to design some new system. I hope it's the case, and I'm happy to share it with you.
Great. Awesome.
Again, thank you.
Yeah, you're welcome. Thank you for coming on.
Thank you. Thanks to you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. A lot of people just can't let go of that idea that you have to work hard for your money.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk a little bit about cognitive dissonance in trading and how that can affect your trading, how that can affect your life, maybe even. What do you think about cognitive dissonance and how that affects traders?
Yeah, that's interesting. That's a really good topic. I'm glad you flagged that one. So for people who don't know, cognitive dissonance is when you have like this friction between what you believe and like what is presented to you or what you're doing. So like, for example, if you think that all wealthy people are jerks and they have to be jerks to make money, they have to screw someone over to make money, and yet you want to be wealthy and you're working towards wealthy, does that mean you're trying to become a jerk? Right? And so there could be some things subconsciously that you're like, there's some cognitive dissonance, like, I don't really want to become one of those people. Yes, I do. No, I don't. And so there's kind of that friction, right? So in trading, one big one would be like if you have a bias. So for example, right now, I have a bias on the dollar yen, where I put a trade in every day. In fact, I'm going to do it right after our podcast here. I'm going to put my orders in, and my bias currently is to buy the USD against the JPY. So buy the dollar against the yen. However, I put in buy orders and sell orders because it's kind of like a breakout strategy, right? So I don't really care if it goes up or down. I'll take both those trades, and it'll be one or the other, or neither. You know, if I was only going to stick to my bias, which, you know, I have a reason why I believe that the dollar yen is more likely to go up than down, but I would have a hard time actually taking the sell side, right? And you kind of see this, if like, let's say you were in a trade for like 3 weeks, okay? Maybe it was like a 4-hour chart trade, but it really went well. So, and you're using some sort of trailing exit. So then you spend all this time trying to figure out when to get out, right? Finally, you get out, you know, you try and stick to your rules or whatever. You get out after 3 weeks, you make a nice big fat profit. And then there's a sell signal immediately. What are you going to do, right? Mm-hmm. It's hard for people. Do you know what I mean? Like, you've already made all this money and you've already seen the uptrend, right? You bought and it went up, and then now all of a sudden you have a sell. It's kind of tricky, isn't it, to switch gears and do that, because there's some dissonance there, because you believe, or you did believe, that it was going up, and now is it going to be easy for you to take the other side when you've spent so much psychological energy on the buy side, right? Yeah. So will you be able to sell? So that's another thing. And then just like, you know, like, let's say, here's a big one actually. This is my last one. Example. It would be this. You believe that the best way to make money from the markets is to find those turning points and hold on for dear life. So it goes up to a point, it double tops, and then you sell, right? And so you need to hold on for as long as you can so you can make a big chunk of profit. but your mentor or some strategy that you bought online says that you should trade the trend. Okay.
Yeah.
That's dissonance too, right? Because your belief is that this is how I should trade. And yet you're trying to emulate your mentor or someone who sold you a strategy in the dark corners from the dark corners of the interwebs, right?
Yeah.
It says you shouldn't try to find a turning point. You should just ride the strong trend. So what are you going to do, right? That's another like dissonance thing. So those are the way I look at it, kind of like who you're becoming or what you believe in terms of wealth and money, because that's a big one for traders. Whether or not your strategy fits your beliefs, and also the individual trades you take can also be a source of friction too, psychologically, because you kind of get married into one side or the other. So that's how I see it. Those are the sort of like three broad categories, I would say. What are your thoughts on dissonance?
Yeah, those are good ones. The only other one I would kind of add that kind of goes with your, like going against what you believe about yourself is that I think a lot of people kind of short circuit themselves because they have a string of winners and they make a lot of money or whatever. And then they think, oh no, I'm not supposed to be that successful, or I'm not a real trader. What am I doing here? And then they lose it all. They give it all back, right? I think that's one of the big ones that I see also. And I've done that.
Yeah, they kind of feel like they're a fraud.
Yeah.
Sorry?
Yeah, I've done that too. So, like it's definitely a natural thing for people to do. But yeah, that's the big one that I would talk about.
Yeah, I know really good traders that will pull all their money out when they hit like 100 grand or 200 grand or whatever. They just start with a small account and they get to 100 grand and then they're like, boop, I'm going to go back to 10 now because, they know that when they get over that 100 grand, they start taking huge risks and they get really, really aggressive and they wipe themselves out. So in some cases, it's other people that tell them, like their wife. You know what I mean? Like it's like, So like, I mean, that's kind of one way to hack it. I think you should really get to the root of it. But that's a huge one, isn't it? Where it's funny, we get told when we're growing up that you have to work to make money. You got to work to make money. You almost are told you got to trade time for money. And then all of a sudden this trading thing comes around and they're like, no. You're going to get paid for the decisions you make. So there's a lot of work involved in kind of building up your confidence and refining your strategy. That's where the work part is. But then after that, it's really more managing your mindset and just making decisions. So you can, like, I could sit down and take 10 decisions today and take 10 trades, and I would either lose money or make money depending on those decisions that I made today, right now, right? But that's not the case with most people. They learn that they trade money for time or trade time for money, whatever. So it's weird, isn't it, when you start thinking about it's a different way, But if you think about it, all the really wealthy people, they all have some sort of thing that's leveraged, whether they sold a bunch of books or a bunch of music albums, software, or do you know what I mean? Like they always have something where it's even like Elon Musk or whatever, he's an easy example, but he has different things that will, like, if the stock price goes up because he gets paid in stock or whatever, that so it's kind of a weird thing where if you really think about it, if you want to be wealthy, the two broad paths are usually real estate or the markets, and you could argue that real estate is a market as well, right? I would argue that, but it's never really trading money for time. You don't really see, other than like maybe surgeons or anesthesiologists or something like that, or lawyers, usually, and even lawyers, when you get high up, you're actually no longer making the money from your own hours because you become a partner. You're making you're making the money from the profits of the firm, right? Because you basically own a part of the firm as a partner, right? So you have a share in that. So even then, the big time lawyers, they're not even really trading time for money anymore. It's so important. It's so interesting how that's so ingrained in our culture. Like even in like healing circles or healing modalities that I've studied, a lot of people just can't let go of that idea that you have to work hard for your money. And I think that's something that everybody has to really work on and really evaluate. Why am I believing that? And, does that serve me or does it not? Yeah, exactly. I mean, I had a discussion with a friend the other day, a couple weeks ago, and he was saying, I just don't understand how someone could just, like, we're talking about cryptos or whatever. It's like, I don't understand how someone could just, like, all of a sudden be worth $1 billion or whatever, 100 million. He had like a big number in his head. And I was thinking, like, the Native Americans when the colonists came, the Native Americans, they didn't have a wheel. Now they did have a wheel for their kids. So their kids had little wheel cars, right? Like they'd give little things to push around and stuff, because like little boys like that stuff, right? As we all know. But they didn't have wagons or anything like that. They had sleds, so their horses could pull like sleds, right? But they didn't use the wheel, even though they knew what a wheel was, and they actually made the wheel into toys. They didn't use it. Now, my thinking is, what if there was someone in a tribe that had come up with the wagon, or like some sort of wheeled sled rather than the sled that they had? Imagine what that would have been worth to all the tribes, and imagine how many tribes would have wanted traded with him, because basically he came up with an idea, turn these sleds into wheeled sleds, and how valuable that would have been, and how useful would have, provided that it worked. And the plains can be pretty rocky and rough and all that stuff. We know all that from the wagon trails, right? But I'm just saying, like, that's an idea to me. Like, that's an example of someone who could have, it didn't happen, but it could have been like $1 billion idea back in the old days, right? I mean, billion, whatever, whatever, however they traded back then. But, it's just really interesting to me to hear that mindset, because you're right. I mean, that's a big one. That is a big thing. You get taught from a very young age that, time is money, and you do homework during your home time, and you do schoolwork during your school time. And the first jobs you get, like, are by money. Like, my first jobs I got I was doing magic shows for kids' parties when I was a kid. And it was always time for money. Even then, it was, whatever it was, $80 an hour or whatever. It was really good money, but it was still time for money, and I could only do so many magic shows on the weekend. Right. So it's interesting how we just can't see what's all around us.
Yeah, definitely. All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only, and is not trading or investment advice.
Is your intuition actually adding anything? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. Welcome back.
Thanks.
So I have a question here. This came up during our coaching clients call that we have with the coaching traders, and he's a really good trader, and he was talking about how he's back tested his strategy. He's now live trading. Okay, he's doing really good work with his psychology. He uses a hypnosis track that I gave him twice a day. He's good at journaling. He uses his subliminals. He's got an excellent track record trading, even with his live account, right? But he still questions himself, sees his rules. He sees the setup, right? He knows this is a valid setup, that he should take it, but he still thinks, should I be taking this setup? He still questions his abilities to interpret the charts as he should, even though he knows he's good at this, right? And this is kind of, the backdrop is that he's kind of transitioning over from back testing into live. I mean, he's been trading live for a little while now, but not that long. And he's just, he's at the point where he really wants to ramp up his account size and all that. So he's getting to this point where he's kind of questioning his abilities to interpret whether or not this is a tradable situation, right? What the markets are telling him. So what would you say about this?
Yeah, that's always a tough one, right? I think two thoughts on that. Like, number one, that might just be part of his personality and how he's wired. So he just might have to learn how to manage that. Two, which probably is more likely in my opinion. I was watching a Denise Scholl interview like a couple of days ago, and she was talking about how all these negative emotions that come up when we're trading link back to something else that happened in our life, right? Something that was programmed into us, something that our parents told us, something that society told us. And I think from her like traditional psychology standpoint, she says you have to kind of like just manage it, right? Manage it or stuff it down a little bit. And there's definitely some validity to that. And understanding where it came from, I think in her opinion, is kind of like half the battle, and that kind of releases things. And it can, I believe. But I also believe that if there's something that you can't release through that method, I think it's some sort of trauma that's in your past that you have to like face and resolve. And that could be like before you were born, that could be when you're a kid, maybe you had a bad divorce or something like that. And a lot of these things have an impact on us that we don't realize the significance of. Like today, it might seem like a very insignificant thing, but back then it might have been a huge thing for you, and you might not have been able to process it at that time, and that could be causing what's happening now. And she brought up a couple of examples of like maybe not getting approval from your father or something like that. So there's all kinds of things you can do for that, like hypnosis, whatever. There's a ton of modalities out there, but I think that's something to look at. If you're obviously this guy is proven this guy is successful, but he still doesn't have that confidence. So I think that would be something to look into. What do you think?
Yeah, I agree. I told him we'll put a link in this show notes for those people who are not familiar with Denise Scholl's book. You guys can check that out. Yeah, so he's taking the You Get What You Trade For course, which actually is very closely aligned with Denise Scholl's ideas. Mm-hmm. And so he said that's been useful, very useful to uncover those things, like just like you were saying. So that's thing number one. And then the more sort of conscious thing I said was, to have your A grade trades. So you have like a printout or a screenshot of like the perfect trade and compare that to what you're looking at now, just to see, and to record your belief that the trade at the beginning of the trade, record when you take it, to record your belief that the trade will work out. How confident are you on a scale of 1 to 10, for example? And then after you have hundreds of trades, you can go back and look and see, is your intuition actually adding anything? Because you can use that, you could leverage that if it's true, right? Mm-hmm. It may be exactly what you're talking about, which is why he's going through the You Get What You Trade For course and, uncovering all that, because that's definitely probably number one, right? But it also could be that his intuition is actually saying, hey, watch out, this isn't a good one. And it could be right. Now, I tend to think that's unlikely, but it's a possibility. So that's why we, That's why I say record the data. So so work on your history and your psychology. Have a perfect example of a perfect trade so you can compare that to what you're looking at now, and then also record your intuition feelings in your journal, so that again you can go back and you say, oh, okay, if I say it's an 8, 9, or 10, the trade is like twice as likely to work out and be profitable. And if it's below a 7, it's unlikely to be, it's more likely to be a loser. So do you know what I mean? Like you can do things like that. So I think it's like kind of that multi-pronged approach is what we were talking about. So I think, but definitely it could, like, Denise is onto something. Yeah.
Okay, cool. Yeah, try everything basically. See
try everything. See what sticks. Use all methods. Yeah. I mean, the way I look at it is like some of it is subconscious and some of it is more conscious, right? Some of it is for your logical mind, like, oh, this is a perfect trade, and oh, I think this is a 9 out of 10. Like that's for your logical everyday. And then there's the real deep thing, which stuff is what you were talking about. Yeah, exactly.
Yeah. Okay, cool. Thanks, Walter. Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So if you want something different, reprogram your subconscious. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about imposter syndrome. I know we talked about that a little bit on the last episode, but maybe we can go into that a little bit more in depth. Maybe you could tell us what that is and how that manifests in trading.
Right. So imposter syndrome is when you feel like you're a fraud, basically, right? So we talked a little bit about in the last episode where let's say you're a new trader and you start trading, right? And you have, in your first month, you make 30%. You make a bunch of money. Actually, I know a guy that did this. He went to one of our seminars and he was talking about this. If you feel like you didn't deserve that, if you feel like it wasn't you that did that, right? Then you can easily self-sabotage yourself, right? So you can do something to bring yourself back down to where you believe you should be. And I think this is something that comes along a lot with traders, like the traders we talked about in the last episode, who they could make a lot of money, and then when they hit a certain level, it's like a psychological barrier, and then they crumble. Mm-hmm. This is something that, to me, I feel like the root of this is really your core beliefs that you get when you're schooled at university or high school or even primary school, and your home life, the people around you that you trust and admire and ask questions of when you're growing up. You feel like, you're not worthy. Mm-hmm. So you're an imposter. You've lost, you've got something that shouldn't be yours. And in fact, there's a really good interview. I think it's the last interview of the first Market Wizards book. So it's called The Market Wizards by Jack Schwager. And I believe it's the last interview. It's either that one or the New Market Wizards. I believe the New Market Wizards has a different psychologist. I think the first one has a hypnotherapist. And he talks about this guy and how it was kind of an imposter, but he was the other way around. So he had this imposter syndrome where he was a trader, right? Mm-hmm. And he was losing money, and he wouldn't look at his statements or something like that. Like he would get his statements from his broker and he'd throw them away or something. So under hypnotherapy, this all came out, right? It wasn't, the trader had come to the hypnotherapist to try and figure out, how can I improve my trading? But what come out from the hypnotherapy session was that he basically felt he was a fraud. Mm-hmm. Yeah. Because he was telling all of his friends he was a trader, but he was actually just losing money hand over fist, Mm-hmm. And so he was talking about what he was doing with his statements and things like that. So yeah, the core of this is that you have to change who you are, right? Mm-hmm. So you need to change, and we can change our personality. This is something that people think that, by the time you're 5, your personality is set. That's all BS. We know that from the recent research in psychology that you can change your personality. And you've probably done it. I've done it in my life, where you live in different places with different people, and you can kind of reinvent yourself and become a little bit more outgoing, or a little less outgoing, or a little bit more intellectual. You can change it's a progression. Our life is a developmental curve. It's not a straight line. You don't just stay an introvert or an outrovert or extrovert or whatever, you don't stay, simple-minded or whatever. You can improve lots of things. Mm-hmm. So for imposter syndrome, what you can do is change your beliefs about yourself. And that's really, in my estimation, best done with subconscious tools like hypnotherapy, like subliminals. There's a lot of things you can do when you're falling asleep, but ways to seed your subconscious. You can use hypnotherapy. You can use a really good hypnotherapist. NLP is something that people talk about, neuro-linguistic programming, which is kind of on the fringe of psychology. And most psychologists that are academics will frown, but not all of them, but many will. Mm-hmm. But they frown at ESP research. So, whatever, there's a lot of good research on that sort of stuff. So yeah, so I would say if you feel like this is something you're running up against, you would work on yourself, you would work on your core beliefs and change what you think about yourself. Because the way I look at it is your subconscious isn't out to get you. Your subconscious is just your program. So whatever you're programmed to do, look around your life. That's where you're at. Where you're at right now, where you're at today, that is your program. Okay. So if you want something different, reprogram your subconscious, and then you can get different results. The Silva method is another one that people look at. That's another thing you might look into, if that makes sense to you. But there are lots of different ways to do it. What are your thoughts on the imposter in trading?
Yeah, so I was just thinking about that, and an interesting reflection of that kind of like, oh, like the younger guy or the newer guy can't be successful is like, I see that in soccer a lot, right? Football.
Yeah.
So like you have these like 16 and 17-year-old kids playing on the senior team, right? With these 30-year-old, 40-year-old guys.
Yeah.
And you don't really see that in any other sport. And, you know, those kids could feel like, oh yeah, I'm an imposter. I don't belong on that senior team. I don't belong with those older guys. But no, these guys are just as good as the rest of them. So I think, you know, that's a good way of looking at things and saying, okay, you know, even if I'm not that experienced in trading, or if I feel like I don't belong here or belong making money or whatever, then you can kind of look at those kids and say, hey, this kid is doing really well at, you know, the highest level of soccer. Why can't I be at that level of soccer also? And I think what you're saying is spot on in that you have to change the way you're programming. And at least from my perspective, there's two ways to do that. One is you can consciously change things. And that's if your programming is more in the conscious mind. But if it's more subconscious, then I believe that you have to get rid of a lot of the traumas that have been programmed into you or have been given to you or whatever, you know, whatever happened. And there's a lot of different ways to do that. Like you said, the Silva method, I've seen people get some good results on that. And some of the other stuff I've tried. So yeah, just try a bunch of things and, you know, see how it works.
And it's important to remember that it's kind of normal, you know, for people to you know, to feel like no matter what they've done, no matter what they've accomplished, that it was, you know, that they're a fraud or that they're incompetent. I mean, that's kind of normal to feel that way, because there's always going to be someone who's better than you, right? Like that's just the case. Like when the models go to the runway, there's always going to be a model that's more attractive than they are. When the bodybuilders go to the bodybuilding contest or whatever, there's always going to be a bigger, you know, more defined, stronger dude or whatever, you know what I mean? Or whatever. Like, and the same in trading. Like if you hang out with traders and you're starting to click and you're starting to make money, there's always going to be a trader who's trading bigger accounts or more, or making a higher percentage or whatever. And traders can be kind of jerks that way. You know, you see a lot of like, you know, like talks, traders give talks and they talk about how great they are and stuff like that. And it's, you know, it's funny. Like, I don't know. I just find it interesting. Like, how a lot of times traders will use their past to justify, you know, maybe they feel imposter syndrome. You know what I mean? Like maybe that's what's going on. Like they feel like, you know, I worked at, you know, Bank of America and I was trading these huge amounts and I made this amount of money for my bank, you know, and now he no longer works at Bank of America. He's no longer trading that huge amount, right? He's no longer doing that, but he still wants to feel important. So he'll tell those stories about what he used to do, and you know what I mean, and feel like, oh, I called the top on the pound and blah blah blah, you know, things like that. Like it's just, to me, it's just screams imposter syndrome. You know, that's what they're. And there's a lot of that in trading. Even you know, it's funny, they say, actually, this is a really good thing. I know I've talked about in the past, but it might be important for people who haven't heard this before. They say that one of the things I learned from one of my first psychologist professors was that you can get free therapy by going to a park bench, sitting on the park bench and watching people walk by, and listen to yourself, listen to what you say about the people that walk by, because that's the stuff that you're projecting out there. Do you know what I mean? So you see that guy and you go, oh, he thinks he's so smart and blah, blah, blah. Well, that's basically, you know, it's a reflection of what you're saying, what you think inside about yourself. So yeah. So that's another thing you can do too, is catch that. Because if you don't know why it's happening, it's hard, right? Maybe you go see a hypnotherapist, maybe Silva method, maybe, you know, park bench method, whatever. But there are a lot of ways to kind of get at that. Yeah.
All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. spend some time with the system and figure out how it works.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, we have a question from YouTube. So this guy says, yeah, I've been watching the podcast for a while, and he hasn't gotten to watching all of it, but he's a beginner and he has a problem exiting trades. What he does is his stop losses are 10 to 20 pips, and he'll move to break even at 30 pips. And he says that he consistently can catch 50 pips, but a majority of the time he doesn't know when to take profits, and he's always hoping for more. And then basically it turns against him and he either loses or breaks even. So what are your thoughts on trying to fix that?
So I wrote about this in the Naked Forex book. Like, you kind of have to decide who you are, or you can be both, right? So I talk about this idea of being a runner, where you like the trailing exits, and you're going to have these really big wins occasionally, but a lot of times you're just going to have like middling okay trades, and you're going to give back profit, right? Mm-hmm. Or if you're a gunner, you use targets, and you look for specific targets that can be based on quantitative data that you have. Like the pair usually goes this far in 10 candles or whatever. You know what I mean? Like, you can do something like that, but at the end of the day, you're just happy with the target. Now, I like to do both. So what I will do is I will have a target. Some systems, the target is relatively easy to achieve, provided the trade is winner, provided the signal's okay in this instance. And then the other bit of the other half of the trade, usually I will use a trailing exit on, because I like to catch those big winners occasionally. And anyone who's a trend follower will tell you that will make your year, that time of the year where you get that really big trade or two trades of the year. So that's my belief, is that you can decide to be one or the other, or split it up. Usually the test that I ask traders to use to determine whether you're a runner or a gunner is to say, all right, hey, Hugh, imagine you're in a trade and your trade is up 100 pips, but then it goes against you and pulls back, and you end up losing 50 of that 100 pip profit, and you're out at 50 pip profit. Okay, so that's scenario one. Scenario two is you are in a trade, it goes in your favor. As soon as it hits 50 pips, you get out, and you're very excited. But then if you had waited just a little bit longer, it would have gone 100 pips. So that's scenario two. Which of those scenarios is more psychologically distressing? Is it scenario one? If that's the case, then you probably are a gunner. If it's scenario two, then if that's more psychologically distressing, then you're probably a runner, and you'd be better off using a trailing exit. Or you can do like me and do both, and that way you can always pat yourself on the back when when it's a winner, no matter what, right? So yeah, it really comes down to that. You just don't know. Like, you can use the ADX, and you can use the moving averages, and you can do that, the MACD, and you can do all these things to determine whether or not the trade's going to keep going. But at the end of the day, the trade doesn't care where your stop is, if it's at break even or if you're up 900 pips. The market doesn't care. It is probably going to go up and down. Even when it's going down, even when it's going up, it's going to go up and down. So whether you get clicked out on your trailing exit or your break even stop, the market don't care no more. So what do you say about that?
Yeah, no, I agree. And I think, like you said, the data is super important, right? I think if you have a lot of data, you can really see, okay, does this make more sense to do this for me, or does it make more sense to let it run? One example recently that I tested, apparently it only works in the Euro-US dollar, the system that I tested, but works really well. And what I looked at was, I asked like several questions. Okay, how far does this run from the entry? What's the biggest run that it has? And then how often does it hit these other points, like 1R, 2R, 3R, or whatever? And I found out that you could get like 7R on some of these trades. So that was a reasonable target that you could put in there. I started using a 7R profit target at every trade, but my exit was on a moving average. So if it crosses over the moving average and it closes on the other side of that moving average, and I'll close it out. And that seemed to be the best balance between capturing some profits and still having that, capturing that big run also. So I think it really is about the data. Like, look at the data. Don't look at the data from a perspective of a particular trading system, but ask some questions like, how far does it run? How far it does it get into profit before it snaps back? Or how often does your entry actually work as written? So those are some things to look at, and not necessarily just taking a certain strategy and going with that.
Yeah, you're right. I mean, and traders will find when they look at trailing exits that there are different types of trailing exits, right? There are like tighter ones that are going to bump up your win rate, but they're going to reduce your average winner size. And then there are looser exits that are going to depress your win rate, but your average win size is going to go up because it's going to more easily capture those huge wins, right? Those 9R, 10R wins and things like that. So yeah, so it really depends on what you want to do. I mean, I will say most of the time when I've looked at it, I have found, not always, but most of the time, the trailing exit is the way to go in terms of if you want gross profits, right? It kind of makes sense, right? Like, you're letting the market give you as much profit as it wants to. That's not always the case, because what you'll find is that some systems, they kind of have like momentum signals, right? And it's just good for a little pop, and it's not, do you know what I mean? It's not necessarily likely to keep going. So it really depends on you, and how you interact with your strategy. So yeah, like what you were saying was really interesting. Like, if you look at the average distance that a trade goes, right? And then you go, well, the median is 75 pips, right? So I'm going to use that as my target, right? Because that's the median. And so, half of them are going to go further than that, half of them aren't. Remember, that doesn't mean you're going to have a 50% win rate or whatever, because it's just of the winning trades, right? So it's only the winning trades are even going to get on that side where the median is, right? So, all those things you have to take into account. Yeah, so, I mean, it's really interesting, I think, when you're building a strategy, because you're forced to answer the questions like, what's important to me? I mean, kind of these sorts of things that come up a lot in trading. We talk about it in the podcast, where all these things keep coming up. Like, what's important to me? How do I deal with this? What does this mean, right? And so when you're building your strategy, a lot of those questions come up because you're confronted with, okay, if I do this, then this is probably going to happen. Am I happy with that? Or should I do this so that I avoid this sort of feeling, or this sort of, going down this path? So it's really interesting. In a lot of ways, it's like you're thinking like, who should I marry? Should I marry this person? Yeah, she's really great and everything, but she's got a cocaine habit. What am I? You know what I mean? Like, so like, it's sort of like it's the same thing with trading systems. There's always going to be something you don't like about it. Even like the brilliant trading systems that have high win rates and high average winners and all that stuff, they usually have the problem of not trading that often, right? Like, there's always something about so.
Yeah. And along those lines, like, you're not going to find out about your girlfriend's cocaine habit unless you spend some time with her. So like, the same thing with the trading system, right? You got to go through the iterations, you got to do the testing, you got to look at the data, you got to get on the screen and do some demo or whatever, live trading. So yeah, spend some time with the system and figure out how it works.
Great point.
All right, cool. Thanks, Walter.
Yeah.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I definitely like my coffee. It tastes good, but I find that it spins my wheels too fast, and I'm kind of just all over the place.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about substances that can affect your trading. especially stuff like, caffeine and coffee and stuff like that. So what have you found that helps or hinders you?
Okay, so I used to be on the coffee every day, and my family, like my father-in-law, he's a coffee exporter, so so we got lots of coffee around. You know what I mean? Like,
Yeah.
So yeah, I mean, coffee is not a problem. We're in this house, we've got it, and it's you got to drink the good stuff. So I used to be I was down that path, and every day, and I've done this repeatedly in my life where I'll go off coffee. I had a coffee shop for a while, right? And before I became like really sunk into my trading. I was into trading when I had my coffee shop, but I didn't have a lot of time because of the business. Didn't have a lot of time to do trading stuff. I tried. Luckily, the coffee shop was slow enough that I had some hours there, but but that's a different story. So yeah, I found personally for me, and I know some people, you can do like genetic tests and they'll tell you whether or not you process coffee, or caffeine or whatever, like they have that stuff. I found personally, I don't think I am a good candidate for like lifelong caffeine addiction. And so I've pulled back, and I've been off of it probably for like 3 or more years now.
Oh, wow.
Probably going on 4 years, so I'm off of it in terms of that. And the reason why is I don't like the crash. Like it's great. You can be very productive, and it can help your focus and all that. What they found is that with extroverts, when they are on caffeine, they tend to perform at a higher level because they're always kind of lower. And then when they get stimulated, whether it's by their environment or whatever, caffeine can do that. So they're like down here. Think of like a U-shaped curve. In the middle of the U-shaped curve is like peak performance. So extroverts are kind of down here, and then they get caffeine, they get closer to the middle of the peak of the curve, right? And then introverts are kind of almost always near there. So when they have it, they kind of go down, right? They go down the other side of the inverted U. And I'm probably more introverted in terms of my personality. And so I feel like, I can also do too much caffeine. Right. And I just didn't like having that feeling. So it can be useful. I would say, this is what I would say, and then I'll be quiet. I would say that this is the kind of thing that would be useful if you were taking a trade in which your entire trade plays out before you on the charts and you are sitting there watching. In other words, scalping. Okay. So if, however, you are a trader who trades like I do, like generally higher time frames, generally I'm not sitting there watching the charts. Generally, like I just put in 6 trade orders this morning, right? And guess what? They're on the daily chart, and I do not care what happens to those trades. And I am not going to look, because they are either going to hit their targets, make some money, or get stopped out. And that's it. I'm done. Okay. My psychological energy is over. But if I was sitting there trading the 1 minute euro, I would probably want to have something going on, whether it's caffeine, brainwave entrainment, do a bunch of push-ups, whatever, have a pull-up bar in my office so I could do some pull-ups, jump around, whatever it is to keep, focus for that 3-hour session where I'm scalping every day. So that's what I would say about that. It's totally up to you, but for me personally, I don't find that useful. I've tried other things. Like there was a supplement that's supposed to, like, what those Yeah. I tried that for a while. It didn't really seem to do much. It seemed like a bit of a scam, the one that I tried anyway. So yeah. So for me, I think you're better off doing like personal stuff, like brainwave entrainment is what, I would do that rather than just a substance. I find that to be well worth it, as opposed to, caffeine. But that's just me. What have you found?
Yeah, I mean, I definitely like my coffee. It tastes good, but I find that it spins my wheels too fast, and I'm kind of just all over the place. The crash doesn't really hit me. Like I used to drink coffee before I went to sleep, and I slept fine. But it's that spin up of the brain, for me at least, that gets me all over the place, and I can't focus on things. And I usually end up at the end of the day not achieving much. So I try to cut back, and I try to be aware of, like, if I've in that state, or if I took enough coffee to get me that state and I need to back off or whatever. So now I'll drink like half a cup or something. But some of those mushroom coffee substitutes are actually pretty good. I mean, they don't taste as good as coffee, but close enough, and you don't get that you don't get that spit. I don't get that spit up, at least. I've tried the nootropics and they work, you know, in a pinch, but I think, like you said, it's better. You're better off just doing like some internal work and some meditation or whatever to calm your brain instead of relying on those nootropics. I think nootropics can be a good like bridge if maybe you're kind of, I don't know, you're depressed or something like that, right? It can kind of maybe give you a little boost until you can do it yourself. But otherwise, yeah, I don't see any long-term uses with that. I'd be interested in hearing your thoughts on alcohol, though. Like, what are you doing with alcohol? Do you still drink, not drink, or whatever?
Yeah, so in Australia, I'd be considered a non-drinker, but that's just because I don't. You know, it depends on where the baseline is, right?
Yeah.
But I will occasionally. What I won't do is drink and trade.
Yeah,
that's a big like the problem. The problem over here, like in Australia, what happened? I've done it before. I've made the mistake where, like, I went out with some friends or whatever, came home. Okay, so the London session is raging, right? I'm coming home. The London session is raging. You know, New York's or even New York's open if it's really late, and then I place trades, and then in the morning I come back and look at my account and go, what was I doing? You know what I mean? So
yeah.
I made that mistake. I mean, the last time I did that was probably like 2006 or, you know, back 2005 or 6. So I don't do that anymore, but I don't really drink that much either. I mean, they would say I'm a non-drinker, but I would drink. I would probably, okay, so here we are halfway through the year, right? So it's halfway through the year. So it's been 6 months. This year, I've probably had, 3 drinks, something like that. So, yeah, I don't really think it really depends on what your goal is. You know, if we're talking like trading wise, I think what we've been talking about, like nootropics or brainwave entrainment or meditation, something to help you focus, depending on what you need. Like what was interesting when you were talking about your experience with caffeine, that like I just kept thinking, yeah, that's like a classic reaction to what an introvert would do if they had caffeine, right? They would kind of get scattered, and you know what I mean? Like they would, you know what I'm saying? Like they would have all these things going on, and like and I understand that too. Like I've been there. I found that routine sometimes helps. So like if you have this routine with your coffee where you're going to do this, like you kind of go down a checklist, that might help from straying away from that or whatever. But yeah, so my belief isn't that alcohol will necessarily be a detriment to your trading, unless, of course, you're doing it and trading. But you know what I mean? Or,
yeah.
Like that's the big. Or like even over here, like if you had a big night, and okay, so if I have a big night here and I wake up late, like this time of year in the winter in Australia, which is the summer in the Northern Hemisphere, like my daily candles, they're at 7 a.m. They're on, that's it. It's a new daily candle at 7 a.m. So if I'm not up, like if I'm sleeping in or whatever, because I drank too much last night, that, you know what I'm saying? Like then I miss trades or whatever, right? Or get a bad fill or whatever. So in that way it could impact it. But I don't really think that, just having the alcohol in your system, I don't know. What are your thoughts?
Yeah, I mean, I think it's totally up to the person, right? Like how they perform. But it's interesting because in the past maybe a couple of years, I've found that drinking beer really messes me up. Like even if I have a couple of beers, it's not a good thing in the morning. But like I'll drink, like I like whiskey, I like tequila, I like red wine, and I'll drink a little bit of that. And next morning I don't have hardly any effects. But yeah, it's kind of weird. But I don't drink that often anyway. And I found that on a day-to-day basis, it's kind of like, it kind of messes up the signal, I guess you could say, like it from your brain to whatever. Like I'm a little slower. I'm not as quick. I'm not as focused. So on a day-to-day basis, it doesn't help. But yeah, so I've cut way back. I used to go to the store on a weekend and get a 6-pack of beer or whatever, but now I don't do that anymore. So,
right.
Yeah. That's what it is for me.
That would be like that would be common here where I live. I actually don't live that far away from what they call a bottle-o. Bottle-o is like a wine shop, whatever. Yeah. But yeah, so yeah, I mean it's interesting, it's like a lot of things in life you kind of learn over time, don't you? You learn over time, okay, that was a bad, that was a bad choice. Okay, all right, Walter, we made a bad choice here, so we need to do this, right? So like you kind of just learn over, like you've learned with beer and stuff. Like that's just kind of the way it works, isn't it? Like over time, you just kind of focus in on what's important, what works, what doesn't, You know, it's like by the time you figure everything out, then you die. It's like,
Yeah.
man, I had it right. You know, I had it right.
What I found too is that I think a lot of the reason I drank was because I was stuffing these like negative emotions or memories or whatever, right? As I've done more of the inner work to release these emotions, like I don't need to stuff them anymore, so I don't need the alcohol. And I think a lot of people use alcohol for that. Like, at least it seems to me.
That's a really good point. Yeah. And it doesn't have to be alcohol, it could be anything, but yes.
Whatever.
Yeah, that's right. Yeah. Good point. Yeah.
Okay, cool. Well, glad to get your opinions. Thanks, Walter.
Thanks.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
The markets are not efficient. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. So I have this question. A trader asked me something. He said, if the markets are efficient, then how is it possible to make money trading? Okay. So that's the question. Now, my answer to that is the markets are not efficient. In fact, they rarely are efficient. And this idea is very common in academia. You will have these professors who do not trade, do not make money trading, and frankly, don't understand the markets, come up with all these equations about why the markets are efficient and why it's impossible to make any money, and that the price is just a random walk and this and that, you know, all these theories, right? And I this is my belief. And I learned this from my mentor. Or one of my mentors, right? My belief is that the markets are rarely efficient. And you know why? Because we have people who have gobs and gobs of money. So what that means is those people probably went down one of two paths. Either they had information that wasn't widely available to everyone else. I'm talking about you, Nancy Pelosi's husband. Or, right, you guys know the story about how like the senators have outperformed all the hedge fund managers and stuff like that.
Yeah.
And Nancy Pelosi's husband's made this amazing track record. Actually, there's an app now where you can copy the trades of like the senator.
Oh yeah.
I thought that was brilliant. That was the coolest thing I've ever seen. Coolest app I've seen since the one that tells you when to go and do a pee in the middle of a movie. Like that was a cool app too. But anyway, the idea is that if the markets were efficient, then you would always pay the right price, right? Mm-hmm. The price that you paid at that point would be the right price. There'd be you wouldn't get any value, you wouldn't get any discount, like nothing. It's just the right price, okay? If that were the case, it would be like nobody would be able to accumulate big piles of money, but some people are. So either they have information that other people don't have, or they're crunching the available information in a certain way, which is what indicators do on our charts, right? They crunch the available information, high, low, close, open, not open, close, high, low, all that stuff, right? In a certain way, and they analyze it in a dispassionate, non-emotional way, so that they can buy when they should and sell when they should, right? Mm-hmm. And away from emotions, away from fear and greed, right? So that's basically it. I mean, that's the way I see it, is that the markets are not efficient. If they were efficient, we wouldn't see billionaires. Like, that would be nearly impossible to come up with, right? Mm-hmm, mm-hmm. Because, like, think about it. Like, if you think about it in a broad sense, even like people who come up with really cool inventions like Velcro or whatever, if the markets were efficient, there would be a lot of people, many, many people coming up with the idea of Velcro at the same time. Mm-hmm. You know what I mean? Mm-hmm. I'm not sure, but I think I heard that Velcro came from the U.S. Defense Department, whether it was the Air Force or something like that. So like someone in there like created it. That's what I heard. I don't know if that's true, but that's the idea. The idea is that if you have information that others that the broad market doesn't have, then there's an inefficiency there, and there's an ability for you to make money, right? So that's where like stock tips come in, and people talk about that. Or if there's a way that you can take that information and quantitatively crunch it so that you get an edge, an advantage, and really that's what technical trading is in many ways. Is when we look at patterns, when we look at MACDs, stochastics, moving averages, whatever, RSI. You're just taking the information, you're crunching it in a certain way and trying to come up with really good decisions based on, that information. So to me, the markets are not efficient. If they were efficient, I wouldn't be a trader. Trading wouldn't really exist as a career because like it'd be nearly impossible to do anything. You'd just always be getting fair value. And so the problem is people get in the way. The emotions get in the way. People get really fearful and they get really greedy. And so there's this gap, and there's gaps in information. Like, for example, you may have been in a situation where like you sold something, right? And you couldn't believe that someone paid you as much as they did for that thing. Maybe it was something you were going to throw away, right? So for you, your perceived value of that was really low, but the person who bought it, like an old rusty bike that you're going to just throw away or whatever, or give away or something, leave it outside and hope someone takes it. That's what they do here in Australia. They just put it outside. They just put it outside their house and hope someone takes it, right? Like people do that, right? Yeah. So, but if it's really valuable to the other person, they overpay for it. So as in a specific sense, if you're a trader, you love those people, right? These are the beginner traders who overpay or underpay. They overpay for the euro, and then you go in and take the other side. So these are the people that you're taking their money from their accounts and you're transferring it into your account because they don't understand, right? So you need those, and those people need to learn those lessons. Either they need to learn to get out of trading or need to learn how to trade properly, right? So that's how I look at it, and I'd be curious to hear your thoughts on that, because this is a really, a lot of people have strong opinions about whether or not the markets are efficient or whether they're giving us, the prices are the real true prices or not.
Yeah. So 2 thoughts came to my mind. Number one, don't trust anything anybody says. And if somebody says something, look for evidence of the opposite. So like what you're saying is that look for evidence that traders make money in an inefficient market. And that's obviously true, because Wall Street would not exist if traders could not make money. So obviously that hypothesis is not true. The second thing is when you look at markets on the surface, like you said, it should be logical, right? This is in your best interest, so let's do this. But people are emotional, and you have to factor that in. And if people, like you said, don't have certain information, or they're in a certain situation where they can't do a certain thing because of something underlying, for example, like houses, right? Like I used to buy and sell houses. So people always wonder, a buddy asked me, why would somebody sell the house to you for way less than what they bought it for? Well, maybe they need to move. Maybe they are having a tough divorce and they just need the money. Maybe they like you and they want to deal with you instead of somebody else, right? So there are all these factors that can come into play. And a lot of that is emotional baggage, emotional connections. So same thing with trading. Like people can get emotionally attached to a stock. People are dispassionate and they don't get emotionally attached. So that's why they do better. But, all these things can come into play. So I think that this idea that the market is totally efficient is, of course, ridiculous. And you should evaluate every single idea on those premises of, is there evidence to the opposite? And what are the other factors that are involved with this transaction?
Yeah, it's true. And I was just thinking about something when you're saying that. When I sold my car when I left my country to come to Australia, and I knew that the price I put it at was low enough that I would sell it in a day. Mm-hmm. You know what I mean? Yeah. Like I kind of used that. I knew that the market would pay more for the truck, but I sold the truck at that price because what I wanted to do was drive the truck as much as I could until the day I had to leave. So I literally wanted to sell the car the day I had to leave. And I did that. And so what happened was I put the ad in the paper or whatever, and all these people called me. Like I got all these calls because no one could believe that price, right? And so I had all these lined up. I said, okay, you can come at 12. All right, you come at 12:30. You come at 1. You know, I had all these calls lined up because I knew someone. And then, you know what happened was a guy called me and I said, you know, I've got all these things booked out, you know, to see the car. Like, you know, do you want to come at 5? You know what I mean? Like the other 10 slots are booked out. And he goes, what time are you going to be there? I go at 12 at the park. He goes, I'll be there at 11:30. And then he bought the car. You know what I mean? Like he was the first one to see it and he bought it. And I said, look, I'm going to give, you know, here's the pink slip or whatever, you know, in a week, I'm going to, you know, we'll make the transaction. Right. But you know what I mean? Like it was like that. It was so funny. And then all these people called me and they were really upset at me. They're like yelling at me on my messages, you know, saying, whoa, you're so rude. Yeah, I can't believe you did this to me and stuff like that. So, but that is a great example of, you know, understanding the market and like using that to your advantage. So by just like you were saying, like if your buddy's selling the house really cheaply and people are like, why would you do that? You're leaving money on the table. There's always reasons why, you know what I mean? Either you're stupid and you don't understand the market, or it could be like you just want to drop it really quickly. And we understand that intuitively when we're selling things like couches and stuff, right? Or cars and stuff. But when you think about trading the markets, it's the same thing. We just have to keep that in mind, I guess. You know what I mean? Like that's the same thing that's going on. And I love what you said about it, because if you're thinking about what other traders are doing on the opposite side of your trade, then you're in a really good spot as a trader, because there's two reasons. One is you understand that, you know, what you believe may not be right. Okay, you may be wrong, all right, for a number of reasons. And being early is the same as being wrong, right? And so, and the other thing is you're questioning so you understand what other people are saying and what they're thinking, and then you're questioning whether or not what you believe is correct. And so you're trying to coordinate your theory with evidence, right? And I feel like that's what trading always is. You're taking the theory, which is, oh, the price should go up, and then the evidence comes in, another candlestick prints, another candlestick prints. And each of these are pieces of evidence that now you have to decide, can I assimilate that into my theory, or is it blowing my theory out of the water? What's going on here, right?
Or am I going to fight it to the end?
Yeah, exactly. Exactly. Which is such a beginner mistake, isn't it? We've all been there. Yeah. I'm going to fight it to the end. Yeah. I'm going to move my stop because it's not going to hit it, you know, that sort of thing. Yeah. It's so true.
All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. I think starting with day trading just increases your chances of blowing your account out way faster.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, I thought we could talk about personality types and which personality types should avoid short-term trading or day trading or scalping or whatever you want to call it. What do you think?
Okay, first of all, everybody. no, I think we're all kind of, if you think about in a broad sense, we're all kind of built to not do well. Just trading the markets, full stop. I mean, you'd have to be a weird individual to be built, I think, to trade well, like out of the gate, right? And that's just because of our cognitive biases and the way that we operate in the world. But for your question, it's a very good question. I think it's impulse control. So if you look at, you can take a personality test. There's several of them out there, like the Big Five, or there's the Gardner's one where he has like different domains, like there's like interpersonal intelligence, athletic intelligence, like body. There's like mathematical and verbal, and there's all these different ways of looking at intelligence. But the one, if you can find a test that has impulsiveness, that's what I would go with. I know there's a lot of talk among the people. I think it's called the 16PF. It's either the no, it's not the 16PF. 16PF will have impulsiveness in it. So that's one you can take. And you can we can put a link in the show notes, but you can just search online for 16PF free personality test. And I think the Myers-Briggs is the one where it has like the 4 letters. Is that right? I believe that's the one. And there's some talk like INTJ is meant to be the best for traders. So there's a lot of talk about that, right? But your question is who should avoid it? And I would say, if you take like a 16PF or any personality test that has an impulsive scale on it, or even just an impulsiveness scale, that would be good too. You could find that as well. If you're high in impulsiveness, then you're really, you really need to fight against that, because day trading, our friend Adam actually talks about this, I think, at the London conference. Like, he was talking about how, my argument has always been start with the higher time frames and then maybe lower, go down as you get more experience as a trader. And it happens in slow motion, right? That's one of the advantages of trading. Like, right now I've got like 15 or 16 trades on the daily charts. Okay. And so it really does happen in slow motion. Like, one day you'll be down 50 pips, the next day you're up 100, and you know what I mean? And like, the targets are so far away, there's no telling what's going to happen. Like, literally last night I went to sleep when it was before the New York Open, right? And I'm testing some stuff on 2 different accounts, and one account was basically break even, slightly down, and the other one was way up, right? But the trades hadn't cashed out because they're daily targets, right? And then I come back this morning, and the one that was way up was up still, but about half what it was when I went to bed. And then the one that was break even is now down. You know what I mean? It's like, and this is the kind of thing you go through with daily charts, because it's always such a slow motion thing. Whereas when you're scalping, it happens really quick, and you get, like Adam says, the advantage of that is you get almost instant feedback, near instant feedback on your performance, right? On how well you did with that trade. The disadvantage of that is that you can go after like revenge trading, and you start thinking, oh, I've lost 2 trades now, I really got to go in hard on my 3rd trade, or and that's the impulsive mind, right? That's the kind of trader who would do poorly with near instant feedback on your trades. So that's what I would recommend. I would recommend finding out where you are on the impulsiveness scale, and if you're high on impulsiveness, I would either don't trade or really work on patience and, putting yourself through certain hoops like back testing and a checklist on your trades, and probably even trading the higher time frames. That's my opinion. What do you think? What are your thoughts?
Yeah, I mean, in talking to traders and working with traders over the years, I mean, I think that's the best advice. You just start on the higher time frames. And I think actually a very, very small percentage of traders are actually built or could mold themselves into a short-term trader. I think that's a very small percentage of people. And I think a lot of people will do much better on the, like you said, daily or the 4-hour or even longer time frames, it's like if you're like an investor or whatever. And I think that day trading really does get to that part of us that flips the switch on like revenge trading and over trading and trying to get back at the market. And I think very few people are able to get that under control. So yeah, I would agree. Just start on the higher time frames, and then those concepts will filter down if you want to do day trading. But I think starting with day trading just increases your chances of blowing your account out way faster.
Yeah. And it's an interesting point that you said about investing being, like you're saying, even a higher time frame, like if you think of investing. And that's actually a really interesting way to look at it. Like, if you look at investing is almost like really high time frame trading, right? In that sense, I think that's a really good way to look at it. I mean, in that sense, what you're saying is that I am not married to this position doing well immediately, right? So it's kind of like the same on the daily time frame, but maybe on the monthly or something or whatever, right? So if you're investing, and I actually that's a good way to look at it. Like I've been recently, with the way that the markets are right now, I feel like I'm missing an opportunity, if I don't start looking at depressed assets right now, like ones that I think are going to do well in 10 years or long, like a higher like a longer term goal. And so, yeah, so it's kind of what I'm doing, isn't it? Like I'm looking at, and that's what you'd be doing as a long-term investor, is you'd be looking at this idea of, okay, what's really cheap now? What's sort of almost like too cheap? And is that going to last like 10 years out from now? Like 10 years from now, am I going to look back and go, wow, I really should have bought this, and you never really know for sure, because this kind of gets into fundamentals and stuff like that. And people can, everyone has an opinion when it comes to this sort of stuff. But I do think that what you're saying is true. Like, if you think about, like, if you're a daily chart trader, just stretch that out to like monthly or something. And that's kind of what investing is. Like, so for example, if I'm a daily chart trader, I want to give my trade, like say I take a trade today, and I want to give my trade at least 2 days before I can like reassess. So 2 more daily candles before I kind of reassess what's going on with with this trade, this individual trade. And if you think about, like, as an investor, you might be looking at 2 months, right? You might be taking the trade this month, and then 2 months from now you can come back and reassess and go, okay, how am I doing here? That sort of thing. I think it's a really, and the other good thing about the longer term goals, which are inherent in investing, is there's less pressure. Think about trading the 1 minute chart. That's like max pressure, versus investing. It's such low pressure. I mean, that's why, like, these guys like Warren Buffett and Charlie Munger, they can do this for so long, because, I mean, really all they're trying to do is identify where the market's obviously wrong, right? Like, they're wrong about this asset, so we're going to buy it, and then the market will later figure it out, and then at that stage we'll have some profits, right? Like, that's really all they're doing in a broad sense, I would say. I mean, it's oversimplification, but that's really kind of what they're doing. I know they look at balance sheets and all that stuff, but it's really interesting that you say that, because I think that's a really good way for traders to look at investing, is sort of like higher time frame trading. Yeah.
And that brings up a good point too, that some people are kind of just built to see the value on a certain time frame, right? Like, so I know this one guy is really good at scalping, but so he's really good at seeing that, okay, this is a good opportunity within the next 2 seconds or whatever. He takes it and then he's out. Whereas a person who has a longer term view would be able to see the value 10 years down the line. Oh, this company is going to do well 10 years down the line. And like, I in the last downturn, I bought like Citibank, right, at $1, but I didn't have that long term time frame. So I sold it quickly, and I made, whatever, 300%. But had I kept it, I don't know what it's at right now, but it split several times along the way. And I didn't have that long-term view of it. And if I had that long-term view, I would have made way more money. So I think that it really is all about, number one, like, check what time frame makes sense to you and where you can see value. And number two, can you expand that scope and maybe go longer, go shorter? And, a lot of people won't be good at all of it, but maybe you have 1 or 2 timeframes that are good for you. So I think it really is about the perspective and like how you see time.
Yeah, definitely. I agree. I mean, like our friend Colin, his best trade ever was when he took a trade at the beginning of the summer and he forgot about it. And then he came back. I'll never forget that story when he told me that. He's like, yeah, I had a pretty good summer, he's a, but because he wasn't trading, right? So he's like, he wasn't really looking at the charts. And then he came back like in September. He's like, oh, I forgot about that trade, and it was like massive profit. It's so funny. And I heard about this guy, or I think I saw a video of this guy talking about how he bought Netflix at $5, right? And I think it's, I don't know what it is, $500 an hour or something like that, $400. And then he said, like a couple of weeks later, he sold it at $4 to book his tax loss. So he wanted a loss so he could write off his taxes, and he never bought back in. So now it's like at $500, and he's like, well, got my tax loss, don't have any profit, So it's funny, but like, it's just, the patience is so useful, isn't it? I mean,
yeah.
And I mean, that's what Buffett said, right? Warren Buffett said the markets are an instrument for removing money from the impatient and giving it to the patient or something like that.
Yeah.
So I'm paraphrasing, but yeah, it's so true though. It is so true. And on every time frame, like you can be patient as a 1 minute trader or 1 minute chart trader. You can be patient. You can have, like, you have a target, you get out, and then but you hold on to a percentage, like a half of that position, and you trail it, and you see, that one, 5 pip profit on the first half of the position, and then you have another 25 pip profit on the remaining part. That's by being patient and not taking profits in 3 minutes, but having to wait 35 minutes for it to unfold and for your trailing exit to kick you out at 25 pips. That's the kind of thing that we're talking about here. It doesn't really, it applies to all different types of trading, whether it's investing or 1 minute trading or whatever. Yeah, but it's so true. Yeah.
Yeah, totally. All right, cool. Thanks, Walter.
Okay. See ya.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
So if you want something different, reprogram your subconscious. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, let's talk about imposter syndrome. I know we talked about that a little bit on the last episode, but maybe we can go into that a little bit more in depth. Maybe you could tell us what that is and how that manifests in trading.
Right. So imposter syndrome is when you feel like you're a fraud, basically, right? So we talked a little bit about in the last episode where let's say you're a new trader and you start trading, right? And you have, in your first month, you make 30%. You make a bunch of money. Actually, I know a guy that did this. He went to one of our seminars and he was talking about this. If you feel like you didn't deserve that, if you feel like it wasn't you that did that, right? Then you can easily self-sabotage yourself, right? So you can do something to bring yourself back down to where you believe you should be. And I think this is something that comes along a lot with traders, like the traders we talked about in the last episode, who they could make a lot of money, and then when they hit a certain level, it's like a psychological barrier, and then they crumble. Mm-hmm. This is something that, to me, I feel like the root of this is really your core beliefs that you get when you're schooled at university or high school or even primary school, and your home life, the people around you that you trust and admire and ask questions of when you're growing up. You feel like you're not worthy, so you're an imposter. You've lost. You've got something that shouldn't be yours. And in fact, there's a really good interview. I think it's the last interview of the first Market Wizards book. So it's called The Market Wizards by Jack Schwager. And I believe it's the last interview. It's either that one or the New Market Wizards. I believe the New Market Wizards has a different psychologist. I think that the first one has a hypnotherapist. And he talks about this guy and how it was kind of an imposter, but he was the other way around. So he had this imposter syndrome where he was a trader, right? Mm-hmm. And he was losing money, and he wouldn't look at his statements or something like that. Like he would get his statements from his broker and he'd throw them away or something. So under hypnotherapy, this all came out, right? It wasn't, the trader had come to the hypnotherapist to try and figure out, how can I improve my trading? But what come out from the hypnotherapy session was that he was basically felt he was a fraud. Mm-hmm. Because he was telling all of his friends he was a trader, but he was actually just losing money hand over fist, Mm-hmm. And so he was talking about what he was doing with his statements and things like that. So yeah, the core of this is that you have to change who you are, right? Mm-hmm. So you need to and to change, and we can change our personality. This is something that people think that, oh, by the time you're 5, your personality is set. That's all BS. We know that from the recent research in psychology that you can change your personality, and you've probably done it. I've done it in my life, where you live in different places with different people, and you can kind of reinvent yourself and become a little bit more outgoing, or a little less outgoing, or a little bit more intellectual. You can change your, it's a progression. Our life is a developmental curve. It's not a straight line. You don't just stay an introvert or an outrovert or extrovert or whatever. You don't stay, simple-minded or whatever. You can improve lots of things. Mm-hmm. So for imposter syndrome, what you can do is change your beliefs about yourself. And that's really, in my estimation, best done with subconscious tools like hypnotherapy, like subliminals. There's a lot of things you can do when you're falling asleep, but ways to seed your subconscious. You can use hypnotherapy. You can use a really good hypnotherapist. NLP is something that people talk about, neuro-linguistic programming, which is kind of on the fringe of psychology. And most psychologists that are academics will frown, but not all of them, but many will. But they frown at ESP research. So, whatever, there's a lot of good research on that sort of stuff. So yeah, so I would say if you feel like this is something you're running up against, you would work on yourself, you would work on your core beliefs and change what you think about yourself. Because the way I look at it is your subconscious isn't out to get you. Your subconscious is just your program. So whatever you're programmed to do, look around your life. That's where you're at. Where you're at right now, where you're at today, that is your program. Okay. So if you want something different, reprogram your subconscious, and then you can get different results. The Silva method is another one that people look at. Mm-hmm. That's another thing you might look into, if that makes sense to you. But there are lots of different ways to do it. What are your thoughts on the imposter in trading?
Yeah, so I was just thinking about that, and an interesting reflection of that, kind of like, like the younger guy or the newer guy can't be successful, is like, I see that in soccer a lot, right? Football. Yeah. So like you have these like 16 and 17-year-old kids playing on the senior team, right? With these 30-year-old, 40-year-old guys. Yeah. And you don't really see that in any other sport. And, those kids could feel like, oh yeah, I'm an imposter. I don't belong on that senior team. I don't belong with those older guys. But no, these guys are just as good as the rest of them. So I think, that's a good way of looking at things and saying, okay, even if I'm not that experienced in trading, or if I feel like I don't belong here or belong making money or whatever, then you can kind of look at those kids and say, hey, this kid is doing really well at, the highest level of soccer. Why can't I be at that level of soccer also? And right. I think what you're saying is spot on, in that you have to change the way you're programming. And at least from my perspective, there's 2 ways to do that. One is you can consciously change things. And that's if your programming is more in the conscious mind. But if it's more subconscious, then I believe that you have to get rid of a lot of the traumas that have been programmed into you or have been given to you, or whatever, whatever happened. And there's a lot of different ways to do that. Like you said, the Silva method, I've seen people get some good results on that. And some of the other stuff I've tried. So yeah, just try a bunch of things and, see how it works.
And it's important to remember that it's kind of normal, for people to, to feel like no matter what they've done, no matter what they've accomplished, that it was, that they're a fraud, or that they're incompetent. I mean, that's kind of normal to feel that way, because there's always going to be someone who's better than you, right? Mm-hmm. Like that's just the case. Like when the models go to the runway, there's always going to be a model that's more attractive than they are. When the bodybuilders go to the bodybuilding contest or whatever, there's always going to be a bigger, more defined, stronger dude or whatever, you know what I mean? Or whatever. Like, and the same in trading. Like if you hang out with traders and you're starting to click and you're starting to make money, there's always going to be a trader who's trading bigger accounts or more, or making higher percentage or whatever. And traders can be kind of jerks that way. You see a lot of like talks, traders give talks and they talk about how great they are and stuff like that. And it's, it's funny. Like, I don't know. I just find it interesting. Like, how a lot of times traders will use their past to justify, maybe they feel imposter syndrome. You know what I mean? Like, maybe that's what's going on. Like, they feel like, I worked at, Bank of America, and I was trading these huge amounts, and I made this amount of money for my bank, and now he no longer works at Bank of America. He's no longer trading that huge amount. right? He's no longer doing that, but he still wants to feel important. So he'll tell those stories about what he used to do, and you know what I mean, and feel like, oh, I called the top on the pound and blah blah blah, you know, things like that. Like, it's just, to me, it's just screams imposter syndrome. You know, that's what they're. And there's a lot of that in trading. Even you know, it's funny, they say, actually, this is a really good thing. I know I've talked about in the past, but it might be important for people who haven't heard this before. They say that one of the things I learned from one of my first psychologist professors was that you can get free therapy by going to a park bench, sitting on the park bench and watching people walk by, and listen to yourself. Listen to what you say about the people that walk by, because that's the stuff that you're projecting out there. Do you know what I mean? So you see that guy and you go, oh, he thinks he's so smart and blah, blah, blah. Well, that's basically, you know, it's a reflection of what you're saying, what you think inside about yourself. So yeah, so that's another thing you can do too, is catch that. Because if you don't know why it's happening, it's hard, right? Maybe you go see a hypnotherapist, maybe Silva method, maybe, you know, park bench method, whatever. But there are a lot of ways to kind of get at that. Yeah.
All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
What would your trading look like if capital wasn't the constraint? That's the reality for most traders. It's not skill holding them back, it's size. Trade the Pool changes that. Step into the U.S. equity markets with up to $200,000 in buying power without committing your own capital. Full access to stocks and ETFs, long or short, executed with the precision and freedom serious traders expect. Your performance is measured by one standard: disciplined risk management and consistent execution. Meet that standard and you operate at scale. No subscriptions, no ongoing obligations, just a clear path forward. For those ready to trade beyond limitations, this is the next level. Trading in the financial markets involves a risk of loss. Podcast episodes and other content produced by Chat with Traders are for informational or educational purposes only and do not constitute trading or investment recommendations or advice.
In late 2018, I had moved into my office, a shared office space, and I started driving Uber. And yes, I did. There was a moment for a few months I did live in my car, and when my lease ended, and I decided, okay, I'm actually going to sell my car. I'm tired of driving Uber. I got enough money now to stabilize myself and pay the credit cards off at the minimum payments. And what I'm going to do is I'm going to rent a WeWork office for $250 a month or so, shared. And I was like, but where am I going to sleep? I was like, oh man, because you can't sleep it's a shared office. And I was like, whatever, I'll just sleep at the desk. This is how determined I was to change my life around. So coming into trading, I think forcing myself to take risk because I was in so much debt. We'll go into the brain operation I had later, but I had a near-death experience too that kind of was a traumatic. You know, in life, there's certain events that happen that just change you as a person. It took that, like staples in my head, 150 staples or something like it's crazy. And all that to like force a change out of me. Because I think I was 25. So maybe the younger you are, the easier it is to change. You get stuck in your ways as you get older. But that was like a pivotal moment. That changed me completely. I'll study all day. And then until I got so tired. And then I'll go again, Skid Row, shower, come back, trade, make several thousand. In the pre-market 2020, it's 1 a.m. And I timed it perfectly. It's like at midnight, the lady comes in to clean the Skid Row shower. Because you don't want to shower in the middle of the day when there's like 100 people have showered there already. It's very nasty. But it's like crazy. But yeah, while waiting in line, I did see a couple of murders. I saw a lot of helicopters, body bags. It was pretty. Skid Row is. I seen the worst of the worst. I did not feel any pity for myself at all. You know, it helped that all that preparation, those 4 years leading up to it, I put my time in of study. And when I did start to make some money, you know, $900 here, $1,000 there, $500 here, and it added up over a month or two, it's interesting because like later on when I'm making the big money, let's say I'm up over $500,000, $1 million, I'm having different feelings, which is just like you mentioned before about like comparing myself to the Uber. It feels kind of dirty. But at that time, I felt like I deserved this. It's about time.
markets, speculation, and risk. This is the Chat with Traders podcast.
Traders, welcome to another episode of Chat with Traders. Today's guest, professional trader, educator, author of Short Selling Master, and founder of Friendly Bear University. David first appeared on Chat with Traders back in episode 257 with Tessa and Ian, where listeners got an inside look at his approach to short selling and market psychology. But since then, his story and the markets themselves have evolved dramatically. Before becoming a trader, David was pursuing architecture when a life-threatening brain tumor, mounting medical debt, and student loans forced him to completely reevaluate the direction of his life. What followed was an all-consuming pursuit of trading mastery, one rooted in obsession, sacrifice, and what he describes as burning the boats. Inspired by Hernán Cortés and the Spanish conquistadors who famously burned their ships in 1519 as a symbol of total commitment and no retreat, David immersed himself fully into the markets. That journey included sleeping in his office, living out of his car, showering on Skid Row. Now, this is before 4 a.m. This is when he was trading his pre-market strategy, 4 a.m. on the West Coast. He isolated himself entirely from society, renounced material comforts, and even traveled internationally to investigate pump and dump schemes firsthand. So, traders, in this conversation, we're going to discuss why speculative bubbles repeat throughout history, the psychology behind short selling, the dangers of social media-driven market mania, surviving black swan events and violent squeezes, manipulation in modern small-cap markets, the rules and discipline required to survive as a trader, and why one single trade can threaten your entire staying power in the markets. So traders, please enjoy this conversation with David Capablanca. David, welcome back to Chat with Traders.
Thank you, Kevin. Wow, what an introduction. That gets me just fired up and excited to talk about it. Those are some exciting topics. I love history. You just mentioned history and the whole journey. It's just incredible. So I'm here. Thank you for having me. And let's do it, man.
Let's dive in. We got so much to talk about. I mean, we can take this in so many directions. Thank you again for the book that you sent, that The Short Selling Master. Incredible read, and a lot of your story in it that I found very fascinating. Now, one thing, David, that really stood out to me, it resonated with me, was your commitment. I mean, we read it in the introduction. You were living in your office. You were, I think at the time, you were driving for Uber as well, making some money.
The markets are not efficient. Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh, so I have this question. A trader asked me something. He said, if the markets are efficient, then how is it possible to make money trading? Okay, so that's the question. Now, my answer to that is the markets are not efficient. In fact, they rarely are efficient. Mm-hmm. And this idea is very common in academia. You will have these professors who do not trade, do not make money trading, and frankly, don't understand the markets, come up with all these equations about why the markets are efficient and why it's impossible to make any money, and that the price is just a random walk and this and that, all these theories, right? And I this is my belief. And I learned this from my mentor. Or one of my mentors, right? My belief is that the markets are rarely efficient. And you know why? Because we have people who have gobs and gobs of money. So what that means is those people probably went down one of two paths. Either they had information that wasn't widely available to everyone else. I'm talking about you, Nancy Pelosi's husband. Or, right, you guys know the story about how the senators have outperformed all the hedge fund managers and stuff like that. Yeah. And Nancy Pelosi's husband's made this amazing track record. Actually, there's an app now where you can copy the trades of the senator.
Oh yeah,
I thought that was brilliant. That was the coolest thing I've ever seen. Coolest app I've seen since the one that tells you when to go and do a pee in the middle of a movie. That was a cool app too. But anyway, the idea is that if the markets were efficient, then you would always pay the right price, right?
Mm-hmm.
The price that you paid at that point would be the right price. There'd be you wouldn't get any value, you wouldn't get any discount, like nothing. It's just the right price. Okay. If that were the case, it would be like nobody would be able to accumulate big piles of money, but some people are. So either they have information that other people don't have, or they're crunching the available information in a certain way, which is what indicators do on our charts, right? They crunch the available information, high, low, close, open, not open, close, high, low, all that stuff, right? In a certain way, and they analyze it in a dispassionate, non-emotional way, so that they can buy when they should and sell when they should, right? Mm-hmm. And away from emotions, away from fear and greed, right? So that's basically it. I mean, that's the way I see it, is that the markets are not efficient. If they were efficient, we wouldn't see billionaires. Like, that would be nearly impossible to come up with, right? Mm-hmm. Because, like, think about it, like, if you think about it in a broad sense, even like people who come up with really cool inventions like Velcro or whatever, if the markets were efficient, there would be a lot of people, many, many people coming up with the idea of Velcro at the same time. Mm-hmm. You know what I mean? Mm-hmm. I'm not sure, but I think I heard that Velcro came from the U.S. Defense Department, whether it was the Air Force or something like that. So, like, someone in there, like, created it. That's what I heard. I don't know if that's true, but that's the idea. The idea is that if you have information that the broad market doesn't have, then there's an inefficiency there, and there's an ability for you to make money, right? Mm-hmm. So that's where, like, stock tips come in, and people talk about that. Or if there's a way that you can take that information and quantitatively crunch it so that you get an edge, an advantage. And really, that's what technical trading is in many ways, is when we look at patterns, when we look at MACDs, stochastics, moving averages, whatever, RSI, you're just taking the information, you're crunching it in a certain way and trying to come up with really good decisions based on, that information. So to me, the markets are not efficient. If they were efficient, I wouldn't be a trader. Trading wouldn't really exist as a career, because, like, it'd be nearly impossible to do anything. You'd just always be getting fair value. Mm-hmm. And so the problem is people get in the way. The emotions get in the way. People get really fearful and they get really greedy. And so there's this gap, and there's gaps in information. Like, for example, you may have been in a situation where, like, you sold something, right? And you couldn't believe that someone paid you as much as they did for that thing. Maybe it was something you were going to throw away, mm-hmm. right? So for you, your perceived value of that was really low, but the person who bought it, like an old rusty bike that you're going to just throw away or whatever, or give away or something, leave it outside and hope someone takes it. That's what they do here in Australia. They just put it outside. They just put it outside their house and hope someone takes it, right? Like, people do that, right? Yeah. So, but if it's really valuable to the other person, they overpay for it. So as in a specific sense, if you're a trader, you love those people, right? These are the beginner traders who overpay or underpay. They overpay for the euro, and then you go in and take the other side. So these are the people that you're taking their money from their accounts and you're transferring it into your account, because they don't understand, right? Mm-hmm. So you need those. And those people need to learn those lessons. Either they need to learn to get out of trading, or need to learn how to trade properly, right? So that's how I look at it. And I'd be curious to hear your thoughts on that, because this is a really, a lot of people have strong opinions about whether or not the markets are efficient, or whether they're giving us, the prices are the real true prices or not.
Yeah. So 2 thoughts came to my mind. Number one, don't trust anything anybody says. And if somebody says something, look for evidence of the opposite. So, like, what you're saying is that look for evidence that traders make money in an inefficient market. And that's obviously true, because Wall Street would not exist if traders could not make money. So obviously that hypothesis is not true. The second thing is, when you look at markets on the surface, like you said, it should be logical, right? This is in your best interest, so let's do this. But people are emotional, and you have to factor that in. And if people, like you said, don't have certain information, or they're in a certain situation where they can't
do a certain thing because of something underlying. For example, like houses, right? Like I used to buy and sell houses. So people always wonder, oh, a buddy asked me, why would somebody sell the house to you for way less than what they bought it for? Well, maybe they need to move. Maybe they are having a tough divorce and they just need the money. Maybe they like you and they want to deal with you instead of somebody else, right? So there are all these factors that can come into play. And a lot of that is emotional baggage, emotional connections. So same thing with trading. Like people can get emotionally attached to a stock. People are dispassionate and they don't get emotionally attached. So that's why they do better. But, all these things can come into play. So I think that this idea that the market is totally efficient is, of course, ridiculous. And you should evaluate every single idea on those premises of, is there evidence to the opposite? And what are the other factors that are involved with this transaction?
Yeah, it's true. And I was just thinking about something when you're saying that. When I sold my car when I left my country to come to Australia, and I knew that the price I put it at was low enough that I would sell it in a day.
Mm-hmm.
You know what I mean?
Yeah.
Like I kind of used that. I knew that the market would pay more for the truck, but I sold the truck at that price because what I wanted to do was drive the truck as much as I could until the day I had to leave. So I literally wanted to sell the car the day I had to leave.
Mm-hmm.
And I did that. And so what happened was I put the ad in the paper or whatever, and all these people called me. Like I got all these calls because no one could believe that price, right? And so I had all these lined up. I said, okay, you can come at 12. All right, you come at 12:30. You come at 1. I had all these calls lined up because I knew someone. And then, what happened was a guy called me and I said, I've got all these things booked out, to see the car. Do you want to come at 5? You know what I mean? Like the other 10 slots are booked out. And he goes, what time are you going to be there? I go at 12 at the park. He goes, I'll be there at 11:30. And then he bought the car. You know what I mean? Like he was the first one to see it and he bought it. And I said, look, I'm going to give, here's the pink slip or whatever, in a week, I'm going to, we'll make the transaction. Right. But you know what I mean? Like, it was like that. It was so funny. And then all these people called me and they were really upset at me. They're like yelling at me on my messages, saying, whoa, you're so rude. I can't believe you did this to me and stuff like that. So, but that is a great example of, understanding the market and like using that to your advantage. So by just like you were saying, like if your buddy's selling the house really cheaply and people are like, why would you do that? You're leaving money on the table. There's always reasons why, you know what I mean?
Mm-hmm.
Either you're stupid and you don't understand the market, or it could be like you just want to drop it really quickly. And we understand that intuitively when we're selling things like couches and stuff, right? Or cars and stuff. But when you think about trading the markets, it's the same thing. We just have to keep that in mind, I guess. You know what I mean? Like that's the same thing that's going on. And I love what you said about it, because if you're thinking about what other traders are doing on the opposite side of your trade, then you're in a really good spot as a trader, because there's two reasons. One is you understand that what you believe may not be right. Okay, you may be wrong. All right, for a number of reasons. And being early is the same as being wrong, right? And the other thing is you're questioning so you understand what other people are seeing and what they're thinking. And then you're questioning whether or not what you believe is correct. And so you're trying to coordinate your theory with evidence, right? Mm-hmm. And I feel like that's what trading always is. You're taking the theory, which is, the price should go up. And then the evidence comes in, another candlestick prints, another candlestick prints. And each of these are pieces of evidence that now you have to decide, can I assimilate that into my theory, or is it blowing my theory out of the water? What's going on here, right?
Or am I going to fight it to the end?
Yeah, exactly. Exactly. Which is such a beginner mistake, isn't it? We've all been there.
Yeah.
I'm going to fight it to the end. Yeah, I'm going to move my stop because it's not going to hit it, that sort of thing. Yeah, it's so true.
All right, cool. Thanks, Walter.
Thank you.
All information in this podcast is for educational and informational purposes only and is not trading or investment advice. spend some time with the system and figure out how it works.
Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Walter, we have a question from YouTube. So this guy says, yeah, I've been watching the podcast for a while, and he hasn't gotten to watching all of it, but he's a beginner and he has a problem exiting trades. What he does is his stop losses are 10 to 20 pips, and he'll move to break even at 30 pips. And he says that he consistently can catch 50 pips, but a majority of the time he doesn't know when to take profits, and he's always hoping for more. And then basically it turns against him and he either loses or breaks even. So what are your thoughts on trying to fix that?
So I wrote about this in the Naked Forex book. Like, you kind of have to decide who you are, or you can be both, right? So I talk about this idea of being a runner, where you like the trailing exits, and you're going to have these really big wins occasionally, but a lot of times you're just going to have like middling okay trades, and you're going to give back profit, right? Mm-hmm. Or if you're a gunner, you use targets, and you look for specific targets that can be based on quantitative data that you have. Like the pair usually goes this far in 10 candles or whatever. You know what I mean? Like, you can do something like that, but at the end of the day, you're just happy with the target. Now, I like to do both. So what I will do is I will have a target. Some systems, the target is relatively easy to achieve, provided the trade is winner, provided the signal's okay in this instance. And then the other bit of the other half of the trade, usually I will use a trailing exit on, because I like to catch those big winners occasionally. And anyone who's a trend follower will tell you that will make your year, that time of the year where you get that really big trade or two trades of the year. So that's my belief, is that you can decide to be one or the other, or split it up. Usually the test that I ask traders to use to determine whether you're a runner or a gunner is to say, all right, hey, Hugh, imagine you're in a trade and your trade is up 100 pips, but then it goes against you and pulls back, and you end up losing 50 of that 100 pip profit, and you're out at 50 pip profit. Okay, so that's scenario one. Scenario two is you are in a trade, it goes in your favor. As soon as it hits 50 pips, you get out, and you're very excited. But then if you had waited just a little bit longer, it would have gone 100 pips. So that's scenario two. Which of those scenarios is more psychologically distressing? Is it scenario one? If that's the case, then you probably are a gunner. If it's scenario two, then if that's more psychologically distressing, then you're probably a runner, and you would be better off using a trailing exit. Or you can do like me and do both, and that way you can always pat yourself on the back when when it's a winner no matter what, right? So yeah, it really comes down to that. You just don't know. Like, you can use the ADX, and you can use the moving averages, and you can do that, the MACD, and you can do all these things to determine whether or not the trade's going to keep going. But at the end of the day, the trade doesn't care where your stop is, if it's at break even or if you're up 900 pips. The market doesn't care. It is probably going to go up and down. Even when it's going down, even when it's going up, it's going to go up and down. So whether you get clicked out on your trailing exit or your break even stop, the market don't care no more. So what do you say about that?
Yeah, no, I agree. And I think, like you said, the data is super important, right? I think if you have a lot of data, you can really see, okay, does this make more sense to do this for me, or does it make more sense to let it run? One example recently that I tested, apparently it only works in the Euro-US dollar, the system that I tested, but works really well. And what I looked at was, I asked like several questions. Okay, how far does this run from the entry? What's the biggest run that it has? And then how often does it hit these other points, like 1R, 2R, 3R, or whatever? And I found out that you could get like 7R on some of these trades. So that was a reasonable target that you could put in there. I started using a 7R profit target at every trade, but my exit was on a moving average. So if it crosses over the moving average and it closes on the other side of that moving average, and I'll close it out. And that seemed to be the best balance between capturing some profits and still having that, capturing that big run also. So I think it really is about the data. Like, look at the data. Don't look at the data from a perspective of a particular trading system, but ask some questions like, how far does it run? How far it does get into profit before it snaps back? Or how often does your entry actually work as written? So those are some things to look at, and not necessarily just taking a certain strategy and going with that.
Yeah, you're right. I mean, and traders will find when they look at trailing exits that there are different types of trailing exits, right? There are like tighter ones that are going to bump up your win rate, but they're going to reduce your average winner size. And then there are looser exits that are going to depress your win rate, but your average win size is going to go up because it's going to more easily capture those huge wins, right? Those 9R, 10R wins and things like that. So yeah, so it really depends on what you want to do. I mean, I will say most of the time when I've looked at it, I have found, not always, but most of the time, the trailing exit is the way to go in terms of if you want gross profits, right? It kind of makes sense, right? Like, you're letting the market give you as much profit as it wants to. That's not always the case, because what you'll find is that some systems, they kind of have like momentum signals, right? And it's just good for a little pop, and it's not, do you know what I mean? It's not necessarily likely to keep going. So it really depends on you, and how you interact with your strategy. So yeah, like what you were saying was really interesting. Like, if you look at the average distance that a trade goes, right? And then you go, well, the median is 75 pips, right? So I'm going to use that as my target, right? Because that's the median. And so, half of them are going to go further than that, half of them aren't. Remember, that doesn't mean you're going to have a 50% win rate or whatever, because it's just of the winning trades, right? So it's only the winning trades are even going to get on that side where the median is, right? So, all those things you have to take into account. Yeah, so, I mean, it's really interesting, I think, when you're building a strategy, because you're forced to answer the questions like, what's important to me? I mean, kind of these sorts of things that come up a lot in trading. We talk about it in the podcast where all these things keep coming up. Like, what's important to me? How do I deal with this? What does this mean, right? And so when you're building your strategy, a lot of those questions come up because you're confronted with, okay, if I do this, then this is probably going to happen. Am I happy with that? Or should I do this so that I avoid this sort of feeling or this sort of, going down this path? So it's really interesting. In a lot of ways, it's like you're thinking like, who should I marry? Should I marry this person? Yeah, she's really great and everything, but she's got a cocaine habit. What am I? You know what I mean? Like, so like, it's sort of like it's the same thing with trading systems. There's always going to be something you don't like about it. Even like the brilliant trading systems that have high win rates and high average winners and all that stuff, they usually have the problem of not trading that often, right? Like, there's always something about so.
Yeah. And along those lines, like, you're not going to find out about your girlfriend's cocaine habit unless you spend some time with her. So like, the same thing with the trading system, right? You got to go through the iterations, you got to do the testing, you got to look at the data, you got to get on the screen and do some demo or whatever, live trading. So yeah, spend some time with the system and figure out how it works.
Great point.
All right, cool. Thanks, Walter.
Yeah.
See ya. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Is your intuition actually adding anything? Hey, it's Walter here, and you're at the Think Profit podcast, where we're going to help you develop a rock-solid trading confidence and avoid the potentially endless cycle of system switching. Right, Hugh?
That's right. We're going to help you develop a wealth mindset, develop a trading strategy that fits your core personality, and help you overcome the obstacles that stop over 90% of traders.
All right, Hugh, sounds good. You ready to go?
Yeah, let's do this.
Hey, Hugh. Welcome back.
Thanks.
So I have a question here. This came up during our coaching clients call that we have with the coaching traders, and he's a really good trader, and he was talking about how he's back tested his strategy. He's now live trading. Okay, he's doing really good work with his psychology. He uses a hypnosis track that I gave him twice a day. He's good at journaling. He uses his subliminals. He's got an excellent track record trading, even with his live account, right? But he still questions himself, sees his rules. He sees the setup, right? He knows this is a valid setup, that he should take it, but he still thinks, should I be taking this setup? He still questions his abilities to interpret the charts as he should, even though he knows he's good at this, right? And this is kind of, the backdrop is that he's kind of transitioning over from back testing into live. I mean, he's been trading live for a little while now, but not that long. And he's just, he's at the point where he really wants to ramp up his account size and all that. So he's getting to this point where he's kind of questioning his abilities to interpret whether or not this is a tradable situation, right? What the markets are telling him. So what would you say about this?
Yeah, that's always a tough one, right? I think two thoughts on that. Like, number one, that might just be part of his personality and how he's wired. So he just might have to learn how to manage that. Two, which probably is more likely in my opinion, I was watching a Denise Scholl interview like a couple of days ago, and she was talking about how all these negative emotions that come up when we're trading link back to something else that happened in our life, right? Something that was programmed into us, something that our parents told us, something that society told us. And I think from her like traditional psychology standpoint, she says you have to kind of like just manage it, right? Manage it or stuff it down a little bit. And there's definitely some validity to that. And understanding where it came from, I think, in her opinion, is kind of like half the battle, and that kind of releases things. And it can, I believe. But I also believe that if there's something that you can't release through that method, I think it's some sort of trauma that's in your past that you have to like face and resolve. And that could be like before you were born, that could be when you're a kid, maybe you had a bad divorce or something like that. And a lot of these things have an impact on us that we don't realize the significance of. Like today, it might seem like a very insignificant thing, but back then it might have been a huge thing for you, and you might not have been able to process it at that time. And that could be causing what's, happening now. And she brought up a couple of examples of like, maybe not getting approval from your father or something like that. So, there's all kinds of things you can do for that, like hypnosis, whatever. There's a ton of modalities out there. But I think that's something to look at. If you're, obviously this guy is proven, this guy is successful, but he still doesn't have that confidence. So I think that would be something to look into. What do you think?
Yeah, I agree. I told him we'll put a link in this show notes for those people who are not familiar with Denise Scholl's book. You guys can check that out. Yeah, so he's taking the You Get What You Trade For course, which actually is very closely aligned with Denise Scholl's ideas. Mm-hmm. And so he said that's been useful, very useful to uncover those things, just like you were saying. So that's thing number one. And then the more sort of conscious thing I said was, to have your A grade trades. So you have like a printout or a screenshot of like the perfect trade and compare that to what you're looking at now, just to see, and to record your belief that the trade at the beginning of the trade, record when you take it, to record your belief that the trade will work out. How confident are you on a scale of 1 to 10, for example? And then after you have hundreds of trades, you can go back and look and see, is your intuition actually adding anything? Because you can use that, you could leverage that if it's true, right? Mm-hmm. It may be exactly what you're talking about, which is why he's going through the You Get What You Trade For course and, uncovering all that, because that's definitely probably number one, right? But it also could be that his intuition is actually saying, hey, watch out, this isn't a good one. And it could be right. Now, I tend to think that's unlikely, but it's a possibility. So that's why we, That's why I say record the data. So so work on your history and your psychology. Have a perfect example of a perfect trade so you can compare that to what you're looking at now, and then also record your intuition, feelings in your journal, so that again you can go back and you say, oh, okay, if I see it's an 8, 9, or 10, the trade is like twice as likely to work out and be profitable. And if it's below a 7, it's unlikely to be, it's, more likely to be, a loser. So do you know what I mean? Like you can do things like that. So yeah, I think it's like kind of that multi-pronged approach is what we were talking about. So yeah, I think, but definitely, it could, like, Denise is onto something. Yeah.
Okay, cool.
Definitely.
Yeah, try everything basically. See
Try everything. See what sticks. Yeah. use all methods. Yeah. I mean, the way I look at it is like some of it is subconscious and some of it is more conscious, right? Some of it is for your logical mind, like, oh, this is a perfect trade, and oh, I think this is a 9 out of 10. Like that's for your logical everyday. And then there's the real deep thing,
deeper
which
stuff.
is what you were talking about. Yeah, exactly.
Yeah. Okay, cool. Thanks, Walter. Yeah. All information in this podcast is for educational and informational purposes only and is not trading or investment advice.
Hello and good morning. It is the 27th day of the 6th month. The year, of course, is 2023. It is 13 minutes past 11 in the AM. How are you guys doing? I hope you guys are doing fantastic. You are okay and doing just fine. So, niko poa? Yeah, I am very okay. Just freezing cold. But I thought I would just drop something and then, we can talk about it. So today, okay, this is not even a story really. I just want to just drop some few insights. Nikiwa, I think I was 20 or 21. Yeah, I started going for therapy. I was a depressed child. And I know most people, when you wako at that age, actually most people below 25, those are some of the things we will struggle with. And in my quest to mental liberation, I have been trying to understand why my brain processed things the way it did back then. And I thought one of the ways to do that is by documenting my journey. So, as a child, I was a good child. Mwerevu, the people I studied with in primary and high school can tell you, I was the above average students, what you people normally call machopi. Primary school, I was always position 1, best student, KCPE, finishes school, things happen, get sponsored by Equity, go to high school, have everything at my disposal, study, pass with flying colors, finish, then boom, no money for campus, no hope, no nothing. And that was when my mind just lost it. Like my brain refused to process what was going on with me. You get, like as a child, I had been shielded from the realities and, the nitty-gritties of the world. Like my parents gave me everything I needed. Shule was good. Everything was just fine. Yeah, so Shule was just good and everything. And then one day you come from 100% at the top and you come hitting the ground and even sink deeper to the negatives. You feel me? So I realized one thing that was ailing me was over expectations. Yeah, and right now I am not trying to guilt trip myself or feel bad because of feeling what I felt back then. You get my point? Like, it is okay that if I was young, I was okay, I don't want to say naive, I was young and I did not even know what exactly adulting consisted of. Like, I remember being stressed, I remember being stressed when I thought that I might get to 25 and I will not have a car, I will not be married, I will not have a child, I will not have a stable job, I will not have a lot of money. And I was like, how is life going to be? Right now, I am a few months to 25. I do not have a job. I don't have a car. I do not have that a lot money. I do not even have a boyfriend. leave alone a husband, and I am doing just fine. And now it is now that I am looking back and I am actually asking myself, so what was I really stressing about? What was this that was really putting my brain in this spiral cycle of chaos and emotional wrangles and everything? And I can tell you for free, Saizi, when I am 24, I can tell you that most of those things that are stressing you in your 20s, your 20, 21, they are bullshit. Like, utafika hiyo age, utakuwa mkubwa, alafu realize it was just being young. That is all there was. I am actually just from talking to someone about this, and he's telling me he understands. I think nile ukiwa mdogo, life is just good, una expect that is just how things will be. And then you grow up and you adult and you realize things will not come to you on a silver platter. You get my point? Things change, odds shift, priorities change, people die, you lose things that were valuable to you. You will be attached to someone, you will meet, make memories, and then the next day you are not talking. You will love someone, an accident happens, they die. You will get a job, you will love it, it will pay your bills, it will sort you out of your financial chaos and everything, and then the next day you get laid off, or that company just shuts down. You will love your parents, they will be the best thing that ever happened to you in life. You will make plans how you will want to get rich and give them the best there is in life. And then you get your job, and on the day you are getting paid, your parents die, your mom dies, you lose your dad, or something just terrible happens, and that is how you just lose. And you know, when we were young, loss is not something that we really fathomed. Like, I remember the first time I encountered death was in 2004. I was in class 1. I was in class 1. And it is my grandpa, my paternal grandpa, that died. Right now, I cannot remember his face. I can't quite tell you how he looked because sijui, I don't know. And that time, I did not really process that. And then in 2009, I think in class 6, I lost my auntie. I remember this auntie was so good to me. She used to give us exercise books in primary. Like, we never bought books. So we lost her. She died. And that was the first time I realized what a monster death was. And I remember wondering, where will we get the books, the pens, the attention, the love, and everything? But she died, we mourned, and then things changed. Today, no one even talks about her. I cannot even remember her anniversary. Maybe my cousins, her kids, remember her. But for us, the rest, life happened, we moved on, things changed, and we focused on living. Since then, the other time I came face to face with death was in 2018. 2018 was such a tough year for us as a family because we lost 4 people in a span of, I think, 3 months. I lost my maternal grandmother, I lost my great-grandmother, and I lost a sister to them, something. They were just, all of them were my grandmothers, whether great or what. And that time, I took death more objectively. At least I did not have the mental and the emotional breakdowns. Although my paternal grandmother, the one I am named after, really took me out. Like, her death, it's something I saw coming. And it is something I have never even really talked about. The moment she just got sick one day, and then I took her to hospital, and after so many tests and MRIs and everything, she was diagnosed with colon cancer stage 4. I knew it was game over. Like, I knew this one will not even go finish this year. That was around April of 2018. So I knew she will die. And somehow I started preparing myself for her death. And since it was me that the doctor told, I had to talk to my dad and his siblings. You know, something happens when you have parents that are not that much educated. They might not understand the terminologies and the logistics around the medical world and everything. So the doctor came and told me, hey Susan, your show's ABCD is happening. Her duodenum has been, nitasema aje, imekulwa na cancer, imeisha. That is why akikula anatapika and she's vomiting the food with blood. You get? Because now the food cannot go beyond her stomach. Those people that did not do biology, duodenum is the part that joins the stomach to the small intestines. So the digestion process must pass through the duodenum, nini. So if it's cut and there is blood in the stomach, you cannot eat. So she explained to me with the other doctors and everything, and when I told my parents, I just saw my dad shed a tear and he was like, sour. So 2 months later, it wasn't even 2 months, a few weeks later, after everything now started crumbling down, Shosh died. In as much as I knew that she would die, I wasn't really prepared for that loss, you feel me? And that was when I learned that we will never be fully prepared for loss in life. Like, you will see this relationship is about to end and you will tell yourself, ikiisha nitakuwa tu sawa. But trust you me, the day that breakup message comes, you do not know what to do. You do not know how to process it in as much as you'd seen it coming. And for me, it has been a journey of learning, unlearning, relearning, and just understanding that the dynamics of life will keep changing. And one other thing is that the universe will not stop because you are not okay. In as much as that sounds maybe mean and condescending or whatever,